Hi and welcome everyone to today's presentation. We have close to 30 companies with us today at ABG's Investor Days, and the first company out today is Poolia. We have the CEO Jan Bengtsson with us, and welcome Jan.
Men tack så mycket, tack. Ja, då ska vi se här. Ja, men jag heter Jan Bengtsson alltså och jag är koncernchef på Poolia och jag har varit det sedan 2018. Tidigare så jobbade jag på Uniflex som också är ett rekryteringsföretag, och det gjordes ju en fusion som ni kanske vet mellan Poolia och Uniflex då, och då blev jag koncernchef. Jag har även tidigare långt tillbaka till tiden jobbat på Poolia innan. Och i botten så är jag civilekonom då och har haft lite olika arbeten innan jag kom in i rekryteringsbranschen. Ja, det ni ser här bakom är ju våran vision då på bilderna, Work Life of Tomorrow. Tänkte inte orda så mycket om den utan gå vidare och presentera lite mera kring oss, vad vi... Om man tar lite bakgrund. Som sagt, vi har noterat på Stockholmsbörsen ganska länge. Och det finns framförallt i Sverige, men även Norge, Finland och i Tyskland. Och det är ungefär 4 000 anställda. Kursen var väl igår någonstans runt 15 kronor och på 47 miljoner aktier så är det ett börsvärde på någonstans mellan 7 och 750 miljoner. Vi var uppe på närmare 1 miljard här för några månader sedan, men sen så har ju börsen gått ner och vi med den. Backar man och tittar lite och såg ut när vi låg som lägst då i samband med corona, så var kursen ner någonstans runt 6 kronor då, så att det har varit en bra resa senaste tiden. Vi delade ju också ut 1 krona per aktie här ganska nyligen. Ja, kikar man lite på vår affärsidé då, så är det här. Vi bidrar till våra kunders framgång genom engagerad och kvalificerad kompetens. Och jag tänkte lite senare berätta lite mer exakt vad det vi gör, men det här är i alla fall vår affärsidé som vi tycker passar ganska bra in på det. Och lite till att börja med då, om man gör en liten tillbakablick på 2021, så var det som jag sa, vi fick ny huvudägare, Björn Örås som tidigare ägde knappt hälften av företaget, sålde till Danir, och bakom Danir finns ju bland annat Dan Olofsson, men även Lars Kry och Martin Hansson då, som har förflutet från både IT-konsultbranschen och rekryteringsbranschen. Och det var ju lite sådär, om man tittar på fusionen som vi gjorde 2018 så sparade vi en hel del kostnader i det fusionsarbetet. Och vi bestämde oss under 2019 också då, när vi hade tagit sig igenom alla kostnadsbesparingar och alla synergier med det IT-plattformar och liknande, att satsa framåt. Sen kom ju då corona i vägen, så blev lite stopp i maskineriet då så att säga. Och mitt i alltihop då så fick vi nya huvudägare. Men det man kan säga att då, vi har jobbat tillsammans med då, framförallt med Lars och Martin då, sedan slutet av 2020. Så hela 2021 då har vi ju lyckats växa, och vi har också kunnat växla ut på de kostnadsbesparingar som vi gjorde under då den här, eller samband med fusionen. Men sen har vi också blickat framåt och bestämt lite vad vi ska göra, så vi ska kika på det på nästa bild. Men det man kan säga i alla fall att vi hade en jättefin tillväxt här på 30% förra året, och att vi nådde upp till en EBIT då på 4,3% blev det ju. Och med tanke på hur vår verksamhet ser ut och där vi har vissa delar som det är lite lägre marginal och några delar som är lite högre, så kanske är någonstans här runt man kan nå på 5% i snitt när man gör det bra. Ja, det som i alla fall bestämt då, som vi har förändrat då sen vi fick nya huvudägare, det är att vi då har startat ett konsultföretag som heter Curios, stavas Curios. Och det är dels IT-konsulter och sen är det inom life science och engineering. Och tanken med det här bolaget är att vi ska starta fler bolag under det varumärket, så att vi ska då utveckla och utöka vår konsultverksamhet. Och vi har ju liksom bra kunnande då från våra nya huvudägare som bedriver då IT-konsultverksamhet inom Nexer, och de har ju även då Sigma som är ett teknikkonsultföretag. Där kan vi hämta mycket inspiration och idéer. Och det har gått ganska bra som ni har sett på siffrorna. Vi kommer till det om en liten stund här också hur det är. Men det här varumärket då, de har en egen hemsida såklart, egna bolag. De sitter i stort sett i egna lokaler och vi skapar en egen företagskultur här. Och i den här delen av verksamheten, om man tittar med jämförbara bolag, så ska man kunna ha en EBIT på över 10%. Och det var ju länge sedan någon i Poolia-koncernen var på det, men vi är på god väg uppåt här med den här delen då. Och det vi har gjort här också är att det finns delägarskap för ledningen, så att det är 2-3 personer i varje av de här bolagen. Just nu är det 2 bolag och de äger 5% och vi äger 95%. Och tanken är att vi ska göra liknande när vi startar nya bolag. Så vi letar alltså efter entreprenörer som startar nya konsultföretag inom någon nisch inom IT, eller teknik eller liknande. Så att det ser vi fram emot väldigt mycket. Tittar man på det som är grunden i verksamheten från början så har vi Poolia. Det är ett varumärke som varit med nu ganska länge och vi håller på att modernisera själva varumärket. Så den här loggan kommer inte se likadan ut. Vi kommer här inom någon månads tid så lanserar vi ett nytt varumärke. Och det passar också bra eftersom vi då har specialiserat den verksamheten mot det var med från början. Det vill säga rekrytering och bemanning inom Finance Office. Och sen har vi också Executive Search, alltså Headhunting, och så har vi Interim Management, chef att hyra. Och då har vi då smalnat av den specialiseringen för Poolia, vilket gör att vi upplever att vi når ut bättre till den delen av marknaden också. Så Poolia, där har ju, man tittar hur det sett ut här innan fusionen så var det knappt någon lönsamhet i den svenska verksamheten för Poolia. Sen har vi lyckats lyfta det och vi tror att här kanske man kan nå närmare 10% då i alla fall. Även om det var ett tag sedan Poolia gjorde det. Men de här två delarna, Poolia och Curious, är då lite mera högmarginaldelar i våran bransch. Så att det ska vara fullt möjligt när man tittar då även på konkurrenterna. Sen har vi då Uniflex som är den delen där det är tuffast konkurrens och lägst marginal. Lyckas man göra 3% ebit, här gör man det riktigt bra. Det finns många konkurrenter som bara tjänar 1 eller 2%. Vi har lyckats ganska väl att ligga runt 3, så att det tror vi att vi kan göra framgent. Här är ju då också stora volymer. Man hyr ut personal till industriföretag, logistikföretag och även kundserviceföretag. Och de här uppdragen till skillnad då från de på Poolia och Curious, det kan ju vara 50 eller 100 personer på samma arbetsplats. På Poolia och Curious är det ju oftast bara 1 eller 2 eller kanske 3 möjligen då. Men här är det viktigt att man har stora volymer och hög effektivitet i det man gör. Och det är också väldigt vanligt att efter ett tag så tar kunderna över personalen. Och det är också så att rekryteringsdelen här är ganska liten. När man jobbar med bemanning så innebär det som en konsulttjänst att vi betalar lön, vi betalar arbetsgivaravgifter, vi betalar sjuklön och tillhandahåller arbetskläder i den mån det behövs. Sen betalar ju kunden då en timpenning och vi får ett premium på det. Men sen då i vår bransch så finns det också rekryteringstjänster som framförallt i Poolia är ganska stora men som är ganska då små inom Uniflex. Och det betyder att kunden kanske betalar 70 000 eller 100 000 när de vill anställa en person. Vi letar rätt på den och de skriver anställningsavtal, alltså kunden, så den blir sedan anställd där. Och den delen är som sagt störst på Poolia men nästan är ganska liten på Uniflex. Annars är det här en ganska bra marginalförstärkare. Att den är liten på Uniflex det beror på att branschen ser ut så. Vill man anställa någon inom industrilager eller liknande så är det ofta så att om man kommer till oss eller någon av våra konkurrenter så hyr man den i 6 eller 9 månader och sen anställer man den. Ja, och den delen har vi då, kallar vi för People och det är den stora delen av vår verksamhet. Sen har vi då startat ett techben och det började med att vi köpte ett studenteventföretag som heter Student Node. De ordnar arbetsmarknadsmässor, framförallt digitalt men även fysiska, på massor med studentföreningar runt om i Sverige. De ordnar också andra typer av träffar för studenter. Och de här träffarna gör att vi får en väldigt bra kandidatbank. Det finns egentligen inga extra intäkter i Student Node men de har ett otroligt stort nätverk med kandidater som vi drar nytta av och som vi kan nå då när vi har den typen av tjänster. Så når vi ut med en algoritm som gör att man får relevanta annonser som student om man är med i det här nätverket. Och de flesta har kommit in då genom att de har varit på en arbetsmarknadsdag på något universitet. Sen har vi då ytterligare gjort ett förvärv och det gjorde vi i början på det här året och då köpte vi Workspace Recruit som är en SaaS-plattform. Den är utvecklad av ett företag som heter ROI och då köpte vi både ROI och Workspace och det här är då en plattform som vi licensierar ut till kunder. Det är ju så att även de som använder oss för att rekrytera personal gör en del rekrytering själva. Men man har sällan något system för det. Man kanske tar in ansökningarna på mejl eller liknande. Och det är inte så GDPR-säkert och det är också lite svårt att administrera. Men hjälp det här systemet då, som det kostar 30 000 om året så har man då ett system som är GDPR-säkrat och lätt att hantera och man får in kandidaterna där. Man kan även köpa annonser av oss i det här systemet. Då. Och det är naturligtvis så att vi behöver ganska många kunder för att det ska bli några pengar av 30 000. Å andra sidan så har de flesta företag faktiskt inget system för det här. Och i första hand så riktar vi oss mot små och medelstora företag. Och det här är någonting som vi tror är väldigt bra för oss för att det knyter kunderna närmare till oss och det är också inte lika känsligt för konjunkturen. I och med att det är då en avgift som man tecknar på årsavtal. Ja, så det är de delarna som vi so far har i alla fall gjort då när det gäller vår nya strategi som vi har gjort och delat upp verksamheten på det här sättet som jag just beskrev då. Och ska vi kika lite på siffrorna här så kan man väl säga att det i alla fall till stor del har varit framgångsrikt. Vi hade en jättehög tillväxt inom Curious, det var 90%. Nu var det så att det här IT-konsultföretaget som vi startade, det är ju ganska nytt, det har inte funnits så länge, då blir det såklart höga procenttal. Men vi tror ändå att vi har en bra plattform, vi har ett starkt varumärke och duktiga människor och bra konsulter. Och vi vet också att det är stor efterfrågan inom life science, IT och engineering i Sverige i stort. Och att det också finns möjlighet att tjäna mer pengar här för att det är högre marginaler i den här branschen, då, i konsultbranschen. Än så länge då rörelsemarginalen på knappt 6%, men vi har ju också vissa uppstartskostnader och så kommer det säkert vara ett tag, inte minst med tanke på att vi ämnar starta flera företag inom konsultbranschen. Då. Men som sagt, över tid så tror vi att det här är ett framgångsrecept som gör att vi kommer öka både omsättning och vinst ganska ordentligt. Kikar man då på Poolia i Sverige så hade vi också en väldigt bra ökning där. Och som ni ser så har vi börjat tjäna betydligt mer pengar än vad vi gjorde för några år sedan. Vi ligger på en rörelsemarginal nu här på 7,5%. Som jag sa så ska man kunna komma upp till 10%. Det är en ganska tuff resa, men tittar man på till exempel SCR eller andra så ligger de ju faktiskt över det. Och det finns ju fler bolag i den här nischen som har någonstans runt 10% rörelsemarginal, så att det är det vi siktar på. Och en god tillväxt. Det var ju naturligtvis så att det var lite nedpressat tidigare år i och med att det var lite efterdyningar av corona 2021. Men samtidigt så känner vi att vi har bra fart i den här verksamheten. Och vi har många spännande saker på gång, inte minst då att vi ska då, lansera ett nytt varumärke som ju blir lite intressant att se för alla. Tittar man på Uniflex, lite mindre tillväxt. Å andra sidan är det här som det är lägst möjligheter att tjäna pengar. Rörelsemarginalen i det här fallet så har vi gjort det jättebra. Vi hade 3,8%. Som jag sa tidigare, här kan man nog göra 3 om man är duktig. Men det är en väldigt tuff konkurrens och det är också den här delen av vår verksamhet där det är lättast att starta konkurrerande verksamhet. Bygger också på stora volymer, vilket gör att inköpsavdelningarna ofta är inblandade och det pressar ju också priserna. Men här ska vi sagt kunna i alla fall växa mera, men kanske, och rörelsemarginalen kanske då över tid kommer hamna på 3% ungefär, då kan man tänka sig. Vi har även verksamhet i Finland och här har vi då, använder vi varumärket Poolia och vi använder varumärket Uniflex. Och det är god tillväxt. Lönsamheten kanske är lite svagare än vad den borde kunna vara med den här mixen av Poolia och Uniflex, men ändå tillfredsställande. Finland har ju också det land som har hängt kvar lite längre i corona med vissa restriktioner. De har ju också haft det lite tuffare här nu med den ryska invasionen av Ukraina, för de har ju drabbats lite hårdare i deras näringsliv i alla fall. Får vi se. Men som sagt, det känns ändå bra. Vi fortsätter att växa och tjäna bra med pengar. Tyvärr i Norge så där har vi både Poolia och Uniflex, men det är framförallt Uniflex som är den dominerande delen. Och vi är väldigt starka inom olja, gas och bygg. Och det är väderberoende, den typen av verksamhet som vi har. Så det innebär att ofta så har vi lite sämre lönsamhet i slutet av året och början av året när det är vinter. Sen har vi lyckats lite extra dåligt här i år, vilket är tråkigt. Så vi jobbar stenhårt för att vända den här trenden då. Det är självklart så att vi ska kunna tjäna pengar i alla kvartal i Norge. Vi har ju inte heller haft någon särskild tillväxt här, så det är också någonting som vi jobbar med. Så att det här är väl ett huvudverk då såklart för mig, men vi ska se till att vända det också. Tittar man på Tyskland, det är ju en verksamhet som vi har Poolia köpte den för ganska många år sedan och har en historik. Man backar ett antal år och det gick väldigt bra, men någonstans 2017-2018 så har det börjat gå sämre. Dels för att branschen har förändrats lite, men att det av olika anledningar internt inte riktigt har fungerat. Vi bytte ju vd för 1,5 år sedan mitt under corona och sen dess har vi jobbat hårt för att vända trenden. Som ni ser nu så har vi lite tillväxt och vi har lite vinst. Det som har hänt här är bland annat då att vi har fått ökade rekryteringsintäkter. Och som jag sa tidigare så är det ett bra sätt att öka marginalen. Så att kan vi hålla det på den nivån så kan vi säkert ha en bra vinst här också. Men det har varit en utmaning, inte minst under corona, att få den här verksamheten att fungera. Men som sagt, senaste kvartalet såg det ju bra ut här i alla fall då. Tittar man sammantaget då så lyckas vi med en tillväxt på drygt 20% och vi ligger där på 4,5-5% i ebit. Vilket är nog det som man rimligen kan anta att vi kan göra sett över tid då. Vi försöker naturligtvis öka det, men tanke på att Uniflex är en så stor del av verksamheten så kan det vara svårt kanske att komma så här jättemycket högre än det. Men som ni också såg tidigare, siffrorna för Poolia Uniflex så finns det lite kvar att ha av det eller komma upp till när man väl får de verksamheterna att fungera. Jag ska också säga det att vi har tänkt att byta namn på det noterade bolaget. Och anledningen till det är att det heter ju Poolia och vi har ju rörelsedrivande verksamheter i Finland, Sverige och Norge och Tyskland som också heter Poolia. Och det blir ibland lite förvirrande när man pratar om det. Så vi ska hitta ett namn då som vi kommer lansera här någon gång under sensommaren, hösten då. Och det kommer naturligtvis krävas en extra bolagsstämma för att ändra det, men det tror jag att vi får igenom utan problem. Tanken med nya namnet är inte bara att det är för att det ska vara lättare att förstå vilken del vi pratar om också, utan att det ska visa lite på den nya inriktning vi har där vi inte bara är rekrytering och bemanningsföretag utan även konsultföretag och HR-techföretag. Ja, Stefan, det var väl det jag tänkte förmedla här innan jag får höra dina spännande reflektioner och frågor.
Toppen, tack så jättemycket Jan för presentationen. Jag tänkte börja lite med Curious. Ni har nyligen brytit ut i räkenskaperna som du nämnde här. Och det är onekligen bra fart i affärerna och ganska nyligen som någon i kritisk massa där. Hur ser du på framtidsutsikterna? Är det här liksom gruppen har bäst tillväxtmöjligheter? Om vi börjar där.
Jo, men det är det definitivt. Vi har ju sett det att det finns ju, alltså man tittar på konsultbranschen i bred bemärkelse och tänker in konsultmäklare, bemanningsföretag, rekryteringsföretag, traditionella IT-konsulter, teknikkonsulter. Så där det har över tid varit bäst tillväxt och där det är bäst lönsamhet så är ju inom IT, teknik, konsultverksamhet. Och där tror vi att vi har en möjlighet att fylla. Vi har ju en struktur som ser likadan ut som den, men vi har också ett väldigt högt tempo, vi har en bra säljkultur, vi har duktiga människor och vi har en förmåga som att driva företag. Vi är duktiga på att driva företag. Och då tror vi att om vi kan applicera det här då inom konsultbranschen så har vi goda möjligheter till både tillväxt och vinst då.
Mm. Och om man kollar på konjunkturkänsligheten i den här verksamheten, skulle du säga att det är lägre konjunkturkänslighet än i övriga gruppen? Eller hur ser
alltså
det?
Det är ju lite olika delar. Generellt sett så är det väl så att fordonsindustrin svänger ju ganska mycket med konjunkturen. Medan kanske telekom inte lika mycket och life science har inte heller svängt. Så det beror på lite vad man är. Men generellt sett så upplever vi, och när det varit under pandemin och så, att de delar som vi hade igång redan innan under Polias varumärke, det som nu är Curious konsultverksamhet, så svänger det mindre där. Lite grann är det så att delen som är inom Uniflex är den som är mest konjunkturkänslig och Polia lite mittemellan, men inte så mycket på Curious. Och sen är det också så att om man tittar framförallt på IT-konsultdelen, så att hitta utvecklare och arkitekter och sånt är en väldigt stor efterfrågan i hela västvärlden. Så att det är klart att det kan ju säkert drabbas lite om det blir sämre tider, men det känns ändå som att man kommer kunna hitta uppdrag till den typen av konsulter som vi har. Mm. Sen är utmaningen att hitta konsulterna, för det är ju lite arbetstagarens marknad just där. Men har man ett bra koncept som är attraktivt för konsulterna så bedömer vi att vi kan hitta personal.
Toppen. Du är lite inne på min andra fråga om vi kollar på Uniflex som ligger lite i andra spektrumet med att man är väldigt beroende av konjunkturen och så. Hur ser du, liksom, vad händer där på kort sikt nu när vi ser liksom, inflationssiffror som drar iväg och en konsument som mår lite sådär, ekonomin känns lite bräcklig här. Hur har era kunder agerat inom Uniflex?
Ja, man kan säga, om man tittar först med det här med inflation, så är det så att i de här avtalen, de är ju ganska så att säga, prispressade, så är de ändå för oss inflationssäkrade. Så att om lönerna går upp en viss andel så får vi ersättning, får vi höja priserna i motsvarande mån. Så att det finns inte en så stor marginalpress där för oss. Däremot så kan det finnas en minskad efterfrågan. För lite som du är inne på, när råvarupriserna går upp, inflationen stiger, så blir det tuffare för alla företag. Och det kan naturligtvis vara så att efterfrågan på arbetskraft minskar i spåren av det. Det var inget vi hade sett under första kvartalet och man får se vad som händer framgent här. Det som är bra för oss är att vi är ju störst i Sverige och Sverige har en väldigt stabil och bra ekonomi, så att det finns väl ändå goda förhoppningar om att det kan bli en bra framtid. Men självklart så är det någonting som jag måste hålla koll på varje vecka och följa noga vad som händer, så att vi kan anpassa oss om det skulle bli förändringar i efterfrågan.
Mm. Men det är ingenting ni har sett nu i liksom...
Nej, jag kan inte riktigt kommentera andra kvartalet för vi inte göra några prognoser, men naturligtvis så följer man ju nyheterna och så, och man ser ju att det är någonting på gång i konjunkturen, men det är väldigt få företag som man ser faktiskt har gjort någonting eller drabbats sådär. Det är ju, vissa företag har ju komponentbrist som kanske inte beror just på ekonomin, utan det är störningar i världsekonomin sådär, och det kan ju drabba oss såklart och så då. Men som sagt, det gäller ju att följa det här noga och verkligen se vad det tar vägen då.
Mm. Om vi kollar lite på Poolia så har ni gjort en väldigt liksom trevlig marginalresa där. Du var inne och touchade på det att ni har kommit en bra bit på vägen. Skulle du vara nöjd med om ni etablerar det här eller liksom ser du att ni ska fortsätta växa marginalen framåt?
Nej, jag tror att liksom kommer någonstans mellan 8 och 10% på Poolia, då ska man vara nöjd. Så att lite till ska vi uppsätta på helåret. Det varierar lite över med kalendereffekter och så, men på helår 8-10%. Och när det gäller Curious då så ska man liksom ligga på lite drygt 10%, man kanske ska ligga på 11 eller 12 eller något sånt där över tiden då. Och sen Uniflex någonstans runt 3, då är jag ganska nöjd då. Så att vi är ju hyfsat nära på Poolia, men det finns ju lite kvar att jobba på där då. Och Curious är en bra bit kvar. Samtidigt så har vi ju kostnader i takt med att vi startar nya verksamheter och så då. Så att, men över tiden så känns det väldigt bra att svänga om verksamheten lite och gå mot mer konsulthållet och HR-tech.
Och den här investeringsperioden inom Curious, du nämnde att man kanske ska tänka sig att den pågår en stund. Liksom, pratar vi 1-2 år då? Eller vad
men det kan nog vara ett par år, för att vår ambition är att starta ett nytt bolag per år. Då, så att vi ska försöka få igång ytterligare ett bolag här nu under hösten. Då, och sen ett kanske under då 2023. Och sen så når man en krismassa när det inte märks lika mycket. Men det kommer ju ta ett tag. Så att marginalerna kommer att pendla där kanske mellan 5 och 10% under ett tag framöver innan vi får fart på det. Men sen när man väl tippar över den gränsen, då är man ju på rätt sida om 10%. Så det är ju jättespännande.
Du nämnde någonting intressant också inom Curious med det här delägarskapet för er personal. Hur har intresset sett ut för det kontra att man går och kanske startar upp en egen mindre konsultfirma själv?
Nej, men det har ju varit väldigt stort, så att när vi träffar folk så är det många som är intresserade. Sen så vill vi ju känna att vi hittar rätt person. Men det är jättestort, för att då får man möjlighet att komma in i en befintlig struktur där det finns allt det här runt omkring som man behöver. En ekonomiavdelning, en löneavdelning, det finns kontor, det finns en dator och en telefon och så kan man ägna sig åt affären. Så många tycker det är ett väldigt attraktivt alternativ. Det är dessutom så att vi har en väldigt stor kundstock. Så att, och vi har liksom ett sätt att hitta personal och en metod för eller hitta konsulter, så att många tycker det är jättespännande. Så att det känns jättebra.
Roligt. Om vi kollar på Poolia som helhet då, så har ni ju även tagit en hel del marknadsandelar här senaste åren. Liksom, vad tror du att det beror på ert arbete? Vad är det ni gör bättre än era konkurrenter?
Jag tror att vi har försökt kombinera en god lönsamhet med tillväxt. Och det gäller att skapa en tillväxtkultur internt som gör att folk vill växa och hitta belöningssystem och karriärvägar som gör att man lyckas. Om man lyckas så får man stanna kvar, tjäna pengar och få kanske en lite bättre jobb och finare titel och lite sådär. Och det har varit väldigt framgångsrikt. Men det är någonting som man måste jobba med varje dag, för det sitter ju verkligen i detaljerna att hitta rätt inställning hos människor. Och det är någonting som vi jobbar stenhårt med företagskulturen.
Och om man kollar på marknaden så är den fortfarande väldigt fragmenterad. Ser du att, nu har ni gjort några mindre förvärv här, ser du att förvärv kommer vara en liksom del i er resa framåt och vara en av de spelarna som konsoliderar marknaden lite mer? Ja, men jag tror det absolut. Vi har ju tittat på väldigt många företag här nu senaste året, men priserna har gått upp jättemycket, för de flesta hade glömt att det var dåliga tider under corona. Det kan ju vara så att om det blir lite sämre tider att priserna faktiskt går ner, och då kan det vara värt. Men det har varit alldeles för uppskruvade värderingar från säljarnas sida, så det har inte varit aktuellt att göra fler förvärv. Men vi tittar på jättemånga och det är inte omöjligt att det dyker upp någonting här som vi kan göra någonting av då. Sen är det så att det finns ju vissa företag som är väldigt aktiva på förvärvsmarknaden och förvärvar till sig marknadsandelar. Har vi sett flera stycken här nu då. Men vi tycker att vi vill framförallt växa organiskt bra i första hand, men sen komplettera med förvärv. Sen när man gör ett förvärv så måste man också integrera det på ett bra sätt. Det är väldigt lätt att tappa bort sig i företagskulturen där om man inte gör det på rätt sätt, eller om man kanske gör för många förvärv samtidigt. Så att det måste ske i ordnade former. Det låter väldigt sunt. Och så avslutningsvis då, ni har ju förvärvat Roy Recruiting och kanske framförallt deras SaaS-plattform Workspace Recruit. Vad har du för planer för den plattformen på medellång sikt och liksom vad ser du för synergier för gruppen? I och med att Curious, Poolia och Uniflex har så många kunder så finns det väldigt många vi kan bearbeta. Införsäljningscykeln är ju lite längre. Det kan ju vara mellan 3 och 9 månader innan man faktiskt bestämmer sig. Och det finns ju några konkurrenter också, även om vi tycker att vi har liksom det bästa verktyget då. Men vi tror att
under det här året så kan man kan säkert liksom, de har ju haft väldigt få betalande licenskunder och nu har vi svängt om det, så att om man kan nå upp till kanske 100 licenskunder betalande det här året, så är det ändå 3 miljoner och det är ganska bra marginal på det. Och sen att man därifrån tar ytterligare, så att antagligen några 100 licenskunder, och vi tror också att vi så småningom ska ta det till Finland och Norge, men i första hand rulla ut i Sverige. Och i och med att som sagt vi har väldigt många kunder, de har en egen säljavdelning som är ute och säljer, och vi har funnit varandra väldigt bra, så tror jag att det här är någonting som vi verkligen kommer att se någonting av de närmsta åren från vår sida.
Men säljarbetet, är det primärt mot era befintliga kunder inom som ni redan känner till, eller kommer ni även liksom fokusera externt?
Framförallt så vill vi prata med först alla befintliga kunder och se om de har behov av det. Men sen säljer vi även det till kunder som inte har. Men vi säljer ju hela portföljen, så att om man inte vill använda oss för rekrytering så kanske man vill köpa vårt system, eller så kanske man vill hyra in någon, eller så behöver man konsulthjälp, eller så behöver man lite headhunting. Någonting. Så att alla säljer ju så att säga hela portföljen. Och det blir också väldigt starkt, för det här ligger ju så nära det vi har gjort tidigare, så det blir ingen extra effort, utan man är ändå hos kunden och så presenterar man det här Workspace Recruit-verktyget då.
Och hur ska man ställa 100 kunder i förhållande till hur många kunder har liksom Poolia som helhet idag? Till exempel?
Alltså vi kanske har, att vi har 1000-1500 kunder och sånt där. Så att om man kan få en tiondel att använda det här, så är det ju det är både rimligt och bra. Sen över tiden så vill vi naturligtvis öka det då. Men det känns som att man har fått en väldigt bra start på det. Jag tror att det här året kommer också visa att det finns ett stort intresse hos kunderna, och sen får vi utveckla det vidare då.
Ja. Stort tack för att du kom hit idag, Jan, och presenterade hos oss.
Nej, men tack så mycket.
Hi and welcome everyone to today's presentation of Semcon. My name is Stefan Knutsson. I'm an equity analyst covering the company here at ABG. And with me today I have the CEO of Semcon, Marcus Granlund. Welcome, Marcus.
Thank you so much, Stefan. Yes, it's great to have the opportunity now to present Semcon to you. And we go to the next slide, please. As you all know, we are the partner in advanced product development and production optimization and digital product information aftermarket solutions. And right now we are in a really interesting time with all the mega trends ongoing. If you go to the next slide, please. So just a reminder what Semcon is. We're an international technology company with more than 2,000 dedicated employees. We have group revenue last year of 1.7 billion SEK, and we have more than 40 years of experience. We were founded in 1980 in Sweden. We're listed on the Nasdaq Stockholm since 1997, and we have two business areas, engineering and digital services and product information, that I will go a bit deeper into in a few minutes. If we go to the next slide, please. So our philosophy is that we put people first, and as far as we are concerned, technology has no purpose of its own. It's the value it adds to people on our planet that is most important. And by uniting physical and digital solutions, we create user experiences that matter. This is how we make a difference, and that's how we do and provide our services in product development, production optimization, and also with regard to product information, the digital aftermarket and aftermarket solutions that we provide. If we go to the next slide, please. So as I mentioned, the mega trends are really with us. We do see an increased interest in sustainability in society in total, and also among our customers, of course. And digitalization is a fantastic tool to reach these sustainability targets that everyone now are setting with very ambitious targets. And we're working with our customers to create the roadmap to a fossil-free society and help them with new solutions within product development and production optimization, especially, but also within digital aftermarket solutions to make sure that they can reach their targets, so we can benefit all from that journey. We go to the next slide, please. So we are present in 7 countries: Sweden, Norway, the UK, Brazil, and Germany. And as you can see, we are very strong in the Nordics, and that's where we have most of our sales today. And we, as I mentioned, we have 2 business areas, engineering and digital services, being more focused on the Nordics, and then we have product information that is more of an international business area. Going to the next slide, please. So we are active in many industries, and that's really what is a large value add in our services, being able to go through different services with a lot of industry verticals, being historically quite large within automotive, but that has now reduced over the past few years when we have accelerated into other industries where we've seen an increased interest for our services from for example, the other manufacturing industries, and also life science and the telecom industry. And also now with even more sustainability focus, we also see a larger interest from the energy sector. So the broad industry presence really provides stability in our services and in our company, and increases the value added by knowledge sharing. So we go to the next slide, please. If we look back just 5 years to see what we have achieved so far, we have improved our offering. We have changed the competence a bit in the company. We are now higher up in the value chain compared to where we were a few years ago. We also, as I just mentioned, have a broader industry mix, and we work with a large range of industries now, and many customers, having less dependency on one single industry or a few industries, but rather working broadly with many industries that need our competence. And we have long-term business, larger proportion of solution-based deliveries and functional sourcing that we work together with our customers. We have increased the profitability quite a bit over the past few years, where we have more than doubled the EBIT margin to 10.9% now, and a strong financial position has really made the foundation to achieve the acquisitions that I will come back to in a few minutes, where we have really changed the way of working at Semcon and accelerated our transformation towards digital solutions and sustainability focus. And we have, over the past 5 years, gone from net debt to net cash of more than 200 million in the company. And our financial objectives is, of course, to continue with profitable growth and maintaining a solid financial position going forward. So if we go to the next slide, please. So the financial objectives that were set by the board of directors last year is to have a total annual revenue growth of at least 10%, also an operating margin of EBITDA of at least 10%. And we are in line with these targets. We have dividend policy of paying dividend of approximately 50% of profit after tax over time, and also maintain a financial solid position where we have net debt over EBITDA ratio should not exceed approximately 1.5 times. Going to the next slide, please. So as I mentioned, I've been in these presentations talking about the importance of accelerating our transformation through acquisitions and also increasing our growth. And we've really done that. So in less than 12 months, we've completed 4 acquisitions of fantastic companies, starting with Squeed, which is accelerating our digital journey with digital solutions into new industries as well, such as retail and finance. We have also acquired Tedsys, which is a very strong footprint in the south of Sweden with their base in Malmö, with developers also towards the software side, and also adding more industries to our customer portfolio. At the end of last year, we finalized the acquisition of Walkgrove, which also really underlines our transformation towards the learning segment within digital solutions, where we, through the pandemic, saw an increased interest in learning, which is part of the product information offering that we have at Semcon, and where there is less classroom training now, and of course more digital training going on for the employees in companies around the world, and we can provide the best solutions for that. So with this, we've also increased our footprint in the UK with Walkgrove. And now during the start of the year, we also acquired GoodPoint, which is a leading company within sustainability, a consultancy company that really complements us when it comes to product development, production optimization, and sustainable solutions. So they are experts in sustainability solutions and help us really help our customers to create that roadmap that I talked about in the beginning to reach those sustainability target for a fossil-free world as soon as possible. If we go to the next slide, please. So looking into the figures of Semcon for the first quarter, as you've read, we have a very good start to the year with total sales growth of 18.2%, an organic growth of 4.4%, and an adjusted operating margin of 13.2%. And we're saying adjusted operating margin due to the fact that we are in a process now of separating out and spinning off the business area product information, where we're creating its own company and a possible listing, and I'll come back to that at the end of the year. And therefore, we're taking some costs for that as well. So the adjusted operating margin for the first quarter was 13.2%. So a really increased profitability and also a good sales growth for the first quarter. Going to the next slide, please. As I mentioned, the importance of a solid net cash position is really the foundation to make additional acquisitions, and we have been able to find really good companies that complements us in the offerings, and we continue to deliver on that. We do see that prices are going up, or have been going up, when it comes to the companies that we're looking at. So we are careful in looking at the companies and making sure that we make the right acquisitions to create maximum shareholder value. But as I mentioned, the net cash now is at the end of March 235 million. So we have a significant scope for further growth and a really good financial position in the company. I'll go into the next slide, please. So looking into the business areas, starting with product information. If we look at the market trends, the digital transformation is really accelerating. I think that everyone can see that. And that is, of course, in the products that are now put in the market. They are very digitalized, and we do see that there is a higher strategic focus on the after-sales solutions for our customers, not the least when we do see a bit of a downturn in the market. For some customers, they focus even more on the after-sales solutions, and that's where we are very, very strong within this business area, and one of the leading companies in this area, actually. We do also see an increased product complexity, and the more complex the products are, the better it is for us, because that means that we need to create even more product information for those products when it comes to owner's information, also repair and maintenance information, and so forth. Going to the next slide, please. So our offering meeting those trends and our why we exist in this market is really that we create this user and operator information, the diagnostics and service repair information, parts and accessories information, digital learning solutions, as I mentioned when it came to the acquisition Walkgrove that we made in the UK, where we're also the largest one in the Nordic market within this segment. And we also provide systems and tools to really support our customers here, and where we provide services also when it comes to strategic support and operational excellence to help our customers in this journey when it comes to product information. That is really running for a long time, these projects, and are outsourced projects to the most part to us from our customers. So we make complex products and systems easy to operate and maintain. Going to the next slide, please. So how do we operate? Well, we have the functional sourcing and solution-based deliveries that account for more than 75% of the sales, and that's the way we work in this segment, really. We also work with multi-site deliveries, and that means that we put the work where it really belongs within our organization. So we have an international presence, for example, with a skill center in Budapest, where we have a lot of technical writers for the product information. We also have a team, very skilled team, creating these digital systems and tools and the information architecture and production systems that we use, and also the distribution systems that are used for our customers. So that's how we get efficiency in this business area. Going to the next slide, please. So just to mention a project here, we have a new cooperation with high-speed trains manufacturer Talgo. So new agreement with this global train manufacturer, which really is about more efficient maintenance that ensures an increase in train availability, quality, and safety. And also, as you know, from a sustainability perspective, the railway industry is very, very interesting, and there are a lot of investments taking into this. We also released today a new project with Volvo Cars, where we have up to 30 of our colleagues going to work with Volvo Cars on a new release of an electric vehicle, and all the information provided in relation to that when it comes to maintenance and so forth. So going to the next slide, please. Looking into the financial development here in the first quarter, so total sales growth of 7.7%, and a operating margin still on high levels, of course, of 16.2%. So we do see a high demand for digital aftermarket solutions. Going to the next slide, please. If we look into the next business area, engineering and digital services, we have market trends here, where we see increasing investments in new technology. Speed to market is record high, and the digital transformation is accelerating. And there is a higher sense of urgency related to sustainability matters, as I mentioned before. Going to the next slide, please. So here we provide strategic design and innovation, advanced engineering, production, optimization, and digital services, and also advisory services and project and quality management related to these services. So this is really the powerhouse of product development and production optimization. Next slide, please. So here we have a really good news with Thule, working with product development together with this fantastic Swedish customer and where we have now initiated cooperation to create even more fantastic products together with Thule, and really looking forward to a long-term relationship together with them. And we're working with cross-functional teams here in these projects. Going to the next slide, please. So looking into the financial development of this business area, we have a really good sales growth here of 25.1% in the first quarter, organic growth 6.6%, which is quite good as well. And the operating margin up from 10% last year up to 13.4% for the first quarter this year. So we really see the strong demand and also the efficiency measures that we've taken in the business area now paying off. Going to the next slide, please. And last but not least, as I mentioned in the beginning, we are in the process now, as the board of directors have decided, to spin off the product information business area. We are in a separation project now to separating the two business areas to make two standalone companies, and that is on track. And the crucial parts such as separating IT and finance functions should be in place now at the end of the second quarter. And there is ongoing preparations for a possible public listing right now. And the aim is, of course, to have a public listing in Q4. And we also, of course, need to consider the circumstances around the world to make sure that we do this with the right timing. But the ambition is still to have a public listing in Q4 2022. Next slide, please. Okay, and that really summarizes what we do. We provide product development, production optimization, and after-market digital solutions with a people first and then technology perspective. Thank you for listening.
Thank you, Marcus, for the presentation. I would like to take a macro perspective first. We've seen the war in Ukraine and the catastrophic effect that it causes for everyone involved. But a secondary effect is that it has also created some tension on the European economy and the world economy with rising inflation rates, and that needs to be controlled via rising interest rates. How has this affected your business, or has it affected your business in any way this far?
As we have commented in the Q1 report, we do, of course, see the horrific scenes in Ukraine with the Russian invasion there. And we have been monitoring together with our customers, of course, to see if this would have any effect on us. So far, we haven't seen that. We have no operations in either Russia or Ukraine. There could be that we have indirect effects, of course, due to the sanctions and so forth, and delivery problems. But really, we are in the R&D organizations of our customers. And the products and production solutions and aftermarket solutions that we work with are a few years away to launching those products. So right now, what we do see is a high priority for R&D activities among our customers to be able to make this transformation with increased digitalization in both products and production. And we also, as I mentioned, the mega trend of sustainability is, of course, affecting our customers as well, as they have been setting really ambitious sustainability targets. And now we're working together with them to really map out the activities that are necessary to reach those ambitious targets. And the customers reach out to us due to the fact that we are present in many industries and have a lot of customers in many countries. And I guess that we are a good company to talk to when it comes to benchmarking relating to these activities. When it comes to inflation and high interest rates, of course, we do see an increase in an increased pressure when it comes to salaries and so forth. But we are also able to, in my opinion, see that we should be able to raise the prices as well. And we've seen some effects of that in the first quarter, that we are able to raise the prices of our services. And we will continue to have a large focus on that going forward as well to be able to set off the possible effects of higher salaries as well.
Interesting. You touched upon my second question here with the sense of urgency from the customers to do this sustainability part of their business. Which specific parts or industries have you seen have increased their urgency because of the war?
I think we do see an increased interest from the energy sector, of course, to ensure the fact that we can be independent of Russian relations when it comes to the energy sector. But we also do see an acceleration in basically all industries, not the least in the manufacturing industries that we're working together with. And we have been working with electrification for quite some time, which is also touching a lot of our customers. We are in electrification projects in many of our markets where we're present, helping our customers there. So I would say that there is an accelerated interest, not just because of the war, but also I think that the interest of sustainability has increased now when we see that we need to have a fossil-free planet as soon as possible. And I think that all the customers need to chip in, and it's becoming more and more important, a more and more important topic when they see that both their customers, their employees, their shareholders, all stakeholders are really looking at the fact that they are making this transformation according to plan to be able to be relevant both as a supplier to their customers and also a relevant employer to present and future employees.
Perfect. And have you seen any change in the recruitment market now after this event? Is it easier, harder, or status quo to find suitable employees?
I think I think everyone's experienced the lack of engineers in the markets. However, we are in many markets, and we have a lot of cooperations to make sure that we can deliver the results that our customers want. But it's of course something that I know that both we and our customers are really looking at closely to make sure that we have the right competence now, but also are able to get that in the future. I think that it's going to be a very interesting period now coming up where this lack of competence is something that is, of course, in some aspects very good for us, because our customers need to perform and carry out the projects that they have in R&D pipeline. And if they can't find the competence to recruit, of course, it's more likely that they come to us and they might outsource the whole project to us and carry out those projects through a cooperation together with Semcon, which we, of course, welcome.
Interesting. And then also I want to talk about this business that you announced this morning with Volvo Cars in product information. You mentioned that it will cover 30 people at most. Can you tell us a bit more? Will it be just a 2-year project, or how will it pan out?
Usually, when it comes to these projects, I mean, this is the project that we've won now. We have a long-standing relationship with Volvo Cars for many years, of course. So we are happy that they have selected us for this project, but and we do see that there are, of course, likely to be more projects coming up going forward. But focusing on this project, I think it's really good for us and a good quality sign for our services that we are an attractive and relevant partner for Volvo Cars when it comes to their new electric range and for this specific new electric vehicle that will be launched here in a couple of years. So it's something that we see that we have these up to 30 people working with this project, and you also see that it's a long-term project, which is often the case when it comes to the projects within this business area. As I mentioned, 75% is outsourced projects, and those are the kind of categories that we look at here. So we're very happy to be able to win this project and look forward to deliver excellent services and quality to Volvo Cars within this.
And lastly, do you think that this is enough to offset the contract you lost in UK in product information?
I think the project that we lost in the project that we lost in the UK did not have as large effect as we thought in the beginning. So we will offset some, but there are still some uncertainties regarding that. But I'm very hopeful that we will be able to finish this year in a good way for product information, both with this new deal here with Volvo Cars, but also, as I mentioned before, there is a high demand for our services within this segment where we are really a leading company.
Very well. I would like to thank you, Marcus, for coming here and presenting with us at ABG today.
Thank you so much.
Hello and welcome back to ABG Investor Days. My name is Adrian Gilani and I'm an equity research analyst here at ABG. So far we've had 2 companies presenting, and up next we have Elanders, which will be presented by CEO Magnus Nilsson. He will have a roughly 20-minute presentation, and hopefully we will have time for some Q&A after that as well. So I won't steal any more of your time. You can go ahead with the presentation.
Thank you, Adrian. Okay, welcome everyone. Presentation about Elanders. I'll start with a slide showing how Elanders looks today. And as you can see in the map, the biggest region for Elanders is Europe, where we have around 80 locations. Then we have Asia with 20 locations and Americas with 15 locations. And if you look at the split of our turnovers, then 60% of our sales are coming from Europe, 20% Asia, and the other 20% from Americas. And in total, we have around 7,500 employees and a net sales around 1.3 billion euros. Elanders has shown a very strong growth the last 11 years with a mix of lots of smaller but also some big strategic acquisitions, but also organic growth. And we have had an average organic growth of around 17%. And you can see some of the bigger acquisitions on this slide. And the turning point for Elanders was 2014 when we acquired Mentor Media, when we were entering what we call supply chain solutions. And then 2016 there was a big acquisition in Germany, LGI. And also in 2021, a very important acquisition in US, the company Bergen Logistics. And if we look what we are offering to our customers, we are saying that we can provide them with end-to-end solutions. So if you look to the left in the slide, you can see our major customer segments. That is fashion, lifestyle, healthcare, life science, electronics, automotive, industrial. And for these customers, we are doing rather similar services that you can see the services in the middle of the slide. So it could be that we do factory logistics, where we take care of the material flow before manufacturing, but it can also be logistics for finished products, like we do for example, for fashion lifestyle, when we take care of both deliveries via e-commerce and retailers. But the whole point with our concept is that we normally have lots of multi-customer sites where we're handling several customers to be more cost efficient, to be able to move resources in between. And we can handle everything from big volumes that we are shipping to factories, but it can also be one product that we are delivering direct to consumers. And we also have a concept called life cycle management, where we are offering other services like handling spare parts, return of products, and lots of other different services to be able to offer complete end-to-end solution. If we then look at the market opportunities that we have identified that are important for Elanders, one of our major growth opportunities is, of course, e-commerce, and especially when it comes to the area of fashion, lifestyle, but also electronics. And for us, it's e-commerce that we are focusing, helping the brand owners. We are not serving the e-tailers. So for us, it's to work directly with the customers, and there we can see big growth opportunities. And when it comes to life cycle management, where we do other services, there we have a very important area that we call Renew Tech, where we take care of second-hand IT equipment, we refresh it, refurbish it, and then we sell it again to the market with the whole idea to prolong the lifespan of the products. And here is a huge expected market growth in this segment, that it will reach around $25 billion in 2026, and today it's around $12-13 billion. And then when it comes to outsourcing in general, we can see that the trend continues, that the companies are outsourcing, especially when it comes to contract logistics, also a great opportunity for us. And when it comes to our print area, our focus is mainly on what we call online print, which is one of the few areas in print that can show a yearly growth of around 5-10%. And that can be all kinds of products where you can order printed material via internet. And if we look a bit more on the e-commerce part, you can see in this slide that the expected growth in both America and Europe is roughly 10% per year. And interesting for us, if we have a fashion customer that transform from retail for us to e-commerce, it can often be 3 to 10 times bigger turnover for us, because then it's Elanders who do the job that the customer do normally in the shop. You know, we get an order, we pick the product, we pack it, we ship it to one consumer, we take care of the returns. So for us, it's normally we can triple the sales when we go from retail services to e-commerce. And then how Elanders look now when it comes to customer segments. The whole idea for Elanders is to try to diversify our customer base as much as possible, but also geographically to be more resistant to changes in the global economy. And now, after acquiring Berg Logistics in the US last year, you can see in this slide now that fashion lifestyle is actually the biggest customer segment for us. It's around 30%, followed by electronics, 27%, and automotive is now down to around 18%. So we are, of course, taking care of our automotive clients, but we are not aiming for growth in that area. It's more to taking care of, because it's very cyclical and also sensitive when things happen in the world. And industrial is down to 12%. Healthcare is still pretty small, 4%, but we have managed to acquire some new clients there, and that is also one of the focus area for us. So for us now, with this customer mix, also with our geographically diversifying, so we say that around 65% of our customer is now non-cyclical. And then if we look at some highlights from our first quarter 2022, very challenging quarter, lots of high sick rates in January, February because of COVID. Of course, some negative impact from the war in Ukraine. But despite challenges in Europe, we could balance this with a very strong demand in North America and also stable demand in Asia. So we managed to actually increase our EBITA result with 32% in Q1, and we also could show an organic growth of around 2%, which we're very happy with considering the challenging environment we are in just now. And if we look at the business areas, it was especially Supply Chain Solutions that had a really good quarter with increased profit, and we also increased our EBITDA margin from 5.4% to 6.3%. Print and Packaging had a very challenging time with swings in demand, increasing material prices, but also lack of material, and had a tough quarter. But we think they will recover more in the second half of this year. If we look at our sales by customer segments, automotive, we could still see some growth compared to last year, but very huge swings in the demand from our customers, and which put pressure on our profit in that area. But we could see, the underlying demand is very strong for our customers. Electronics, very stable demand. There was some challenges when they couldn't transport through Russia anymore with the railroad, and they need to change volumes to sea freight instead, but they could balance it very well. So very stable numbers from electronics. Fashion lifestyle, we can see continued growth, especially with our acquisition in US Berg Logistics, that could actually show a double-digit growth in the first quarter. Growth in Europe was slowing down slightly compared to last year, but still the demand was very good. And healthcare and life science, we could see good growth, and we also acquired some new customers, and our new medtech site in Germany is now up and running. Industrial, pretty stable demand in first quarter, despite some impact from the war in Ukraine, but not so high impact like we could see in automotive. And other is pretty stable. If we then look going forward, we expect the second quarter to be very challenging as well. Of course, the war in Ukraine is a humanitarian disaster, and we try to help all employees we have that comes out of Ukraine. We help them with living and other support. We are also supporting with some trucks to transport necessities to the Ukrainian border. And we expect that the cost of material and energy and fuel will continue to be very high, on a high level. and we are now working hard to transfer this increased cost to our customers. But of course, if it continues, there's also a risk that it will have a negative effect on the general consumption, at least in Europe. A positive note is that COVID-19 is now almost away from all sites in Europe, and all production is running like normal. A bit challenging for us with China's zero tolerance policy. That also puts some pressure on our sites in China. We need to close down some sites in Shanghai in last month, but now we can open them up again. But it's hard to predict how this will affect. But despite all challenges, we continue with our growth plans, and we will actually open a new facility in Atlanta in the second half of this year to help us support our growth in fashion lifestyle. We are also looking into expanding our facility in Oberhausen in Germany, fashion lifestyle, that we actually opened last year, but we need to double the capacity. So from that perspective, it overall looks pretty stable going forward. Okay, that was for me.
Okay, thank you, Magnus, for that presentation. We'll go right ahead with our Q&A. I'd like to start off with your relatively new acquisition of Bergen Logistics. You mentioned that they had a very solid first quarter. Was this an abnormally strong quarter? Is there some seasonality to take into effect, or can we assume a similar growth rate for the coming quarters as well for Bergen?
I think they can see extremely high demand from their customers, and the whole business concept they have, that they can handle small to medium-sized customers, and they can onboard easily 3 to 5 new customers per month. So I think this is a result of their concept, how they can take small fashion customers on board very quickly. But of course, it also comes down to capacity in warehouses. So we expect them to have a very strong growth this year, and then maybe it slows down a bit, then we need to expand, and then the growth should continue. So it will be more about management capacity.
Okay, and you've talked a bit about how you're going to realize synergy effects from sort of European customers moving out to America with Bergen. Are there any examples that you're allowed to give right now of customers that have made this journey, and how this has gone concretely?
Yeah, I must say it's gone pretty quick, but it was more actually US customers coming for us. So Bergen was quicker, so we are now... in Q1, we implemented Bergen's warehouse management system in our site in UK, and we have already onboarded 1 US customer, and we have 2 more in the pipeline. So that is moving pretty quickly, and it looks like there's a high pressure from the US brands to come to Europe, and then normally they go to UK first, and then we also have a site in Netherlands where we take care of it. So it looks promising, but it takes some time, but it's quicker than expected, actually. So.
Okay, it's good to hear. Also, your print business has sort of struggled a bit recently with the higher paper prices due to several factors, of course, but one of them was the large strikes at Finnish paper mills, which ended about a month ago. Have you seen any effects since that strike ending of this pushing down paper prices or increasing demand among your customers once again?
No, not yet. There will be a delay, but we expect in Europe that the market will be more stabilized from the summer and going forward. And then we at least expect that we can get the paper we need. Yeah. And then that in the long run should also make the price increases to at least to stop. And then we are pushing these price increases to our customers. In US, it's a bit tougher for us. There we need to wait maybe for 2023 before there is paper enough. But I think it's because the US economy has a much higher speed than the European economy for the moment. So, and demands are really high there. So,
okay. And also within, you mentioned some uncertainties regarding lockdowns in China. With the current situation as we know it right now, do you expect this to have a significant effect on the coming quarter? And also looking ahead a bit more, what are sort of the major cities we should look for where that could have a major effect on you if they were to shut down?
And we are pretty spread out, but we have several sites around the Shanghai area that was closed down in April. So that was tough for us 1 month, but they are opening up now. But luckily for us, we have also sites more inland in Chongqing and Chengdu where the electronics are, and there was no effect. And for the moment, it's more on the Beijing area where we don't have any facilities. So it's hard to predict, but it depends if China really will continue to have this zero tolerance.
Yeah.
And in the long run, I think that could damage, also China from a manufacturing point of view, that our customers maybe want to find ways to move out of China. Who knows?
Okay. And do you have that capacity if they to sort of move existing customers away from Asia and set them up in Europe?
Yeah, that's the whole business model for us. Our warehouses is pretty easy to move, and I think they will move, some manufacturing from China to Southeast Asia. Maybe also India will come back a bit, and then we have more the more eastern part of Europe. So it's for us, it could be also an opportunity when they move around.
Okay. And the two cities that you mentioned, Chongqing and Chengdu, I believe it was, where you had the electronics business. How significant would that impact be if there were some sort of lockdowns in those cities?
I think we will feel it. It depends how long time. If it's 1 month or 2 months, we can absorb it because we're also diversified. So it's more if it should be a longer lockdown, I think, for a whole quarter or 3 or 4 months, then it will be a bit painful. But in the same time, we have a good balance today with 60% in Europe, 20% in Asia, 20% in North America. And now, for the moment, North America is the engine. Europe is coming back a bit now. They are finding new ways to get around the Ukrainian crisis. But of course, some of our European clients was now affected again because there's not coming any shipment of parts from China. So the environment is really complex for the moment. But I think we have the tools to handle it pretty well, I must say.
And how about, obviously, we've talked about China on the supply side, but obviously, since you have many sort of global brands as your customers, China is obviously an important end market as well. Have you been significantly impacted by a decline in demand among your customers?
No, we haven't seen so much. I think actually mainly the service we do in China is for products that will be exported out of China. So it will be more if consumption goes down in Europe, would affect us much more. So luckily we don't get any pain from low consumption in China. So
okay. And also, I'd like to ask a bit about your profitability target that you've set up, your 7% EBITDA margin target. That's a bit away from where you are right now. Can you sort of illustrate a rough bridge of what needs to change and what needs to happen for you to reach that target?
Yeah, but I think if we look at supply chain solutions in Q1, we actually made an EBITDA of around 6.3%. Despite lockdowns in January, February, some other challenges, and I think we had, in a normal market, they should have reached 7%.
Okay.
And normally in print and packaging, we are doing margins around 6-7%. So I think with the latest acquisition, Bergen, and also the other acquisitions we done last year, all of them are doing margins around 10%. So if it should be a normal economy, I think we should be very close to 7%.
Okay. So if we assume that these macroeconomic issues are over by 2023, would you say it's reasonable that you will have a 7% margin in 2023?
We have a big chance to reach 7% 2023.
Okay.
But I think latest years have teach you that things are really now going up and down. First the corona, and then the Ukrainian war, and now the inflation. But I think if you look at our numbers in Q1 and adjust for these strange circumstances, we should be around 7%.
Okay.
And that is not so bad, actually. Very good.
And obviously, for a while, you've had this strategy of trying to grow in sort of more non-cyclical customer segments. You've managed to do that quite a bit, both organically and by acquiring Bergen and a few other companies here and there. Are you sort of happy with where the exposure is right now with less than 20% automotive, or are you trying to decrease that even more?
I think we will decrease that even more. So we are still very acquisition driven, but of course we need to find the right target. And we will acquire companies in our other customer segments.
Yeah.
So and also we have some contracts in the automotive sector that we want to exit when they are running out in 2023 and 2024. So there will also be some And I think an important thing for us, there's lots of now saying that e-commerce is now going down, but we are working. We cannot see that trend. We work with the brand owners, and they're pushing very hard to develop their own e-commerce. So for us, I think we have lots of opportunities. I think it's more tough for the e-tailers than that sell different companies' products.
And if we look a bit at the more cyclical customers, the automotive industrial customers, they've had some significant headwinds from component shortages recently. Again, if we assume that these problems sort of subside in 2023, is it possible to quantify how much that demand backlog, how much growth that will actually give you for the year?
Our customer are talking about that they have backlogs from 1 to 2 years from certain car models, but you also know that people can cancel their order. But we work more with the premium car manufacturers. I think there will be a really strong backlog. But this semiconductor issue, you can hear different things every month. Some say it stabilizes now, and then suddenly there is a lack of them again. And so I think we will need to calculate with a bit of a bumpy road.
But if we try to sort of quantify historically, I would say the growth rate has been roughly 3 to 5% organically. Is it possible to assume almost double-digit organic growth in next year if these issues don't exist within automotive? And
you mean for the whole group then?
For the group or for automotive industrial, however you want to formulate
automotive, if they should have components enough, they should have a growth of around at least 5-6%. If you look at how they have been doing the last 2 years, going up and down. So of course, and that will help the group to grow as well. But they should have that,
Okay. In that case, I believe I've asked all of my questions that I wanted to get from you. Once again, I'll thank you for your presentation, and I will leave it up to you if you have any final remarks that you would like to say before we round off.
Thank you. Now, I just want to say that we can see that our plan is working to diversify our customer base, but also geographically, and that is the path we will continue as well to build as a strong platform as possible to be able to handle all these swings that happening nowadays in the global economy. So thank you for me.
Hi and welcome everyone to today's presentation of Atvexa. My name is Stefan Knutsson. I'm an equity analyst here at ABG, and with me today I have Johan Schillerman, who is the CEO of Atvexa.
Thank you, Stefan. Glad to be here today. 30 years ago, the politicians in Sweden passed an important reform, which was called the skolpengen in Swedish, or the school coin, which was a way for to enable parents to send their child to any school they wanted in the nation, and that without having to pay any out-of-pocket tuition for it. And this was a very important reform that also opened up the possibility for private and public companies to own and operate schools, and also cater for the need to find different concepts for school, not just the regular municipality concept that had existed until now. So a big market opened up for private and public companies then to launch concepts and own schools, and concepts such as international schools, Montessori schools, Reggio Emilia schools, and sports concept schools. And this was a tremendous success. And today we see that 1/4 or 1 in 4 schools and preschools in the nation is run and operated and owned by a private or a public company. And nearly 400,000 students and children go there every day. So Atvexa is one of those schools. And we launched our business in 2009 in Sweden, and 10 years later we moved into Norway and Germany. And our vision for the children is to be able to create the best possible conditions for them to grow each and every day in our preschools and schools. And we believe strongly that in order to do so, we want to create a high-quality environment for them. And we also want to enable the people around them, the students, the pedagogues, the teachers, the headmasters, and the principals, to be able to make decisions themselves. So a very decentralized leadership. We at Atvexa are active owners, so we work constantly to develop our preschools and schools. And we also believe in acquiring new businesses to join, new schools to join our group, because that's what we believe is one of the most important ways to continue to build our network. But we also have organic growth, of course, and believe in that. Our values are very, very important to us. We believe diversity is a strength. We welcome all children and all types of owners and schools into our family. We are very curious about ourselves and the future, and we want to emphasize curiosity among our children and staff as well. So that is one important value for us. And given the fact that we're working with public funding, we want to be very transparent and open with the money that we handle on behalf of the taxpayers. So transparency is key to us as well. And our fourth value is long term, and the reason for that is that many of the children, they go to our schools for a long time. They might start at the age of 1 or 2 years and continue with us until they leave for the upper secondary school 10, 12, 13 years later. So long term is key to us. Now, Atvexa is an international group. We have our operations in 3 countries. Sweden is our biggest market. Norway is our second biggest, and then Germany. All in all, we are nearly 200 preschools and schools now, with a little bit over 4,000 engaged employees and 16,000 students and children that come to our schools and preschools every day. If we look at the 3 countries we are in, we see that we have decided to cluster ourselves in various parts of each country. In Sweden, we are clustered around the big cities, so Stockholm and the surrounding suburbs, but also the Mälardalen Valley, and then coming down on the Swedish west coast and the south coast. In Norway, we are mainly focused around the Oslo region, but also in the south part of the country, along the west coast, and some scattered schools and preschools in the north of Norway. Germany is a bit different. Germany is, as you might know, divided into 16 different states or regions. And when we did our research, we realized that 3 of these states were favorable to create beneficial conditions for us to be successful. So we selected those 3 states as our focus areas, and that is Hamburg in the north, and then in the south, Bavaria and Baden-Württemberg. The last 6 years, we've had a fine growth, a CAGR of about 20%. And if you roll back since we started, the growth is even higher, around 30%. We've said now that going forward, we believe 15% is a reasonable level to grow in. So that's our aim for now. But looking back 6 years, the growth has been about 20%. The main tool for us to grow is, as I mentioned, acquisitions, but also new projects in new suburbs where schools are needed, where we build new schools together with real estate developers. And if we look at the number of acquisitions that we do, the last 6 years, we've done on average 8 acquisitions per year. And the last 3 years, it's been 10, so slightly increasing. We are very prudent when it comes to acquisitions. We believe that the company and the situation must be very fitting for us when we buy something. And we don't believe in too high profit margins. We've said that somewhere between 5 and 8% is a reasonable profit level for a school. If an acquisition target has a higher margin than that, we believe that has negative impact on the quality, which is so important for us. So in that case, we back away. So we're not willing to pay for extremely high margin schools. 5 to 8% is a good level for us. We're also very careful to pay too much. So we look at, of course, our own valuation and our own EBIT multiples, and make sure that there is an arbitrage when we buy. So right now we're looking at 4.5 times EBIT multiple when we buy schools and preschools. We are not interested in buying real estate and facilities. So if there is an acquisition that comes with a facility, we want to partner up with a real estate partner who can then acquire the real estate, and we set a favorable rental agreement with them, and then we buy the school. So it's always a 3-party deal with the seller, us, and the real estate partner. And acquisitions are our sort of favorable tool when it comes to Sweden and Norway. Germany is a bit different case, as I will come back to, because there's such a big need for new preschools in Germany. So their organic growth is more important to us. We are targeting a 5% EBIT margin, and in order to do so, we have to be very careful and conscious about our cost levels. So we are very controlling, if you will, of our cost levels. So we constantly monitor and follow up and benchmark among our different schools and preschools to make sure we are at a smart and good level for us. A normal school or preschool for us, if you look at the cost side, is about 70% employee and salaries costs. About 15% is rental costs, and then the rest is indirect costs such as IT, telephony, travel, coaching, training, advisory, and so on. And for that last part of the cost side, we are being smart. So we're using the buying power of the group as a whole to create favorable agreements for us when it comes to IT, telephony, and insurance and all those indirect costs. One important part for us is as well, of course, how satisfied and engaged our staff is, and how satisfied our parents are with our schools and preschools. Here, if we look at the preschools and start with the blue square, our focus is to make sure that our staff is engaged and happy with their workplace. And if we can achieve that, we know that they will do a very good and fine job in creating the best possible conditions for our children and students. So that will also make, of course, the parents to these children happy. And if we can make the parents happy, then of course they will recommend us to their friends and so on. So this is a self-reinforcing wheel, starting with the employees and then going via the parents and their recommendations. So this is very important for us, and we follow this regularly. We do annual surveys among all our entities every year to make sure that we are at a high level in all these 3 areas. If we move to the school side of us, it's the same approach there. We focus on our employees, make sure that they are happy, and we see that they are even happier here than in the preschool, on the preschool side. And if they are able to create a calm and a nice learning environment for our children, well, then they will have high merit points and high grades, and they will be able then to choose whichever upper secondary school they would like. So they would have then all liberty and freedom to choose whatever they would want. So it's very important for us to keep this self-reinforcing wheel going as well. And as you can see, we have very good numbers in both the preschool and the school side, so we're happy about that. Another evidence of the fact that quality and operations, a high quality of operations, is important to us is the result from the annual survey that the Swedish Schools Inspectorate, or Skolinspektionen, makes every year. This is the result from 2021 year survey, where they ask 50,000 children and students in grade 5 and 9 a number of questions in 10 and 14 different areas, 14 for the older children and 10 areas for the younger children. Where one important area is the learning environment. So are the children happy with the learning environment that they have in the schools? And as you can see, we perform extremely well in grade 5. We are much higher than the nation as a whole, and we're also higher compared to our colleagues in the private segment. So we're really happy to see this. And this is a result of strong and long work to be able to create this calm and silent environment in the schools and preschools for our students. If we then jump to the similar survey, but for the 9th graders, it's almost the same story. We are still stronger than the nation as a whole, and among top 3 then, or top 2 when we compare to our peers. The levels overall are a bit lower. As you can imagine, the teenagers are a bit rowdier group, so maybe a little bit higher level in the classrooms, but still it's good results, and we're happy to see that this is a good result for us. I've mentioned that acquisitions is our most important tool to grow, and then a reasonable question, I think, is: are there enough acquisition opportunities out there, and are they willing to talk to us? And the answer to both is yes, and I will start with the second question. So we are in a favorable position, I think. We get a lot of incoming requests from entrepreneurs and owners who have started up their business, and for one or the other reason wants to leave, either because of wear and tear, they've been building up their school or preschool for a long time, or they are just eager to become part of a bigger group. And that's exactly what they tell us after they've joined. Is the great thing about Advexa is that, of course, I became part of a bigger group and was able to discuss and learn from peers, but also the fact that I now had no financial risk in what I was doing because Advexa now took that risk. And I was also able to continue doing exactly what I've been doing with my school, because Advexa didn't have any strong opinions on what the logo would look like or change of the concept or how we ran our business. So we got to do exactly what we had done, but with all these other benefits. Also, what is mentioned when we talk to schools who have joined us is the fact that their organization and their staff, and I then talk about the teachers and the principals and the headmasters and pedagogues, were able to join our networks and our networking meetings, where we put together subject matter groups in each theme, Swedish, English, math, for example, and they were able to share ideas on the latest developments of learning techniques and research, for example. So also for the organizations that came into us, this was a really good benefit and a strong benefit. We also have focused a lot on leadership development. It's something that is maybe not in focus when you're running your own school as a sole entity. You don't have time for that, basically. But with us, we offer board memberships in other schools, so you are able to share your experience and and your ideas and see if they can fly in another environment, which normally is very fun for them. And we also have our leadership academy for sort of the highest level of leadership in our schools. So around 50 people are then invited several times a year to different theme meetings. And it's really glad now that we can actually meet in person after the pandemic is gone, so we don't have to meet digital anymore. And then we also have our inspiration days for all people and employees in leadership positions in Atvexa. So around 150 to 200 people are meeting regularly to discuss relevant topics in all 3 countries. So that's also something that we focus on and offer as a benefit when you join our company. And what is also, I think, maybe the greatest part of all with Atvexa is that our journey has just begun. We've had an impressive growth so far. I mentioned CAGR of 20% the last 6 years, but the thing is that there's so much more to do. If we look at our market shares in each respective country, we know that in Germany we're hardly on the map. The need in Germany for preschool places is about 500,000 until 2030, so there's so much to do there. And we sent out the press release about 2 weeks ago that we're now launching 3 new schools and projects in Germany, in Hamburg and in Bavaria. And that is just the beginning. There's so much going on now in Germany after the pandemic, and the restrictions are gone or almost gone. So we're really focusing there as a growth area. In Norway, there's about 2,500 private barnehager or preschools. So there's a lot to do there as well. There's always a number of them that are in the process of finding a new haven or a harbor for themselves. So we have a lot of traction in Norway on the acquisition side. And in Sweden there are over 3,000 units, preschools and schools that are private, that are also at some point hopefully willing to sell to us. So there's a lot to do in all our 3 geographies. And that is why we are very confident when we talk about our 5-year targets. We are targeting a 4 billion SEK revenue in 5 years, which is about then 15% growth per year, which is a level we're comfortable at. We've been performing higher in the past, but going forward we see that 15% is a relevant level for us. We are very confident that the 5% profit margin level on EBIT adjusted for IFRS 16 is also good. We don't want to be more profitable than that, because then that affects quality, and it's important to us to have a high quality in operations, so 5% is good. We've set a financial gearing target of 2.5 net debt versus EBITDA, which is not a problem for us to keep. We're much lower than that now. We're below 0.5, so maybe a little bit too low. And we want to continue our growth journey on the earnings per share side as well, and keep an increasing EPS during this period as well. So all in all, I'm very much looking forward to the future. There's a lot to do, and we feel confident that these levels are where we will reach them. So thank you very much.
Thank you, Johan. I would like to start off because you're a new CEO, you are new in this sector. So I would like to hear, what are your first impressions from Atvexa, and what are your previous experience that you think that you can benefit from in this role?
Yes, thank you, Stefan. Good question. I think that Atvexa is a very well-run company with a focus on the children and a focus on the quality. And especially in the business we're in, I think those are the 2 most important areas to focus on. Maybe with the addition of the employees, as I've mentioned in my presentation, that keeping our employees engaged will create all the other benefits that I mentioned. So a very well-run company, careful about handling taxpayers' money, making sure that we're doing well-thought-through acquisitions and selective organic growth projects as well, with a fantastic team and fantastic teachers and headmasters around these 3 countries. And regarding your second question, what I can contribute, I think that should probably be a question asked to my board, and I guess the jury is still out. But if you ask me, which you did, I think that my background from being in Stenbecksfärden in Kinnevik has taught me to see opportunities everywhere and act on them. So I think that's one part. My career so far has been very international. So I've been living in the US for many years. I've worked in a large share of the European countries, and I've been in one of my most recent jobs building campuses in 4 countries in Europe. One of them is Germany, and in Munich, in Bavaria. So I think that's a relevant experience as well.
Perfect. And that leads into my second question, because of the market opportunity that you have in Germany. We know that there is a huge supply gap because of a change in regulation a couple of years back. But what will Atvexa need to do in order to capitalize on this opportunity?
We have to continue to be careful. We see that on the acquisition side, which is not our most favorable way of growing in Germany, but we still are open to it. We see on the acquisition side that the multiples are a bit too high. So we are very careful about that and making sure that if we do an acquisition, it's really where we want it to be in terms of multiples and profits. So that's one thing. And the other thing is to be continuously working on our partnerships with real estate companies in all our 3 regions in Germany, because that will be a key for us to grow. If we have a strong relationship with them, they will come to us when they develop a new area or city region and ask us to become the school operator in that new project. So that will be 2 key things to consider going forward for us.
What are the average acquisition multiples that you see in Germany that you think is too high?
The average, we see multiples of 10 to 15 times EBIT, and we've seen even higher going back a few years. So that is way above what we think is a reasonable price for that type of school or preschool. So it's much higher than we see in Sweden and Norway, for example.
And do you foresee, when you grow in Germany, if you're successful with that, do you see that you need to reach a certain scale before you get profitable in that country, or how do you think you will approach?
Yeah, good question. We are so eager on Germany, so we're focusing a lot on that. And if we look at the units we have right now, and since 2019, they are profitable this year. But then, of course, we have a small overhead team, and taking that into consideration, we're maybe at break even now. So it will take some time before we are profitable as a whole. But given all the activities that we see right now and how active we are, it shouldn't take too long.
Perfect. And then if we turn our attention to Sweden, there has been a lot of focus on the political debate. The current government has a quite negative view on profits in the sector. What would you say is your take on the current political landscape, and what do you see for possible outcomes after the election this autumn?
The $1 million question. It's as you say, it's been a tough rhetoric, especially in the beginning of this year, in February, March, when even our prime minister was out talking about us in a very negative way, and if I might say so, a quite surprising way. She used words that I think are not fitting to a prime minister of Sweden, but the rhetoric was strong. Since then, the last 3 or 4 months, we haven't heard much. I think if we look at all the proposals that have been coming into the parliament, we are not too worried about most of them. But the one that worries us a little bit is the financing part, where they say that they will take away 8 to 10% perhaps of the financing for us. I'm not too worried that will happen. It's a lot of ideology and voter flesh now being talked about. So that happening, I don't really see happening. And if there would be a change in our financing, we are well spread out in most parts of the country, from Stockholm and south. So it wouldn't hit us that strong. We are well represented in blue and light blue municipalities, if you will, where we think the fall would be slightly lower, if any. But if we go back 35 years, my upper secondary school was about to be closed, and it never happened. So I think we have to be pragmatic about this and see what's happening. And we're not speculating in that. We're focusing on what we do. We're building our company strong, focus on quality, and continue our growth. And then the politicians will do what they think is best, and we'll have to handle it when it happens.
Do you put any extra effort in trying to understand how the politicians are acting now up until the election, or do you just focus on your core business?
No, we are building relationships with politicians, especially the ones that are spokespersons for the school area. So we are inviting them to study visits to our schools, so that they can see with their own eyes how we work and how great our operations are. So I would say mostly those people that are working with those questions in the different parliament parties, we're building a relationship to. And then, of course, we have in our schools, they have daily contacts almost with the municipality politicians in their respective municipalities. So there we have very strong relationships. And there it's a totally different discussion. There it's a much more pragmatic, solving the problem focus, rather than talking on when our national politicians talk on a national level, where it's much more ideology and voter fishing than it is on the municipality level. So.
Perfect. And then lastly, a question on capital allocation. We saw that you have grown very like clockwork and done several acquisitions every year. And we also heard you say that there are many opportunities out there. Yet the company has delevered quite a bit. You're almost at a debt-free level. Do you think that we will see, more of a mix of acquisitions, buybacks, dividends, or how will you approach the capital allocation question for Atvexa?
Well, I think that in the end is a question for the board. In our discussions, we still see that acquisitions is our main use of this money, and given the fact that Germany is a focus area for us right now, I would prefer, but it's not my decision, to continue to invest in Germany and make sure that we meet not only the acquisition but also the projects that are a bit more long term for us, and make sure that we can make those happen. So when it comes to all the other questions that you mentioned, they are very relevant: dividends, share buybacks, and so on. But it's not my decision, my comment. So I pass on that.
Yeah, okay. But let's just talk a little bit more about acquisitions then, because
Sure.
we have seen, valuations go down in the sector because of this political debate. Do you think that is the core reason why the acquisition pace has also decreased, or is there some other explanation?
I think that is the key reason. So if you're working and have built up a small school, maybe you're not following the stock price of us or one of our competitors. So maybe you still think that you will get a higher price for your business. So we see that in the discussion we're coming in at different levels. So it takes a little bit of time to reach each other there. So I think that's the main reason that we've been dropping quite significantly on the stock market the last 6 months, and the owners of smaller schools have not really followed that. So that takes some more time and makes the processes longer. But they're not saying that they won't sell. It's just that we have to find each other in the discussions.
Very well. Thank you very much, Johan, for coming and presenting with us at ABG here today.
Thank you, Stefan. Thanks for having me.
Hello and welcome back to ABG Investor Days. My name is Rebecca Järdrup and I am one of the equity analysts here at ABG. Now we will listen to Carl-Johan Zetterberg-Boudry, the president and CEO of Careium, who will give us an overview of the company. So please, Carl-Johan, go ahead with your presentation.
Thank you very much, Rebecca, and morning, everyone. As Rebecca said, so I'm here to present Careium, our business and our aim and focus to transform senior care. And as I said, my name is Carl-Johan Zetterberg-Boudry, and I'm the president and CEO of Careium. We can take next slide, please. So at Careium, we are dedicated to help society to deliver better and more efficient care. And then, of course, supporting both the end users and relatives to live a better, more independent, meaningful life. We know that caring for our growing elderly population is one of the largest challenges that we as society are facing today, where we are confident that technology and technology-enabled care are one of the important pieces of the puzzle to solve this equation. And we at Careium, by using our integrated technology solution and our strong delivery organization and experience in technology-enabled care, we will be one of the players driving the development and supporting the use of technology-integrated care and helping society. Next slide, please. So maybe just to take an example and to give you some insights in what we do for our customers and our end users on a daily basis. So I would like you to meet two of our service users, being Arthur and June from the United Kingdom, where Arthur and June are both suffering from chronic diseases. Especially June, unfortunately, suffered from both dementia and easily falling over with the risk of hurting herself. But thanks to our services, they have the possibility and opportunity to continue to live home independently, where Arthur and June can together know that their loved one are still safe and to be alerted if something happens, giving, for example, Arthur the opportunity to still be out and about in his garden, which he loves, knowing that if something would happen to June, he would be alerted, and also both knowing that if something happens, we in our response centers will be alerted, having the opportunity to assist both Arthur and June, and also then giving the local authority a chance to focus on other elements than cater to Arthur and June on a daily basis, because they know we are around and we will support them if something happens. Next slide, please. So I will give you a short introduction about Careium today, tell you a little bit about our market and how we at Careium are working to transform senior care. Next slide, please. So Careium, we are focusing on technology-enabled care for seniors, where we are the market leader in Northern Europe in technology-enabled care, catering to a little bit more than 400,000 end users on a daily basis. We have an annual revenue of a little bit more than 0.6 billion Swedish kronor, of which roughly 80% are recurring revenue, recurring service sales that we sell. The remainder, 20% are more hardware-related sales, both in our home markets and in our export markets. We have, in the last 6 years, showed an annual growth of average 21%. And on a daily basis, for the more than 400,000 end users that we support, we handle more than 25,000 incoming calls on a daily basis in our contact centers that we have in Sweden, Norway, and the UK. Next slide, please. And as I said, we are working in technology-enabled care, where our vision and what we strive for every day is to make all users live a richer life, that they feel confident, secure, and cared for. So we put a strong emphasis and focus on making sure that we deliver a better quality of life for the end users, because doing so, we know that we support society and local authorities in delivering a better care with higher quality and more efficiency, and we deliver a greater sense of assurance to relatives and loved ones as well. Next slide. So Careium today, we are a market leader in Northern Europe. Our home markets today, where we have a market leading position, that's Sweden, Norway, United Kingdom, and the Netherlands. And then we also have market presence in a few others of the larger countries in Europe, where we today typically are a hardware or platform provider to other service providers in these countries, such as Germany, France, and Spain. And we provide then technology-enabled care for seniors, relatives, and caregivers, where our offering is a combination of hardware, software solutions, and the contact center and responder services, catering to both the individual living market, that means people still living independently at home, and the assisted living market, so different type of housing schemes. You can take the next slide, please. So our business is a business based on recurring revenue. We have grown with more than 20% in the last 6 years. 2021, our revenue was close to 600 million. If we would look at Q1 and pro forma figures, we are trending more towards 700 million in annual revenue. And 80% of that revenue is recurring service-based revenues, where we deliver a complete service, including hardware, software, connectivity, and contact center responder services to our customers. Most of our markets are public procurement-driven markets, so we are winning public procurement contracts with an average contract length of 4 to 5 years, typically then with local authorities as our customer, and then the senior as the end user that we cater to. And we have a business model giving us several different opportunities. As I said, we are predominantly a managed service provider, where we package both the hardware, the software, and the service element. But we also have software as a service with our software platform, as well as hardware that we deliver, and hardware predominantly to our export markets, where we sell hardware to other service providers in these countries. Next slide, please. So a little bit shortly about the market where we are active and that we serve. We can take next slide. I think, as we all know, senior care are facing a number of challenges that will only grow larger over time. There's a growing elderly population, both in absolute numbers and in relative numbers compared to the rest of the population. As you can see, the elderly population in Europe is expected to grow with more than 50 million people over the course of the next 30 years. There's a growing funding gap in countries, both from a regional and local authority or municipality perspective, in being able to deliver the social care and health care needed from a funding perspective. And again, the example here illustrates just only within sort of a matter of 6-7 years, the funding gap in the UK has almost doubled. and also driving a trend towards individual living and home care, is they're several times more costly to deliver care in residential care or hospital care compared to home care, linking back to the funding gap. And also what we see, not only from sort of a funding perspective and cost perspective, people are actually feeling better, both from a physical and psychological perspective, being treated at home. As an example, we at Carium, together with, we could say, our sister company Doro, that we were spun off from in December, we initiated an initiative called the Commission of Loneliness. And one of the elements that we've been driving is the map of loneliness in Sweden, where out of the 300,000 people sort of suffering from loneliness in Sweden, mostly being seniors, of course, there's a higher degree of loneliness felt from people in residential care, assisted living, than in individual care. Also, sort of a clear factor why there's a trend and benefit from individual living and home care. Next slide. And we are confident and positive that technology-enabled care is one of the key elements in supporting some of the challenges that I mentioned in the previous slide. The growing elderly population, the funding gap, and other challenges where we see. Because technology-enabled care can deliver both increased quality of life for seniors, but also saving cost and increasing quality for society. So as you can see on the slide, technology-enabled care, by delaying institutional care, by enabling family and friends to stay informed and involved, and reducing hospital admissions, that will save cost for society, but also, of course, and most importantly, it will enable seniors to live with increased independence, with increased safety, and increased quality of life. Next slide, please. So the market that we are serving, technology-enabled care, is a market that's set to double within the next sort of 5 years, with a number of key drivers why that's sort of set out to happen. One, of course, is the addressable market is growing as we are more elderly people and the elderly people are living longer. We see the penetration of care services increasing a little bit, then with a trend from hospital care, institutional care towards home care. The revenue per user will grow as new services are introduced, and also because the expectation from the end user are increasing, because the end users becoming sort of elderly persons now, they have a much greater sort of understanding and willingness to use technology, which is also driving new services, because that's what the end user are expecting. And then also there's a technical shift to happen and to transform the market in many markets. We have several of the markets in Europe today are still based on analog standalone technology, which will have to change as the analog networks are being shut down and as new services needs to be introduced. The market needs to move from analog to digital and to mature. Next slide, please. And then how will we in Carium work and focus to transform senior care and support our customers and support our end users with the challenges that we see in the market and the opportunities that we see technology-enabled care and technology can deliver. Then we can take next slide. So the current market, to a large extent, and the majority of the market is still more reactive, meaning that an event happens and that's something we react upon. So for a person would fall over, they will contact the contact center, something has happened, and there will be a reaction based on it. And from a technology perspective, it's based on predominantly analog connectivity, standalone systems. And as I said, from a solution perspective, more responding to alarms and sensors. Moving to the future market, which will be more proactive and more preventive and ultimately more predictive. And I think those steps, or in the order I mentioned, those areas, that's the way we think the market will develop. So going firstly from reactive to more proactive, then to more preventive and ultimately predictive. And this will in order to enable the future market, the technology will evolve more to digitally based solutions, integrated solutions of the product, the software, and the service, and will be more mobile and application based. Because this will enable and allow for more active monitoring and behavior change. It will empower caregivers and also relatives to be more effective in their work. And then, of course, ultimately, it will increase independence and well-being for the end users, the seniors. Next slide, please. So from Carrion's perspective, and in order to drive the development of the future market and the more proactive, preventive, and predictive solutions, we have and are sort of continuously developing our integrated technology and service delivery platform, which consists of sort of three cornerstones. Number one, the software platform that we call the Carrion service platform, which you could say it's the software platform that connects everything, both from the service perspective and the services that we provide, connecting the hardware that we use to deliver our services, and also the platform that's used from a contact center perspective on being active with handling the notifications, the alarms, the analytics and reports that will come from the hardware and the services. The second element is devices and sensors, where there's a number of devices and sensors that we use in order to deliver the services, and in order for future services in the future market to drive and to understand sort of the proactive, preventive, and predictive part, where we focus from our perspective on the care phone or the home hub that, from a product perspective, from Carrion is predominantly our main sort of hero product from a hardware perspective, the ELISA. And then, of course, we integrate and we use other sort of best of breed products and sensors in order to develop the services we need. That could be pill dispensers, e-locks, motion sensors, cameras, and other type of products and sensors needed for our services and our solutions. And then the final element, but of course an extremely important element, is our service delivery part, where we have contact centers, responders, and field engineers that together with the software platform and devices and sensors creates our integrated technology and service delivery solution. Next slide, please. So at Carrion, of course, one of the key sort of focus areas we have is to continue to drive core growth. As I said, we've shown in the last 6 years growth in total of more than 20%. In Q1 of this year, we showed organic growth of close to 20% in organic growth. And this is something we'll continue to focus on by, one, growing our market share in individual living, because our strongest market position we have, that's in individual living. But we are expanding our offering in our addressable market in assisted living to take a strong position in assisted living, to start with, of course, in our home markets, and then as we expand to new markets, also in these markets. is to develop our offering and our services and expanding those, and as a result, expanding the average revenue per user. And then focus on the digital shift in our core markets, where especially that's relevant for the UK, where the UK market to 95% is still analog and needs to transfer and transform into digital. One, because of course enable tomorrow's services that will require digital technology. Secondly, by the mere fact that the analog network is starting to be shut down in the UK, and by 2025 the analog network will be shut down in the UK, while analog equipment will have to be replaced by digital equipment in the next couple of years. Next slide. So in short and summary, caring for the elderly population and the growing sort of senior population in need of care is one of the greatest challenges that we have in society. And of course, helping both seniors to live more independently with increased quality and well-being, and helping society, then local authorities and regions, to deliver this in the best possible way with the best possible quality. We are confident that technology-enabled care is one of the key elements to support this challenge and to solve this equation, because as I said, that will give increased quality of life for seniors and increased resource effectiveness and quality from a service delivery perspective. We, as a market leader in Careium in Northern Europe in technology-enabled care services, are focusing to transform this market from today's more reactive solution to tomorrow's more proactive, preventive, and predictive, together with our integrated technology and service delivery platform, with the ambition to become a European market leader in technology-enabled care, leveraging the several different market value drivers that we see. Thank you very much.
Thank you very much, Carl-Johan, for the presentation. Let's kick off with some Q&A. And to start off with UK, you made it clear there in the second last slide that you see UK as a huge opportunity for Careium to grow. But you also have had some challenges there in the last few quarters. So one question, can we expect more acquisitions in the UK going forward, or is other geographics more interesting now?
No, it's a good question, Rebecca. And I think, of course, every coin has two sides. So of our existing markets, we see UK being the market with the clearest opportunities for a number of different reasons. One, as I mentioned, the sort of technological shift from analog to digital that must happen. Secondly, because it's quite a fragmented market. If we looked at, we are sort of one of the two largest players in the UK market. Still, our market share is low relative to what we have in Sweden and Norway, for example. That's due to the UK market still being a very fragmented market. So from that perspective, we see clear growth opportunities in the UK. We've started to see the digital shift sort of slowly more picking up pace in the UK. One clear evidence of that was we did sell a lot of more digital equipment in the UK in the first quarter of this year than what we've done in the past. Sort of evidence to the digital shift starting to happen. But as we communicated in the first quarter and in the fourth quarter of last year, so due to some of the acquisitions and the pandemic and a few other reasons, we are in a situation now in the UK where we need to make sure that we strengthen our position, our platform in the UK, to ensure that we can sort of capture the opportunities we see and have a solid base for growth and profitability in the UK. So Short-term focus is making sure that we get that really solid and stable foundation to enable growth in the future. And coming back to your question, Rebecca, I think there are likely to be sort of new acquisition opportunities in the UK in the future, as we think the market will mature with a digital shift. And also, we are looking for other interesting opportunities in new markets in Europe to continue the geographical expansion.
Okay, thank you very much, Carl-Johan, for that answer. And unfortunately, I think our time is up, but thank you very much again, Carl-Johan, and thanks everyone for listening in.
Thank you very much all, and thank you, Rebecca.
Hi and welcome back to ABG Investor Days. My name is Simon Jönsson and I'm an analyst here at ABG covering IT and gaming. Next up we will have Ulrich, Niklas and Ann-Kristin from NEPA presenting. With that said, I'll leave the floor to you.
Thank you, Simon, for welcoming us. Yes, we have been here before, so today we will try to both give you a picture of the company as it is and also talk about how we want to take us into the future. NEPA's business. What we do. NEPA is a consumer insight company, and we were listed 2016, and this year, actually this month, we are 16 years old. So we are a teen at its best, just getting stronger. So we have operation at an international level. We are working in more than 50 countries today for our clients. And on the map, you can see, that we almost operate everywhere. We are a company which is doing consulting, research and tech, and our sweet spot is in the middle, where is what we call tech augmented advisory. Focusing on marketing optimization, which is by far our biggest source of revenues, where we measure long-term and short-term marketing effectiveness across all the marketing touchpoints there are, and by that optimizing the entire path to purchase online and offline. Our client base are several multinational players, and among them several different industry. And now I would like to invite Niklas to talk a little bit about what is a common denominator of these brands. And
hello everyone, I'm Niklas. I'm the Chief Product Officer of NEPA. And I think the easiest way to describe the common denominator between these companies is that it's business to consumer companies investing quite heavily into their brand and in their marketing communication. There are companies who invest heavily into market communication without investing that much in their brand, but all of these companies, the companies who benefit the most from our services, is the ones that have a focus on their brand and try to build their consumer connection from the brand. So I think that's the easiest way to join the dots between these companies. And there are a lot of other companies on our client roster which are not on this one because we can't speak about them, or we couldn't fit all of the logos. But I think it's the same for the ones that are not in this picture.
Yes. Thank you, Niklas. And I think it's also important to understand that, like a lot of brands during the recent years have also felt that after a lot of years where a lot of investment and attention from the marketing side were on the short-term activities, especially online, and the measuring of those, they noticed that they were like falling behind when it comes to long-term brand value. It was decreasing, even though they were intensively investing in marketing. But then, and by noticing that, they also felt that they should have better control about the mixture of marketing measures they have to apply in order to balance the long-term value of the brand versus the short-term sales focus of the marketing. And that's where our knowledge is very big, because we are one of the few, or the only one company who is really good in both in combining the long-term and the short-term effects of marketing when we model things and when we measure things. Yes. Our consumer science platform is what helps us to do this. And as you see, last quarter we had 75% of our revenues within marketing optimization, which is our core. We had a little left in customer experience, and complementary to marketing optimization, we had innovation acceleration as well, which is mainly our ad hoc business. We have this is our proprietary consumer science platform, and here you can see different components we are covering, which is, it is on the solution side, we have this ad and brand tracker, we have the marketing mix modeling, pre and post testing of campaigns, and the path to purchase. And then we have in CX optimize and CX tracker, and innovation acceleration. It is about new products and services to launch. If that is a question for the client, how to price and to package, ID generation and segmentation and pricing. Yes.
I think the core thing about the platform is not the data collection and the visualization. That is fairly straightforward. But the real value and the real complexity of our platform is tied to when we try to tell our customers what it means and what to do. In essence, all research tries to build a little miniature universe of how things work in an industry with the help of questions and way of slicing and dicing the data. But when you start to be able to describe what the forces of nature is within that universe, that's when the real value is unlocked. So a lot of the value in our platform is actually the way it helps us model the data, not just visualize it and collect it, but to tell our clients what it means and what to do with it, and telling them what ROI they get from different types of investment. And I think that has a growing appeal for clients who quite recently lost many of their other tools. They've been working with attribution modeling and Google 360 and cookie-based solutions. And even though they had all of those great tools, they still found some areas of their business questions unanswered, especially the long-term effects. But with the complications in cookie-based measures and other measures that are infringing on people's privacy, we see a lot of sort of leaning towards this type of data and trying to combine it and incorporate it in their overall ROI models. And that is really a trend that has helped us a lot and made our services more valuable and relevant to our clients.
Yeah, and as you know, this trend of that cookies are more difficult to capture, and the general privacy is increasing and growing, and all over the world, and also more and more hard applied in the European Union, and that is basically fueling our solutions and the way we measure the interaction between brands and consumers. So, and you can also see that in our results when you look at the quarter one, where we have a raise of 21.5% for the recurring revenue compared to the same quarter last year, which is really good. Then it's also a typical variation for the quarters. Quarter one and quarter three usually are quarters where we have a higher recurring part compared to ad hoc because ad hocs are traditionally a little bit more in quarter 2 and quarter 4 for some reason. Yes. And now, you know, we are up. We had a long-term target of 66% on average over a year of recurring revenue. This quarter we are a little bit above, but so most likely we will get very, very close to this goal during the year. Yes. Anki, please, financial update.
Yes, thank you, Ulrich. So we published our Q1 report almost a week ago, and we thought we would take the opportunity to also give a short recap of our latest numbers. There was a strong demand in Q1, and we had a sales growth of 11.6%. Marketing optimization contributed to 75% of total sales, which is in line with our strategy, and also confirms a strong position within the MO area. Ulrich mentioned already that recurring revenues increased with almost 22% compared to previous years, and the GP growth was 15.4% with a gross profit margin of 77.8% compared to 75% in Q1 last year. The personnel costs increased 21.3% or 8.2 million SEK, and the bigger part of this increase, 7 million SEK, is due to capitalized costs from our development in our platform, which have been a big focus during Q1. Yes, and here we have the full income statement for Q1, and worth to mention, which wasn't mentioned before, is the other external costs, which increased with 4 million SEK compared to last year. And this is partly because we have invested about 2 million SEK in external resources in order to improve work processes in the whole group. But also because we last year still had some cost savings due to Corona, and Nepa's employees were still working from home. This year people have been coming back to the office, why increases in costs of running the office of course have happened, and people have started to travel again. And we have also been investing a bit more in marketing. And EBIT for the period landed on 8.9 million SEK, an increase of about 2 million from same period last year. Yes.
Thank you, Anki. Now we'll talk a little bit about our journey towards the future. As you know, we have been talking a lot about what we call legacy cleanup, and I hope you're not tired of it. I'm starting to be it. So we have planned, and we will be ready with the legacy cleanup during the summer this year, meaning that from then on we can focus on our expansion. And here we see also a huge opportunity to do so. And when it comes to the legacy cleanup, like some of the costs, operational costs we have right now, extra compared to last year, they are related to this last sprint of getting the legacy cleanup done, because we didn't do the work we had planned last year in time, so we had to rush it a little bit. Now we are preparing for the expansion by investments in marketing, in our sales pipeline, and we are starting to rolling that out, and then of course we also invest a lot in and this is activated then in our tech platform, because well, as you all know, to buy something right now which would improve our tech from it would be very, very expensive, because even though the prices have gone down a little bit on these kind of companies, they are still on a level where we think that it's better to do it ourselves, even though we are always looking of course, and having discussions, but it's nothing we feel right now is possible from where the prices are. Yes. Niklas, maybe you can talk a little bit more about what's coming then in the next phase of when we're talking about our disruptive offering development.
Yeah, I think we've been discussing back and forth whether we should build our own solutions or if we should partner up or buy or merge with other companies with interesting solutions. We have come to the conclusion that we don't have the risk appetite to make big acquisitions in this market, but we also feel that we have a very good point of departure when it comes to our own investments. The modern machine learning, AI, and modeling or econometric techniques is making it possible to utilize the thing that we have a lot of, and that is we have a lot of data points across different industries. We measure roughly 7,000 brands every day, and the new development within mathematics and econometrics allows the modern algorithms to be powered by not just the client we are serving, but also the dynamics from all other markets, from all the clients we are serving. So the big sort of forward-looking investments is right now going into that part of the platform, building on our modeling and prediction capabilities to make even more accurate and more relevant recommendations to our clients.
Thank you, Niklas. And I can go a little bit more into detail what our 2022 focus areas are. That is like global sales and marketing, building the sales excellent through sales training and dedicated sales efforts towards both new and existing client. I have said that before, we basically didn't have any sales organization at all beyond serving our existing clients and answering incoming leads, but no more than that. So we will add that now and build it up during the rest of this year and onwards. And then we also try to, by a little bit more dedicated marketing, build our brand awareness especially in those markets where we are still a rather unknown player, like UK and like rest of Europe. We are really well known in the Nordics, but not in the other countries. Yes, and then we have like the operational efficiency, which is again the legacy cleanup, which will be done this summer, and then the optimization of our structured capital and important core competencies in order to be more efficient in our delivery and like streamlining our production lines. As you all know, we have switched from one big old production line for tracking to a new one and that will be done during the year. But then, of course, you always need to rethink things and improve it a little bit more. That's an ongoing process.
Yeah, and also worth mentioning is that we have, in the past 2 years, our main tech investments has gone into rationalizing and increasing scalability and automizing things, basically saving costs. I think right now we're still keeping that, but we have a better balance between rationalizations and cost savings, but also working on the overall value of our delivery, which I think is it's a little bit of a shift in our philosophy, not as defensive as we have been in the last 2 years, looking ahead and trying to improve the value of our product and the sellability of our product, which I think will show.
Yeah. Yes, and then we have like and that's also, I think, important when we think about like the outlook right now. You know, there are lots of people talking about that we have inflation, and inflation comes also with some kind of like economic downturn. I'm not sure so much about that, but if it happens, you know, we are well prepared because we have been working hard on our internal efficiency, and we have also the ability to change course in our cost base very, very quickly. I think that was all for today, beside a little summary, which is that, yeah, well, the Q1 report showed what we think was a very good start of the year, despite the uncertainty we of course always have about the future, but now it's more towards the war in Ukraine. We don't know what's happening there, and the rising inflation. What we are doing is, when we're building the future NEPA, is to strengthen our brand tech position, combining marketing and brand initiatives with the power of technology. We continue to invest in tech-augmented advisory to increase efficiency and take NEPA to the next level, and temporarily adding extra resources under the first half of 2020 to finish our legacy cleanup during the summer. And then during the year, we are ramping up our marketing and sales efforts. So, and we think and feel as well, when we look at the demand we have from our clients, that there is that the decision-making support within marketing is really a big demand out there. And when there's insecurity in the market, like it seems to be right now, this is rather rising than falling. But then the willingness to pay, we'll see how that will look like. Thank you.
Thank you. I think we have time for some questions. Maybe this one is for Niklas or Ulrich, I'm not sure. But we have talked before about the consumer decision journey, a model made by McKinsey. I was just wondering how you are working with that model, if you are.
Yeah, I think everyone does. It's impossible to not relate to it in some way. I think we work mainly in 3 of those stages. We look at the decision process, sort of what makes people choose a certain product at a certain point, and what the parameters are for choosing that specific brand. And we're looking at the choice set and the competition in that choice process. In that model, you also have sort of what we call lower funnel. Once you are a customer, and your sort of journey as an active client of a company. We're not as focused on that part. There are for different reasons. It's for once, it's often not the same stakeholder within our clients. So it's you have to sell complete mapping. You have to sell to 2 people or 2 different functions within a company, and the tools where you affect that journey is a little bit different. We cover the journey that is affected by communications and brand management and tooling around communication efficiency and that part. The other part of the journey is much more operations. And we have some coverage. We try to cover the things that relate to the first part of the journey. But the questions, the managerial challenges is very different in that part. So what we try to do is to ingest that data and work with other suppliers or with the client's own data in that journey and make sort of a holistic picture of it. But our main stakeholder is typically the CMO or the media department, and they typically don't have the tools to affect the sort of customer experience once you're in. So that's why we focus on the first part, on the acquisition and efficiency there.
And there you have sort of an edge. I guess other companies are not as focused as you are on that initial phase.
Yeah, I think so. There are a couple of things that we do differently. One is that when you do this, when you try to manage and cover this with research, the typical way of doing it is doing a huge questionnaire where you try to figure out everything that possibly could affect that decision. So you ask questions about everything. And that works when you're really good at knowing what affects it. But a lot of the time, there are things outside that affects it might be what competitors do, it might be changes in the media landscape, it might be inflation or war or pandemics or changes in customer behavior. And that is extremely difficult to cover. If you try to cover it in a data collection, you will only have maniacs answering enough questions for you to make that little universe. What we do is we handle it in a different way. As I said, we collect data every day, and that creates a time series. And the beautiful thing about the time series is that almost anything else in the world that affects a business can also be sort of symbolized by a time series. Everything happens, sales, investments, pandemics, wars, everything is able to plot on the timeline. And if you then apply models and look for the relationship, how the different factors move or are affected by each other, that gives you a much richer data set to draw from. You don't have to anticipate everything that might affect you in the future. And you can always go back and look at what the hell happened here and search other data sources and connect them. And that is only possible if you have a time series. It's not possible to have sort of a one-off questionnaire, a big data collection, and then try to connect things, because you don't know how they move together. There's no way of determining what's the cause and effect and how they relate to each other. So I think that's one of the key things about our platform and our philosophy on how to connect the data that we collect for our clients with the data we get from our clients and from their business, the BI systems or data warehouses or data from other sources like weather, inflation, and stuff
I get
like that.
it. Thank you so much. I think that's all we had time for, I'm afraid. But thank you, Ulrich, Niklas, and Anki for coming, and thank you, the audience, as well. See you next time.
Thank you. Bye-bye.
Hi and welcome everyone to today's presentation of Flexo Mobile. My name is Stefan Knutsson. I'm an equity analyst here at ABG, and with me today I have the CFO of Flexion, Niklas Kuresar. Welcome.
Hi, Stefan. Thanks a lot. So I'm here to present Flexo Mobile. We released our quarterly numbers last week, so I'm going to talk about them, but also very quickly talk about Flexion. So we are a London-based company distributing mobile games. We're about 70 people. No, we're about 100 people now. We acquired a company, and we listed on First North in Stockholm. So where are we in the value chain? So mobile game developers is the market we work on. They distribute to two channels, which is Google and Apple. Everyone does the same. And then there is a gap because the struggle to reach out to the rest of the market, to these massive stores like Samsung, Amazon, Huawei, One Store. So we have combined those stores into one channel. So what we are doing is offering the third distribution pipe to these big developers. We do this through a completely unique offering. So these games are very cumbersome to distribute, and that's why the developers don't go out themselves to these big stores. So we're offering a full service offer where we do all the steps needed in this distribution chain. So basically the offering we go to the developers is, give us the file you've written for Google Play and we send back money to you. We're the only people in the world who can do this. And we are a service company, but we are a technology-based service company. So we have an underlying tech, which is also completely unique, where we can automatically convert that game file that the game developers write for Google Play and take control of the file and thereby repackage it to new files for the various stores. And this is something which you have to have in this because all these games are updated every week, every second week. And since we're the only one who have the tech, it's very hard to actually come in and compete with us. We have patents in the US and we have patent pending in Europe on this. So here we have basically the most important thing about Flexions. So if something you should remember about us after this presentation is this. That is our market position on the market. And we started really early by developing for this back in the Nokia Ericsson day. And we're the only people who developed for this market we're seeing coming for a long, long time. So we are what you call a first mover. We are why it's so difficult to break into this and why it's so painful to come to the situation we are on is that if you think about it, you can't get the games if you don't have the tech. You can't build the tech if you don't have the game. And you can't get any distribution if you have games and tech. So you have to start really, really early with really, really small games and simple tech and slowly build up your position. And since we've done that since a long time ago, we create what you call barriers of entry. So it's very hard to break in. Then on gaming, especially mobile gaming and all gaming, you talk about content is king. The guys with the biggest portfolio wins, and we definitely are the kings on the market. We have the biggest portfolio of games on the market. And finally, since we have the tech, and we basically have control over the files, we can follow new trends on the market much earlier than anyone else, because we can also justify these investments on a large portfolio game. And the market outside Google and Apple, that is what all the new exciting stuff is happening. So we have a really good position to really build for the future here. So for Flexion, market position is the thing. If we look on the quarterly report itself, which came out last week, we have a massive momentum in the company at the moment. We signed a lot of games last quarter. They are all out, and that is partially both existing games and the new games are driven revenues, where we've grown now by over 60%. We have also signed 3 new big titles in the quarter, so it's coming back to that, but that is enabling further growth at the back end of this year. And we've done a strategic investment into influencer marketing, and we also acquired influencer companies. A very, very busy quarter for us. If we look on the games portfolio, when you talk about content is king, So back in Q3, we had a portfolio of game which is worth, in Google Play terms, $40 million per month. And that's how we kind of explain our games, is how much they make in Google Play in 1 month. And we are saying we're generating on average 10% of what to do in Google Play. And in September, we had what we call Google Play factor of $40 million. Then we signed in Q4 4 really, really big games. So we're up to $80 million in Google Play factor. Some of those games have grown even further. And on top of that, we signed another 3 top titles. So we're now at $100 million in Google Play factor. And just as a reference, there's a lot of zeros in this. I did yesterday kind of back of the envelope calculation on some kind of comparable. If you take all gaming companies listed in Scandinavia on the market, it's an unfair comparison because they do PC and they do advertising and all of that, but still, they are combined generating roughly $30 million in Google Play. So we're 3 times bigger than them. So when we go to the stores, we come with the biggest portfolio. This is another important factor for us, and that's how much we generate on average of our top games. And 10 quarters ago, we generated roughly $130,000 per month. And that we now increased to something like $700,000 per month per game on average for the top tier portfolio. And why is that important? So when we go to the top developers, 10 quarters ago, we could offer on an annualized basis roughly $1.5 million to them, which is a lot of money, but it's not big enough to attract really the big ones. Whereas we now can go and say, guys, give us our relatively big game, and you should expect on average $9 million from us in annualized revenues for that game. And that in Swedish terms. So basically, give us our game and we send back 100 million krona to on an annualized basis. And that means that even the top developers are really start listening. And that's why we sign all these new games. We released the quarterly numbers, the March numbers, which were really strong. We're up from the December quarter. And the March quarter should be a bit below December, because in December quarter, you have the November-December marketing events. So if you look on our growth rates, 2020, really strong growth. 2021, guided of 40-60%. We ended up on 46%. This year, we guided again on organic traffic, the kind of the core strategy, on 40-60. We're now at the pace above 60%. So really strong start to the year. Really, really great momentum in the company. And if you look on the cost side, we have a linear relationship between revenues and operating profit. And yeah, so that's growing also very heavily. We have 3x on that over the last 10 quarters, whereas the cost base, we doubled that over 10 quarters. So it's 1x. But in that, we're also now funding new strategies. So I think we mentioned 9 people working on new strategies out of 76. So it's about 15% of that. So the X on organic strategy is about 0.8x or something like that. And that means, of course, that your EBITDA in the company is shooting off. And that's what it's saying. So we're generally starting to be a profitable company. So just to summarize the strategy, what we're talking about so far is the kind of distribution side of the company. And there it's a very simple strategy. And the key driver on that is to grow revenues on your existing games, to move that factor from $130,000 per month to $700,000 and beyond. But also to attract more games. Go from a Google Play factor from 40 million to 80 million to 100 million. And if you think about it, we are still we're generating 10% of Google Play. Google Play is 40% of the market. So we generate about 4% of total revenues in these games. Why not take that to 10%, to 20%? So growth drivers on existing games is the biggest factor for us. And on top of that, we can look at more channels. So the core strategy is very much a lot of growth in revenues, more and more diversification on your portfolio of games. And also what we're seeing is we kind of reach that critical mass, which is so difficult to reach on a platform where you get a really low marginal cost. So you start to grow your EBITDA in the company. So that as a core fundamental strategy is a very stable, diversified, and profitable platform. And what we're doing now on a high level for the company is to, if you think about it, we have the biggest contact network, I would probably say, to the big developers in the world. And what we're doing now is try to monetize that one with more kind of revenue streams. At the moment, we offer organic distribution to alternative stores. And the second one now is influencer marketing. We try to monetize those, and then we're looking beyond that to more strategies. So we're now developing this new strategic strategies in the company. Influencer is definitely one. You know, developers are looking at going direct to the end consumer, but for that they need all the services we are providing. So why are we not offering a white label solution to developers for it and run it for them? And then you have traditional user acquisition coming onto our market, and we definitely should be the gateway to our stores on that. So a lot of new ideas on how we can start monetizing and go beyond. And that is, of course, a kind of turbo effect on growth, but we can also work on the margin on a completely different levels with these strategies. So on terms of the investment, I talked about this last quarter, so very quickly, but we invested in a really early tech-based company within influencer marketing. So basically what they do is they try to automate processes within influencer marketing, both the pricing and the bidding process. It's really early, but the tech is super cool, and we already kind of started using it. And secondly, we acquired one of the leading influencer agencies within gaming. And we've been looking for this quite some time. So because of what's happening with IDFA, etc., and Apple, and also what's happening in Google, developers are looking outside for new ways to market their games. And influencer marketing has been really successful. It's still relatively early, but it's coming a lot of growth. So we want to position ourselves there, and we looked at a lot of companies, and we found one which basically the identical client list as we have. And they were very excited to come on board us, because what we can do is opening door for them to really the biggest developers in the world. So we already, after 1 month after signing, we already kind of signed contracts for new sales. They're also focusing on European, US, American market, whereas we can opening door for them for the Chinese developers. So a lot of synergies. They grew in Q1. We're going to consolidate them now in April, but the last quarter they grew by over 100%. So a lot of growth in that company. And they are showing a proper EBITDA because their margins are much higher than us. So the combined numbers between our two I think, look really interesting. So again, what we're doing is really strong relationships with developers, and now we're trying to monetize those with a lot of different ways. Thank you.
Thank you, Niklas. I would like to start off with your momentum of game deal signings.
Yeah, pretty good.
As you mentioned, you have a really good momentum there, and especially for the large titles. How have you been able to achieve this? Would you say that you have proven your business model, and that is why developers trust you with their bigger games, or is it something else that you have done internally?
I think one thing is the KPI that we're showing. If you're a really big developer, you know, even when you come with a couple of $1 million in additional revenue for them over a year, is kind of not really of interest. But we now come up to a level where they start to listening properly. And the second one is trust. So we are taking world-leading IP, intellectual properties, and we are actually managed to fiddle around in the game with them. So it's very much that they're very hesitant to give this out to anyone. But with the portfolio of games and the other developers we have, it's much easier to say, guys, everyone else trusts us, so you can do the same. So I think it's two factors here.
And what I also find interesting is that most of the deals that you have signed the last 6 months has been returning game developers, or a large part of them has been returning game developers from games that you have had already. That has to be, proof to your concept that it's working, and or how do you view that?
That we're very good. That's what it is. We get it. You quite often get the third biggest game, the fourth biggest game, and you work up the ranks. And if you do well and you don't do mistakes, you get better and better games, and that's what's happening. So, yes.
And obviously, the pandemic has caused, as we know, an increase in mobile gaming, so to say. Now we're entering a post-pandemic world where restrictions are getting lifted and so on. Do you foresee any negative effect from maybe, overall game spend from mobile that can affect you in any way?
Pandemic, we haven't really seen it. We may start to see shifts in the market because of this user acquisition and what kind of games you can actually monetize through that. It's very early stage, but for us, it's so hard to see it because we come in with games that are growing themselves, and we're adding more distribution and more games. So I think for us, it's whatever the effect is, we have a great opportunity to grow, continue. So I don't think those effects are really affecting us so much, to be honest.
And if you just exclude and look at your mature portfolios, so to say, if you compare your games that you had already last year, so their performance has also, increased, or how does that look?
The tail end of it, I think, slowed down a bit, to be honest. And you're seeing that we're taking out quite many older games. But those are games that may make $30,000-$40,000 per month in our portfolio, and then we're taking in games that have a Google Play factor of 10 to 20 million. So it's a couple of % of what a big game are making. So they are kind of tailing off a bit, but it doesn't really affect us because we're moving up the ranks, I'd say. And
just a topic where you signed King of Avalon as your last deal here after the report. It is an older game that has been really big on Google Play. How can you approach that game in your markets? Do you think it can scale and become as big as you once were on Google Play?
It's a very well-known game in the gaming world, and it's a great game to take to these other stores because people know about the game, and then you can, with the stores, opening up drive campaigns and discounts, etc. And let's see how well the games go, but we can kind of attract new users to the game and really drive the game going forward. So it's very exciting.
Perfect. And then I would like to talk a little bit about your new initiatives. You mentioned that you acquired Audiensely and that you closed the deal here in Q2. The company has grown very fast from low numbers. Is it possible for them to sustain this level of growth, or have they reached a scale where growth maybe begin to slow a bit?
First of all, we're going to comment more on this deal next quarter when we actually do the consolidation of the company. But they are active in a market that is growing really, really quickly. And was it 190% last year, and I think 130% this quarter. So this is a very high growth number. Small companies always grow a lot, but the market is also moving very quickly. So maybe it's a bit like Flexo, we hope.
Yeah.
Our own market is just growing and growing and growing. With the market position we're in, we can continue to grow with the market, and hopefully audience to do the same.
And obviously I will respect that you will comment more on this in the future, but the profitability that they showed last year, I think it was around 20% EBITDA margin. as I, you know, it seems that you at least think it will be margin accretive to Flexion.
Yeah, absolutely. Of course, they're growing and they're coming in a new parent and they're investing a bit in staff and all of that. But and also the first quarter in influencer marketing is a quarter when you position yourself for new clients. So maybe you go down a little bit on your margin, but it's over the year. I think we see some pretty cool numbers from them. So, no, but it's definitely it's their business model has a much higher margin than we do. So that's pretty cool.
Perfect. And then finally, I would also like to talk a little bit about Light Up Media. You made a strategic acquisition there, taking a small part of the company. How do their offering differ from Audiensely, and is there any synergies between the two companies, or is it more that they complement Flexion's offering?
No, absolutely. So Audiensely is the traditional large developer, large influencer and an agency in between that match them. Then you have a lot of smaller influencers, which is hard to do on this manual agency business. So what Light Up has done is to build a really cool little app tech where you standardize the pricing. And in the traditional model, the pricing is a little bit all over the place in the market, so to say. And so they standardize the pricing, and they also standardize the bidding process, so influencer can use the app to look at projects, campaigns which they can go into. And that is, for agencies, for example, this is a very good way for their influencers to reach out to bigger campaigns. You know, the smaller campaigns which they wouldn't do themselves. So it's really cool, and something we're talking Light Up, Audiensely, and us very much how we can scale going forward.
So if you get it correct, then it will be a smoother process to incorporate influencer marketing for mobile games to drive organic traffic.
You will have agencies there on the top.
Yeah.
But it's to go beyond that to smaller influencers, smaller campaigns and stuff. It's more scalable. So it's a complement to the big agency business, I'd say.
Perfect. Then I would like to thank you, Niklas, for coming and presenting with us.
Yeah, thanks for being here. Thanks a lot. Thanks.
Yes, hi and welcome everyone for the next presentation of this seminar. My name is Daniel Thorsson, analyst at ABG covering IT and tech companies. And the next presentation will come from Proact and the CFO Linda Hölje. So very welcome Linda, and please go ahead with your presentation and I will have some questions in the end.
Thank you so much. I think you can go to the next slide right away. So as Daniel said, I'm Linda Hölje. I'm the CFO and the head of investor relations for Proact. And I planned on giving a short introduction to Proact for those of you who may not know us that well. Then talk a little bit about our market and the key trends we see here today. Then our strategy, how we're capitalizing on those trends. And then I will end with a quick summary of our latest financial results is the plan. So if you go to the next slide, we'll get right onto it. So Proact, we've been around for almost 3 decades now, working to help our customers driving their growth and value through IT. That's our focus area. We deliver products and services to customers all across Europe. You have the map here where we have our main locations. Our target segments are medium and large enterprise customers as well as public sector customers, and we have approximately 4,000 customers presently. We are a 350 million euro company, approximately listed on the Stockholm Stock Exchange since quite some time back. And we deliver, of course, our value through our highly skilled workforce. We employ around 1,100 employees across all of our European locations. So if we go to the next slide, I think what we are seeing is that, and I think not only us, but we all see this, that the industry is in a state of transformation, primarily driven through digitalization, and data is the key to this transformation. Data is what we are specialized on, and we're building our strategy on 3 defining trends that have been around for quite some time. The first one is exactly this, the digital transformation. To see most businesses these days drive their innovation through IT and through digital transformation. And to do that, they need, of course, access to their data, and that access needs to be fast, flexible, with high availability. And that is typically done, we see as a major trend through hybrid and multi-cloud solutions. So going away from the old on-prem dedicated platforms to a mix of on-prem solutions, private clouds, and public clouds, the ones like Microsoft Azure, or Google or Amazon Web Services. And on top of this, we see that the cybersecurity threats become increasingly important or big. So cybersecurity is increasing in importance, as well as data compliance through different types of regulations, such as GDPR in EU, for instance. So these trends we are capitalizing on and have been for quite some time. We do see more recently some shifts in the market dynamics. We see that as IT becomes key to digital transformation, it's also becoming more of a strategic focus area for the business. So decisions are moving away to some extent from the CIOs to the business leaders. With COVID-19, of course, there was an acceleration of remote working, and that in turn accelerated demand for connectivity solutions as well as security solutions. We need to secure remote workplaces as well as offices. Then more recently for us, we didn't see full effects of this until fairly late last year, actually. The global semiconductor shortage, that's impacting us. It remains a challenge. We still have a big backlog that we're pushing ahead of us, or bigger than usual, since our suppliers in turn have had and are still having very long lead times for certain of the products that we sell to our customers. It's still there, but we're starting to see indications that it should improve during the second half of this year. But then on top of that, now we have, of course, the Ukraine war that's impacting us all in different ways. I think for Proact, there's no immediate financial impact, but of course, the general global uncertainty and potential effects on the global economy may have effects on us, as well as increased interest rates and acceleration of inflation, leading to more unpredictable cost increases and potentially uncertainties among our customers. So if you go to the next slide, Danielle, based on these trends, then we think we're well positioned. We are a specialist, so not a generalist, and we focus on managing data and information for our customers. We do that through advising, storing, connecting, protecting, and securing, and then helping to drive value. We have and report revenues in 4 main streams to do this. We come from a legacy of reselling hardware and software, which we report on as systems. But we are, of course, provide a lot of value to our customers and not a pure reseller. We do have our own consultancy, skilled consultants who help with both advising, designing, and implementing solutions. We have a highly skilled support organization that helps our customers through providing support services around the solutions they bought from us. And then what we're increasingly moving into is managed services, where we run all of these areas as a service for our customers. So next slide, please. This is then how we put our propositions together to our customers. In the middle of this wheel, you see that we have this, how we work with the data for our customers. And a little bit further out, you see the different areas of how we manage, we provide professional services and support. And then we have a different number of offerings within all of these areas, going from strategic consulting, advising, through backup solutions, disaster recovery, security services, all the way to actually selling and installing the actual storage database solutions, and then connecting it through different types of network solutions. If you go to the next slide, one of the keys that we talk about and our competitive offerings to our customers is this hybrid multi-cloud model. Because we see increasingly that customers are not prepared to and not able to go all the way to the cloud. They have certain legacy applications or certain data that they don't want to send into the cloud managed by big US companies. Instead, they do different things for different types of applications and data. So they keep typically some on-prem. They go to the public cloud for, say, Office 365 run by Microsoft. Certain applications they run in private clouds, or they let companies like us manage all or part of this for them. But I think one of our key competitive advantages is to be able to offer this flexibility and the combination of all of these to maximize the value that our customers get out from their systems. And the next slide then, Danielle, is an example, just a customer example that we like to highlight. It's one Fortnox. It's a Swedish accounting services company. They offer us a good accounting software and related services through as a SaaS service. So data, of course, is key for them. It's business critical data for their customers. It needs to be backed up, needs to be available, etc. And we've helped them there to design a solution that we're also running for them that's flexible and scalable using this multi-cloud infrastructure with the cloud services, where they can run certain things off of their own platform with strong security, strong backup services, but also able to quickly drive innovation on their platform. So a nice one where we do a lot of our portfolio offerings for them. So Daniel, if we go to the next slide then. So that was, our market, our key offerings, an example of a customer that is using a lot of them. Based on that, we are in a market that we think is growing, and especially our managed services offering, we see good underlying growth in the market for that. We have set a revenue growth target of 10% annually. We think about half of that will come from M&A and half of that organically when we look at how much our different markets are growing. And we, of course, expect to keep and capture some market share in there. Through both growth, but also by becoming more efficient, we expect our margins to increase. So we have set an EBITDA margin target of 8% that we expect to reach in the next few years. And one of the areas where we see increased ability both to grow and to grow scalably and improve margins is our services, and in particular our managed cloud services business. So as a strategy, we want to get to a 50-50% mix of systems, so hardware and software, and services, where cloud services or managed cloud services is a large part. So these are our three key sort of financial goals that we expect to reach by delivering on our value propositions to our customers in this market. If we then go to our next slide, as I mentioned, we do see good underlying market demand, but we also see good opportunities to acquire companies to complement our offerings. We typically try to acquire companies in countries where we're already present and look for either complementary customer bases or even more importantly, complementary services, companies that strengthen our offerings. And if we go through, these are our four latest ones. We acquired a big managed services provider in Netherlands in 2019, 220 employees, called Peopleware, focused on cloud-based workspace solutions in particular. Then our next acquisition after that was a year later. We acquired a UK-based company, Cetus Solutions, experts in hybrid cloud solutions, more systems-based, but we've seen good synergies in being able to offer our combined competence as managed cloud services to new customer bases in the UK based on that acquisition. Then in the beginning of last year, we bought Conoa, a primarily consultancy business in Stockholm, but experts in cloud-native development platforms, which is something where there is a really strong demand and fits very well into our expertise in how to build those storage and networking solutions to help customers develop or deploy these cloud-native development platforms for their application development. And then our latest acquisition we did in Germany, in Dortmund, late last year, AHD. Also a little bit bigger in terms of employees, so quite a significant addition to our German presence, and experts in managed cloud services. So they primarily sell managed cloud services, come a little bit further than we had in Germany, very complementary in terms of which customers and which regions they were present in. And I think all of these we're seeing good development, good opportunities for cross-selling and nice synergies in how we develop our portfolio towards increasing managed cloud services. Okay, so if we take our next slide, Daniel, these are then our latest financials, our Q1 numbers. Just have one slide on them. We see revenue-wise, we had 19% revenue growth, so quite strong growth, despite still seeing delivery challenges. A large part of this was through acquisition, so Conoa and AHD in there. We had some positive currency effects also. Underlying, however, we did see organic growth of 5%, both for our systems and our services business. So quite healthy growth. So we're happy about that since we've had some challenges earlier with COVID-related slow decision-making from customers, etc. Then TCV, which is how we measure, that's the value of new cloud contracts that we close. So we closed contracts of a value of 122 million kronor in the quarter, up 56% compared to the same quarter last year. So we're really happy about that. That's one of the strongest first quarters we've seen. First quarter is typically slower for us, and gives them good opportunities to grow our underlying managed cloud services revenues going forward here. And we see also growth in our annual recurring revenue, which is we define as a combination of our two contracted revenue streams, our managed cloud services and our customer support. Strong growth there also, 21%, up to 1.4 billion SEK almost on an annualized level. It's very much in line with where we want to go strategically. Our revenue growth in particular also, of course, led to a growth in profitability. EBITDA growth of 26% up to 53 million. And we can see the right-hand side here, you have the longer-term rolling trends that the EBITDA is starting to move up now a little bit as well. So in general, quite a good quarter. Maybe some pressure on gross margins, a little bit more than we typically see, but overall strong growth, good profitability development. What we're seeing as negatives here, primarily that delivery delays are still continuing, so we are not able to deliver or all of our backlog as we typically do. And we also see them in uncertainties related to the war in Ukraine coming in. Although no effect yet on the financials, we do see that there's a risk of, as I said earlier, some cost increases and just general uncertainties. So then I think I only have one slide left if you go to the last one. Yes, so to summarize, we are Proact, a specialist in IT solutions, specifically managing data and information for our customers. We see a positive outlook for our parts of the IT infrastructure market, in particular driven by digitalization in both the enterprises and public sector. And we are continuing to execute on our growth strategy to reach our strategic targets. So that was quickly about Proact, who we are, where we are, and the latest financials.
Excellent. Thank you very much for that, Linda. That was a good presentation on Proact. I have a couple of questions. You mentioned the delivery delays, they continue now. What kind of visibility do you have into the coming quarters? When do you see that getting better, and what signals and signs are we actually looking for in the market to improve the situation?
So what we've seen so far is that our suppliers have had a really hard time forecasting this themselves. So it's been very quick shifts in delivery times. From one day to another, something will get delayed by a month or 2 months to the opposite. Something that we thought was going to be delivered a few months out suddenly sits on our doorstep. So it's been difficult to predict, but on an overall level, we see it continue approximately as it has, and there is no sort of tangible evidence that it's improving. So when we talk about that, we're seeing signs of improvement. That's when we listen to our suppliers, what they think and hope that it's going to change. But it's hard to have. There's no tangible evidence yet, really.
Yeah, I see. And they also have pretty low visibility, as they saw improvements in the end of last year, but that has really not materialized, I guess.
Exactly. So I think that's where I think they're transparent to us, but it's rather their visibility is limited. Yes.
Makes sense. If we talk a bit about the cloud solutions then, because this is mostly related to the system sales. From in the cloud offering, and we saw the growth in the TCV here, for example. What's the momentum in that business, and could that gain even more ground in this environment that companies need to change from systems to do their data storage into the cloud at a faster pace, for example? Do you see that?
Yes. So what we see is it's a little bit different in different countries, actually. So some markets are moving faster to the cloud than others. It becomes, I think it's a popular in one country, and then a lot of customers continue on that trend. So like in Netherlands, we're seeing a quick move to cloud from on-prem solutions. Then certain types of customers that we have more of in other countries, say Sweden, we have more large enterprise public customers. They can be a little bit slower to move there. But I think generally overall, we see that the trend is it's picking up pace underlying. As you know, what we saw when we had COVID-19 was that these are bigger decisions for customers. So when we have uncertainties in the market, they tend to sometimes delay decisions. So we had that effect through COVID-19. Now, of course, there is a possible effect of that if depending on what happens with the economic outlook, etc., for Ukraine. On the other hand, it can also accelerate the shift even further. One thing we have seen to a smaller extent is that it can sometimes take a little bit longer for us to onboard customers as well, because we sometimes need to buy equipment to be able to onboard them. And if we have delivery delays there as well, it can impact a little bit. But I think overall, generally, it's more on the positive side, on the negative side for the cloud services versus systems in this area.
True, and it should also help you migrate the sales mix so that you will reach your margin target, I guess.
Exactly.
And just looking at the last couple of years, aggregated organic growth has been pretty low, around 0% for you as a company. But then looking ahead, what should really happen in the market, or what should you do differently to reach your growth target of 10%, where half of that is going to come from organic initiatives? So what's really going to change that organic growth path?
That's, of course, a good question that we're spending a lot of time on as well. I think what we see is the past few years, we've been hit by quite a lot of sort of external factors. And it's so COVID, we initially got a little bit of help by, but then we've seen that in different countries has had negative impacts, more maybe than what we thought, and in particular then for the taking decisions on new cloud contracts. And then we've had the semiconductor shortage and now Ukraine. So we see that underlying, if those things hadn't been there, we expect we would have grown more organically. And then in certain countries, we see that when the shift to cloud goes quickly, in Netherlands is a good example, then it's harder to keep the top line up, because it takes a little bit longer for services or cloud revenues to ramp up. So we think we're continuously developing our portfolio. We see better increasing demand for that. We're working to secure that we have the best possible delivery of our cloud services as well. And those things together, we expect to generate that growth. So underlying. And then, the last factor, as you know, with our systems business being very lumpy, it's necessary to look at longer term trends to understand really the underlying growth.
True, that makes sense. I also had a question on the acquisitions and the slide you showed us with the 4 logos. Do you rebrand the acquired companies into Proact after some time, or do you keep them with their old brands? I mean, Conoa had a really strong brand in Sweden, for example. How do you work with that?
Yeah, so since we're acquiring at quite a sort of a nice pace, so we have time to do whatever we feel is best for each individual acquisitions. Over time, typically the acquisitions that we've done so far, we want them to be tightly integrated into what we do, especially when it comes to services, to be able to leverage as much as possible. And so in that journey, we quickly typically rebrand them to like Conoa, a Proact company. Then both Cetus and Peopleware now are completely rebranded to Proact. So after a couple of years, typically we do rebrand. When it comes to a company like Conoa, with a strong brand, both as an employer and also to the market, it may take longer. I mean, we will do an individual judgment based on what we think is the best way to get the synergies out of our acquisitions.
Okay, I understand. I have a final question also on the margin target, the 8% margin target. You haven't really been that close to the target in the last couple of years. That's a really good ambition to have. What is mainly going to take you there? We see the system services sales mix of 50%. Is that the only secret here, or anything else that needs to happen in the business to take you to the 8% margin?
It will, of course, we always need to deliver better on all our parts of our business. But as we see it, it's that improving further our delivery capabilities and making sure that we create enough value for our customers to be able to keep pricing up. That, and then in combination with that we do have scale effect, in particular in the services and the cloud services business. We see that getting that value out of our services and the scale effects, we will be able to get to the 8% EBITDA margin.
Excellent. That will be interesting to follow and see when you get there.
Yeah,
absolutely.
Definitely.
Yeah. So thank you very much for the time, Linda. Good presentation on the company, and nice to talk to you again. And thank you very much for everyone who listened in.
Thanks so much for having me.
Hello and welcome back to ABG Investor Days. My name is Rebecca Järdrup and I work as an equity analyst here at ABG. With us today we have Jörgen Nilsson, the CEO of Doro, who will give us a presentation of the company. So Jörgen, please go ahead.
Thank you very much. Welcome everyone. Jörgen Nilsson, CEO for Doro. I thought I would start off by asking you a question, and my question to you is this. Do you consider yourself ever becoming a senior? Can you see yourself ever using something like this, like an old fixed line phone with big keys and stuff like that? Probably not. I can't tell how old you are because I can't see you, but I assume you're all in your late 20s like me, give and take. A few years back when I joined Doro, I felt that how are we going to make a future out of this? There could surely not be a future of this. Then my daughter called me up one day and she said, I'm going to have some beauty surgery. And I was devastated. I went to my wife and we were like, oh my God, what's she going to do? So when she got home for Christmas, we kind of carefully examined her to see, is there any silicone somewhere where we don't want it? But it just turned out that she'd put a chip in her finger between her index and her thumb. Hopefully you can see that on the slide too. In that chip, she had then integrated the entry cards to her university. So when she wanted to go into university or wanted to go to the dorm or to the subway, whatever, she would just put her hand forward instead of using it as a normal swipe card. And she went, Dad, you got to try it too. Now, I've been with computers since mid-80s, started out with a Commodore 64, VIC-64, for those of you who might remember that. So computers is really my background, and I really feel 100% comfortable with technology. But when she told me, you need to put a chip in your hand, for the first time in my then almost 50-year-old life, I started doubting. Not sure about that. And that actually got me thinking that, okay, so maybe being a senior tomorrow is not going to be so much about can I handle this, things like this. It might actually be conceptually, do I want to? Because in 15 years' time, I'm most likely going to use my iPhone or whatever, and I'm going to be making phone calls with that. And when the kids, they walk me by in the street, they're going to think, oh, look at the old guy or the old timer. He's got a handset. Because having a handset, the way you define a handset today, that's probably going to be seen as kind of senior in 15 years' time, when the kids will be making phone calls from their fingers or their glasses or whatever that's going to be. So bear that in mind. It is almost impossible for us today to fathom what technology is going to bring us to in 15 years' time. And every time we take a leap in humankind, it goes so fast and the leaps are so big. So it seems weird, and I don't think you guys will ever go back to these types of phones, but these types of phones are the stuff that people who are born in the 20s will use today. And like it or not, seniors become more and more. In a few years' time, 25% of the European Union is going to be 65 years or older. That's every fourth person. That's over 125 million seniors. Fair enough. Some of them will be born in the 1920s, and they probably will be using something like that. The ones who turn seniors and retire today, they're born in 1957. And for those of you from Sweden, soon we're moving into what we call the ironic generation. It's the Killinggänget with all those guys, Robert Gustafsson and all these guys, for those of you guys who are from Sweden. And when they turn seniors, they will have other needs. The interesting thing is that the seniors we have today, or what we call the baby boomers, are very, very powerful in terms of economy, etc. They were the big first-scale people who went to university. They were the ones who could buy an apartment at a decent price in the hundreds of thousands, or a house for that matter. And today they can sell it for a couple of million. But none of them really feel talked to and seen by the businesses. Most companies, they focus on, let's say, the juniors or people up to 50 or something like that. And seniors, they're almost intentionally forgotten about. 90% of the baby boomers say that they believe that brands are not interested in them at all. And when there is marketing to seniors, it's either somebody who's really, really fragile and shaking around with a stroller, or it's a purple-haired grandmother skydiving with a Harley Davidson out of a helicopter. And neither of that could be farther away from the truth. What is true, though, that as we get older, there are new challenges. Almost everyone has problems with their vision. We all start wearing glasses to be able... I'm sure that some of you will be starting to do like this, and you read newspapers and stuff like that. You don't get away from it. Every third person has a problem with a hearing. Ask my teenage daughters, they tell me I hear nothing. I'm just telling them it's selective hearing. Half of seniors have a confidence problem. My mother used to run. She was like the manager of a travel agency. Today, she doesn't really want to travel to my sister in the UK because she feels unsafe or uncertain at the airport. I can't believe it. 40% of all seniors have dexterity problems. That is, to pick up, hold and handle, to monitor and operate things. As you age, you get pruning in your fingertips, and you have less feeling in your fingertips and possibility of operating items. And then almost 80% of all seniors say there's a big problem with ageism. And ageism is, according to Ashton Applewhite, which I think put it very well, I'm going to read further, ageism is the stereotyping or discrimination of individuals based on their age. It's also the last acceptable prejudice, or at least the one that we people still don't really think of. And she normally says, just go down in any kind of supermarket and pick up one of those birthday cards, and you'll see ageism. The pictures and happy birthday, happy 30th birthday for the 40th time, etc., etc. We also use a lot of expressions, demeanor expressions. I use myself. I might as well say, oh, I had a senior moment, or I have one foot in the grave, etc., etc. And we don't think about it. We as companies tend not to think about it, which is super stupid. And then I'm just talking about the way we perceive, but there are lots of other things. If you're not part of the online society, how do you do when you want to find a telephone number? How do you do when you want to pay your bills? How do you get around without a bank ID? Maybe you have a bank ID, but you can't upgrade it. What if you want to buy a ticket at the state railway or the subway? How do you get it wrong? How do you do contact with authorities, doctors, social securities? Or how do you even read a menu on restaurants when the menus are so printed with such a small font? All of these are typical things of ageism, although many of them are unintentional. For us at Doro, this is something we passionately believe in fighting. We challenge all kinds of ageism and all kinds of exclusion of seniors in everything we do. And we do so by thinking differently about seniors. We always try to make products which are easy to use, easy to pick up, easy to hold and handle, perfectly fitted to our customers' needs. And we've done so for almost 50 years. We've been around since 1974. We've sold more than 20 million of these senior phones with an assistance key in the back. We're still selling 2 million devices every year. And we sell it through a network of 300 leading mobile operators, network operators, retailers, and distributors. We're basically everywhere we want to be in Europe. But for the last 5 years, most of our focus has been on care, growing as a care business. Some of you might have followed us, and you know that since of December last year, we've now split that up. So our care business is a separate company, and we who are still here, we are the consumer-oriented business. We will be focusing only on consumer hardware and software to help seniors. Well, I'll allude to that shortly. I just also want to say that in everything we've done, it might seem to you as it's just a simple phone like this. And it does look like a simple phone. But in every little aspect of these devices, not only these phones, but the other phones, there is a thought behind it. One of my favorite examples is the speaker on the rear. You see there's a speaker, you get 70 decibel out of it. That's, of course, if you have it this way. If you put it on the table or the couch or whatever, you will mute the speaker and you won't hear those 70 decibel as easily. Well, actually, that's where our engineers thought differently. So they've created a dome, a little hole behind the speaker. So it doesn't matter if the speaker is facing downwards or upwards or in your pocket or anything, you will still get 70 decibel out of it, and therefore you as a senior will hear it. And I could easily talk away my 20 minutes here talking about all the aspects, about the concave and convex keys, about the assisted hearing, etc., etc. But what seems to you as a normal little, very simple phone is for all practical purposes a smartphone, because it's a smartphone chipset, with a smartphone operating system in a foldable shape with lots of small things in it. And why do I talk so much about this? Well, still today, because we were focusing on care for 5 years, 75% of all our revenue comes from what we call feature phones. We still make smartphones, and we also do some other gadgets, but we have big hopes for the future. And I know some of you are thinking, how can you really think about that, even talking about it? Because feature phones, surely the old kind of phones are just going straight down the bucket. Well, yes and no. The so-called mainstream feature phone, that is the normal feature phones which are not adapted for seniors, they have been going down the bucket. For us, during the last 5 years, from 2015 to 2019, when we were only focusing on care, our CAGR was just -1%. So we basically maintained our market share without really focusing on it. Yes, it's true, we've had COVID, and we also decided a couple of years ago that we would exit some markets, and we would actually focus everything on care, and therefore our CAGR the last 3 years has been -3. But do bear in mind that when people talk about feature phones, the classic old phones, disappearing, dropping from 5 to 20%, depending on region to region, from quarter to quarter, our CAGR, without really having the attention of us, have been going -3% over this year. So there's still some really good money to make, and which I think that our latest annual report showed, especially in Q4, when we had amazing EBIT, the highest ever, I think, in the history of Doro. So I just want to point that out, that as we're now going to move in, I'm going to show you the last 10 minutes here about what we're going to do in the future. We have a solid basis to stand on. We will continue making these simple devices and make quite good money out of that. And then we will use that to invest in the future. So we feel that we have a unique opportunity. Why? Because although you might not have seen it so much, and especially out in Europe, there has been very little marketing. When we do service with our customers, we see that our brand is quite well recognized and it's also distinctly associated. There's some 41 million people in our top 4 car markets who associated Doro and knew what that was. And 50% of them associated with seniors, which is true, but almost as many with the fact that they're easy to use and that they're value for money. That's a really good strength for a company that basically never spent money on marketing. That is even further emphasized when you look at what customers are willing to pay for. Because the simple truth is, yes, it is a smartphone, but most customers, they see, surely this must be cheaper. It's not. In most cases, this costs as much as a normal smartphone. And if we look at the gross margin and compare apples with apples, or Doro with Apple, you'll see it's basically only Apple out of our competitors that can beat us in terms of gross margin. Mind you, this is Apple hardware, not Apple software. That would be a completely different thing. So people seem to be willing to pay for our brand because they know I need a senior product for my senior, for my mother, for my grandmother, might well be. Therefore, I'm willing to pay a premium. And we see it even more when we look at the GfK numbers for Europe, for our top 4 markets. We sell every 4th phone, but we account for almost 40% of the value. So our big competitors, Nokia, Alcatel, and these guys, they're moving big volumes every now and then, but there's not much value to it. That we see as a great opportunity. On top of that, we got some very nice recognition. There's a company called Google who makes an operating system called Android. I'm sure you've heard of it. They thought that what we do with our smartphones, and I'm sorry, I have the smartphone over there. Maybe I could ask you to get me the smartphone. Sorry for that. Our smartphones have been recognized by Google. They look like, oops, they look like that. So Google actually paid for a nationwide advertising campaign for us in the big newspapers in America, Bloomberg, The Economist, etc. And I think Google paid more money on that than Doro spent on marketing in all its history before. So we think there are a lot of things that we help expanding the market for Android. On top of that, as I said, we've been around for 50 years. And over the last 5 years, we've basically been focusing on care and only making the basic phones. It wasn't long ago that we still did lots of other things. And that we will do again. Also, on top of that, we are #1 in our top markets. And we have great potential in Germany. That means that if we were to develop something brand new tomorrow, whomever we call up, whether that be Carrefour, Elköp, Currys in the UK, MediaMarkt in Germany, they will take our call and they will see us because we've generated revenue margin for them for 30 years or so. So we have a good accessibility to the network. And more importantly, and this is one of my favorites, we do so much research. These gloves, which you might see, they look a bit like Edward Scissorhand there on the left. These are gloves developed by Cambridge University, which we use in our daily work. If you put them on, you will have the dexterity and the tactility in your hand of a 75-year-old. Then you can set them for different ages. You can have 70, 80, etc. When you put these on, and then you put on the kind of, it looks like 3D glasses you see in the picture in the middle, then you can have the eyesight and the vision width and sharpness of a 75-year-old. You put those glasses on, you put the glove on, and you pick up a normal iPhone and start rattling it, you'll see how easy it falls away from your hand. That's why we do this, because we want to make sure that everything we develop is perfectly fitted for the hands of a senior. And I've been talking about seniors. That's the most thing. I mean, I normally call our staff the Talibans. People are so committed. And we know that is because our products are so highly appreciated. On a at least quarterly, if not monthly basis, we get fantastic, really heartwarming letters like the one at the bottom. I truly believe your little inexpensive phone, because they perceive it as inexpensive, saved my mother's life. Thank you on her behalf, and as well as from the bottom of my heart. Because of that little assistance key in the back, they pressed it, and the mother was taken to her. So given the background we have, given the know-how, the consumer electronics history, and really knowing what seniors are, what we want to do now going forward is we want to be the leading European technology brand for seniors. We want to take basically any technology and make it accessible for seniors. In the same way we did when we started this 20 years ago, our engineers basically took a normal phone and stripped it of everything, including SMS. You could only make phone calls, voice calls. And people and competitors back then said, how are you going to make money out of that? We actually charged a higher price. Why? Because we gave them exactly what they're needing. And this we're now applying. So we've done a series 360 around everything for seniors. And obviously there's so many aspects of being seniors where there's need for seniors that we could actually fulfill. But with our consumer electronics background, we've zoomed in 2 major areas, which we call the smart home and the smart health. And within those, we then drilled it down a little bit further. And I won't go into all the details of that, but we will release 3 brand new product ranges this autumn. We will continue developing organically like we always did. We will also start doing partnership, because we've been approached over the years by companies who want to do partnerships with us. But since that hasn't been the focus, because we were a care company, that wasn't really out of interest. And finally, if we feel we would like to expand within an area, and we feel, we don't want to wait, or here's a smaller player or something similar, then we'll do an acquisition. And as I said, we will continue releasing these phones, we will continue releasing these phones, but this autumn, we're also releasing 3 brand new ranges. I don't really want to comment on the details of them because it's a little bit secret. If you're ever in Berlin in IFA in September, you're more than welcome to pass by. You'll see the worldwide launch. But for us, this is just the beginning. As we say, the future's bright, the future's grey. Grey as in grey hair. Yeah, you got that one. Thank you. 17 minutes.
Thank you very, very much, Jörgen, for the presentation. Very interesting journey, and also very interesting to follow you going forward. Can you give us a little bit more, I don't know if you can, but about the new products that you are developing and how that has been, how that journey have gone for Doro?
Yeah. Well, obviously, as I said, for 5 years now, Doro's focus has been on care. So we have not really paid attention to the consumer electronics business. Now, the last year, we've been really doing this 360, looking around, saying, what could we do? And it's really fascinating when you start talking to seniors because they have so many demands. And I normally take that example. When I was a student, I used to eat fish fingers and macaronis and stuff like that because that was all I could afford. Today, my generation, we can eat out anywhere we want to. But I can't bloody read the menus because they're so small and the light is so dim. So I sit there with my mobile phone trying to emphasize it. So that's the kind of thinking we did. We started really broad and we started saying, could there be smart shoes? My mother says sometimes that she gets lost when she starts walking. Okay, what about if the shoe starts vibrating to the right, she turns right. Vibrating to the left, it turns left. So the more we looked, the more possibilities we saw. And obviously our technical department, they got a little bit scared when I started talking about shoes and clothes and stuff because that aren't really our alley. So that's why we decided, let's stay, for now, within the alley where we come from, consumer electronics. And that's why we're starting with maybe a bit of a more me too, like a tablet, a smartwatch, a certain, I don't want to go into the details of this earring thing, but it's a new, really interesting thing that we're doing. But also things like a TV. My 2 sons-in-law, they basically bullied me into buying a new TV this last summer. And it's a fantastic TV. I actually put in a picture. Maybe you can see it. It's a fantastic TV. Everything beautiful, everything. The only thing is that remote control, that's the way it looks. There's not a single button on the remote control. I can't bloody work it. I can program an app and send it to it, but I can't shift channels. And I can wave to it. I can probably get it to go and walk the dog. But I just want to change the channel or increase or decrease the sound. So then we started thinking, I'm 52. If that's a problem for me, what if we made a TV in the same way we did with our phones? We stripped them of all unnecessary. We can put it at the bottom, and it's Android, so it's fine for us. And then you can basically just do the basic. And then when the kids, the middle-aged, and their kids are out traveling in Thailand, whatever, they take pictures with their iPhone, they press a button, bang, pops up on grandmother's TV. So that's the kind of thinking we have, and that's why our biggest problem now has been kind of limiting because we can't do everything. So this year we said, in this autumn, we're releasing 3 brand new ranges. And the ambition for next year is also 3 more brand new. We want to create a whole senior portfolio. So you walk into Elkjøp or Currys or Carrefour or whatever, and you'll see the senior shelf with lots of Doro products.
And that will be launched in September, right?
Yes, at IFA.
Yeah. Very, very interesting.
Yeah.
And about the market momentum right now with the external factors, inflation and increasing transportation costs.
Yeah.
How is that affecting Doro now and going forward?
Sure. It's affecting us like anyone else. I mean, transportation is going up. It's been really, really hard to find components, etc. But I must say, hat off to our colleagues, and especially the guys who've been there for 30-odd years, because the suppliers we're working with in China, we basically know them since they were fishermen, so to say. You know, and it wasn't that long ago since Shenzhen was a fishing village, and today it's a fantastic megapole. So we have been able to not only secure components but deliver, and we've had some really nice feedback from our customers, and basically saying everything from Elkjøp to EEBT in the UK saying outstanding delivery for these last 2 years. So of course we have had to pay through the nose for it. I mean, we paid more for the components, we paid more for flights. We were literally looking at, can we buy sailing boats ourselves or rowing boats and get the stuff in there? Then with the Russian invasion in Ukraine, it did not become easier. Today, the transportation is going around there. But we're not affected per se. We don't have a business in the Ukraine. We don't have a business in Russia. And we've actually donated a lot of money and phone to the independence of Ukraine. So we hope that resolves. But, it makes sense. Electricity is going up. Food is going up. People are worried about the war. And I've noticed among seniors, even my own uncles and aunts are saying, the Russians are coming. I don't think most Swedes are fearing that the Russians are coming to Sweden. But in their generation, maybe they do. And obviously, if you're paying so much more on everything else, there is this insecurity, probably you'll be more reluctant to spend money on what we call discretionary spending. So you might not go and buy that TV or that phone or something like that. So we, like all the others in the consumer electronics, we are affected.
Yeah. And talking about the gross margin, you have held that up very well during the COVID and during last year. But in the first quarter this year, we saw a lower gross margin.
Indeed.
So now that have affected Doro, and how do you expect that going forward? Will we see these lower margins for a while, and what do you believe?
I shouldn't be making statements for the future, really, but I mean, I would think if the war continues, inflation starts, I think we might have to see a slight lower margins for a while. We have very good hopes and ambitions to restore those margins. We're releasing new phones right now, and when we release new phones, our prices go up a bit, and we get a little bit more money, like all the others. When you release a new phone, that's how you basically get a new price out there. But of course, if the war extends, would this to be expanded and become a European war, a third world war, etc., it's impossible to say today. But we're pretty confident that after 2 years of staying at home, people were really keen on, there was a pent-up need for shopping and all that stuff. And then this war happens, electricity prices, and in some countries there's a cap on electricity. Here in Sweden, I have friends who paid 15,000 Swedish a month on just the heating of their house. I know a lot of friends in Austria, etc., who have had Russian gas. Obviously, people will be keeping much tighter to their pockets. So I think for a while now, the margins will be more similar to what we had in Q1, but we have very good hopes of restoring them again.
And also going back to one more question about the new products.
Yep.
Do you expect these to grow? How do you expect the growth of the new products to be in the next few years?
It's hard to say. I know where our ambition is, and we've been saying that today we basically make 1 billion out of these phones. So either we need to find one new category that makes another 1 billion, but then again it'd be okay if we have 3 or 4 categories that make 250 million each. Then we can basically support the decline in feature phones anyway. So hard to say. Our ambition is to make about 200 million Swedish out of our inventions. The first year, but obviously we're launching them in September, so I need to calculate 12 months from there. Really hard to say. What I can say though is when we've been out, we went to Barcelona, the big conference, etc., and I've been traveling extensively this spring, meeting all our customers, and it's fantastic to see the reception. There are 2 out of the 3 categories where they're not going to jump up and down and say, hey, we're going to sell loads of it, but they're so happy that we're back. Because for the last 5 years, we've been out there talking about care, and we've been selling these, which are kind of self-selling, but now they really feel, hey, you guys are back, and they love the idea of a senior shelf and all that stuff. And when you go through, most of them are maybe my age, 40s, etc. Then you start relating to the fact that it's a little bit difficult with a TV or whatever it is. So yeah, good hopes for it at least.
Yeah. Very, very interesting, and it will be very interesting to follow that. And thank you, Jörgen, so much for the presentation.
Thank you, my pleasure.
Thanks everyone for listening in.
Thank you.
Welcome to this presentation with Spend Technology. My name is Eirik Øretsland and I'm an analyst with ABG. And with me today I have the CEO and founder of Spend Technology, Jens Glaase. He will give us a 20 minutes presentation and then we will round off with some questions after that. So with that, I give the word over to you, Jens.
Thank you very much, and thank you for having me here. I think I just then jump straight into it, and thank you for the intro. So yes, my name is Jens Glaase. I'm the CEO and also the founder of this company. To give you a brief intro of what we are and who we are, Spend is a company that was founded in 2015. I at that time looked into what is actually the big problem within financial inclusion. The fact is that approximately 2 billion people on this planet is without a bank account. In other words, half of the population on this planet is outside the financial system. And I was looking further into this issue, and if you really look into it, you will see that it's not necessarily the people that is the problem. The problem here is the banks. The cost for a bank to open and maintaining a bank account is somewhere between $35 and $65, which is, in many markets, at least the markets where we are operating, extremely high. Knowing the fact that these people have approximately $20 in hand, you understand that then trying to open a bank account where the bank has this high cost, they are kind of turning in to become their own enemy. So this is the real problem behind the financial inclusion. So what we were building here is a tool not very unlike Swish and Whips for you who knows that, or mobile pay in Denmark. It's a tool you can just, I will let you know when you can swap slides, so you can just keep it here, please. So it's kind of a tool which is similar to the Whips and Swish tool, but still much more complex. Now, and this is the clue. Letting people coming into your system, making sure that we have a distribution in place, and making sure that people can download the app and start becoming a part of the financial industry. And not only that, but also for the people who's typically would be a Swish or a Whips user, they will also use the Spend tool because it brings the simplicity in their daily life, exactly what it do for me and you. Now, so what we are doing here is when people are starting to use the Spend tool, they are also starting to generate a deposit. This deposit goes into the bank that we are partnering with, and by such we become a deposit generator for that bank. And this is where we make money. Because in a market where only 20 to 30% has a bank account, where do the bank get capital from? They have to borrow it elsewhere. And this is where we come in. So we become their deposit generator, and by such they can access this capital much cheaper than I can do anywhere else. And this is also our business model, at least the basic of it. So now if you can take the next slide, please. Thank you. So our mission is to connect individuals and communities with the global economy through advanced technology. What you see in front of you is a screenshot of the app. As you also saw in a previous picture, you will also see that we had a feature phone like this old button phones. This is still a big part of the market. In Africa, more than 90% has a mobile phone. Depends on where we are in Africa and which city and which area, but on smartphones, we're talking about 40, maybe even up to 60%. But still, the old button phones is dominant. Therefore, we have also created a tool where you can use these old button phones to send and receive money. And this is done with a hashtag menu. And you can deposit money and you can literally do all the services that we have included into the app. Now, as you can see on this screenshot, you see that you have multiple functions. You can view your balance, you can scan to pay, which is literally a tap and pay solution, where you can go to any merchant or you can go to any of our agent, and whether you want to buy something or you want to top up or you want to withdraw money, you simply just tap and pay and it's done. You can see that you can top up, you can cash out, you can of course do the transfer, you can buy airtime, you can buy data, you can pay bills, and much more, which I will come back to. So please swap slide. So this is where we are today. Sorry. We have approximately 1.2 million users today. We have 12,000 customers plus. We have more than 30,000 agents. And again, this is very, very important. This is all about distribution, and this is also where we build trust. Trust comes through the easiness of trust. We are today in 6 markets. Unfortunately, I haven't marked the other markets into this map, but we have Philippines, we have Rwanda, we have Tanzania, and we have Zambia. In addition, we have also notified the market that we are now opening up in Uganda, and we are also about to do or open our business in Ghana. There is multiple other markets which constantly is reaching out to us. To access a new market is not where we have a problem. There is a high interest also from central banks for us to come in, because we are actually helping them solving one of the biggest issues they do have today. As for you that know a little bit about Africa, they're facing 3 big challenges, and that is overpopulation, that is digitization, and it's also urbanization. And as you obviously understand, urbanization and overpopulation is not a problem for us, and neither is digitization, because that's what we do. So in this sense, I think we are in a perfect spot. And as you can see, we have done more than 100 million transactions, and we have done more than 230 million in transaction volume, $230 million. To the right, you will see our banking partners, Access Bank and I&M Bank primarily. Then we have also commercial partners. This is just a few of them, but this is typically a connect customer, meaning that a customer that is using our e-commerce tool or our spend business solution. And then, of course, we also have other partners. And for you who have followed us, know that we are now also part of the MasterCard Start program, which is on the very bottom there. We have got support from NORAD, where they are coming with a grant into every new market that we are launching into for a certain number of markets. I think it's the 5 or 6 next markets. United Nations, we have a cooperation with, of course, and also an innovation over been with us since start. Next slide, please. Thank you. So going back to the problem, as I said, there is 2 billion people on this planet being outside the financial system. This creates a problem. The problem is that these people will be reliant on cash. And by being reliant on cash, they are also blocked from the financial system, which again leads to a large amount of unproductive capital, and they limit themselves to purchase and do savings opportunities, et cetera, digital. And of course, it also limits the bank for access capital. So this, all in all, leads to a very big untapped market. So if you, next slide, which you here can see, that is only in the sub-Saharan Africa, there is an untapped market opportunity of $380 billion. So if everyone would come and be part of the bank sector, either through us or any other services, that would increase the potential revenue with $380 billion for whoever is in that sector. Next slide, please. So a quick snapshot of where we are today. This is just an example. Rwanda is our 2nd biggest market. And if you look at this slide, you will see that they have recorded 36 million transactions. But what is more interesting is that they are actually spend is now actually representing 20% of the bank's balance through spend. So 20% of the total capital of the bank is represented by spend. Next. Can you, yeah, okay, fine. So this is pretty much the structure of spend. So all to the left, we have this bank or bank partners. Then we have spend, and then we have consensus below spend, which is literally delivering the blockchain system that we are using. This presentation is a little bit unclear to me, but I hope you can read it. On the top right, it says the mobile bank. So obviously what we have as a, let's say a product spectrum within the app is you can send and receive money. Obviously, we have a savings account. And this maybe sounds like a no-brainer, but remember, in a market where so many people have not been used to having a bank account, where would they get interest on their money? Pretty much nowhere. There is some savings clubs, which is completely manual, but it's still outside regulation and stuff. So anyway, we have implemented a savings product where people now can earn 3.5% or 4%, depending on which market we're talking about, on their savings. And never been done before. Now suddenly taking the first step out of the cash society, they also have access to this tool where they actually can get interest on their money. I'm going to jump down to the middle right picture where it says businesses before I continue on the value-added services that we have in the app. Now, there you will see it has two tools. It has a Spend Business and it has a Spend Connect. Connect is our e-commerce solution. You could compare it to Stripe. So wherever you are going online and buying or purchasing things today, you are using a service behind it that handles the transaction. This is typically Stripe that is doing the Visa transaction for you or the MasterCard transaction, whatever you are using. This is exactly the same here. And again, in a market where only 24% has a bank account, how could Stripe come in? They can't. They need a solution like this, but of course they could come and knock on our door. But instead we have built this on our own. So this is the tool that all the e-commerce companies are connecting to. As some of you might know, e-commerce is growing massively on African soil, and there is a problem connected to that. The problem is that there is no prepayment services. Now there is with Spend, but meaning that they had to send out the goods on their own risk and very often getting this sent back, damaged, etc., etc. So a high loss on that. The other bulk we have on business is the flow. That's our salary tool. That's the tool for businesses to be able to disperse salary in a market where this is normally done cash and has an extremely high cost. We're talking very quickly up to 8%. They can now use our tool, and by paying a small subscription fee, they can now distribute this cash completely cost-free. The reason why I want to mention this first is because now when I'm going to go up to the consumer picture again, to the right, it says loans. Now we launched this loan product, which is a very unique product. It's a fully, of course, a digital product where people can apply for a loan. The only way they're going to be able to get a loan is if they have a deposit on their savings account. If they do have money on their savings account, they can borrow 2x the amount that they have on the savings account, given that they come through the credit scoring. The other alternative you have is by getting your salary into your account. So if you get your salary paid to your Spend account, remember, Spend is a bank account, then you can also borrow money with 50% of your latest salary. Then we have other value-added services such as airtime. You can pay your bills. There's a lot of features in there. We are also now looking into launching a crypto service, meaning that you can hold and you can buy and you can sell crypto. This means that we are also now opening up for the remittance market. So for people living outside Africa wanting to send money back home to their families or for whatever reason, they can now use the crypto rails, which is very, very interesting, which means that I also can send crypto to my family back home in Africa. Now, this is quite important, and that is the fact that crypto is growing with an extreme speed. Internet grew with 63% year over year from 2000 to 1993. Knowing now that crypto is growing with more than 130% a year, and knowing the fact that Africa is the continent in the world with the highest uptake of usage of crypto, but the fact is that primarily all the capital is ending up in the black market. Now, so what we have done here is that we have integrated it and we are running on the remittance rail. And by such, since we have the proof of origin on this side through the broker that is being used here, if you buy the crypto outside, and being sent down. We have the proof of origin, we have the KYC and AML on this side, and so do we have on the African side. For an African living in Rwanda that want to speculate in buying this as an investment tool, which is extremely popular because there is very limited tools for investments, and they have, this is kind of a way out for them. They can, of course, also do it in stocks if they have access to it, but very few do. Now, this gives them the allowance to also invest in buying crypto and holding it and selling it whenever they like, of course, with the risk that it carries. But since we have built it the way we have, and since we are always going through the fiat, so for example, when I'm sending crypto to my family in Africa, and when they're going to go to the store and buy whatever they're going to buy, if they're going to buy a Coke, they can still pay with crypto, but the crypto is then in the background being exchanged into local currency, and they're literally paying with the local currency. But it's a tool where people can pay with crypto in any store, but we are now helping the government to take control of something that I don't have control of from before. Exactly this is the VAT, the taxes, and of course, they will also get access to the dollar, which is very beneficial for a lot of these countries. We have got our endorsement and approval from the ICT ministry and the ICT minister herself. So we are very happy for launching this tool soon, and we are just now implementing this as we speak. Next slide, please. I guess we take all the questions in the end. Let me see. I have 3 minutes left. Okay, so I don't want to waste too much time on this, but again, it's all about the ecosystem. It's all about how we capture the capital within the ecosystem. So we do have, as I've now been taking you through all the products that we have, every one of these products. So the savings products, we are making additional 3.5% on airtime and bills payment. The utility providers are paying us a fee on transactions. On the business solutions and the Connect solution, it's a subscription fee and a transaction fee. And loan is also, of course, there is a fee on establishing the loan. There's a fee on the interest. And again, what is very important to say here is the bank's product is the bank that owns the customer, is the bank that owns the deposit, but we are getting our share out of it, which is a very, very good deal for us, which means that we don't have any risk on capital being lent out, and neither do we have any responsibility for the capital being paid back. But as you heard, it's already securitized either through through salary, or through the fact that you have a balance on your savings account, which is being blocked when you take that loan. So it's a very, very beautiful product. Next slide, please. Yeah, I've been talking about the revenue streams. Since I have very little time left, I think I'm gonna go through this very, very quickly. So we do have, obviously, from the bank, we have the connection fee or the license that the bank is paying us for a tool. We have the maintenance fee, which is a monthly fee. We have also the loan fees. And then we have the third-party commission fees. And then we have the Connect tools, which also is fee, as I explained. And then we have other third-party companies, such as Solar Village, Uber could be one, et cetera, et cetera. Next. Yeah. In the African market, we also do have mobile payment operators, and there is other players. And this is just to showcase what kind of unique advantage we have in Africa. As you can see, if you can read it, it's a little bit unclear to me, but literally we are, let me help you a little bit on this one. So bank and network agnostic, we have open and free account and earned interest, seamless money transfer, purchase and payment options, user-friendly application, etc., etc. So you can see that we are ticking all the boxes while others are not necessarily doing that. Next slide, please. And this is the final slide. So I just wanted to share with you also what kind of ESG goals we are ticking off. And as you can see, we are taking up quite a few of them. And we are, of course, very proud to do that. but gender inequality. We have no poverty, obviously, and of course also decent work and economic growth. We are now employing more than 30,000 people, indirectly or directly. Of course, we also do have the partnership for the goals, and it also affects on hunger, on education, on industry innovation, etc., etc. So there is quite a few more. I assume this presentation can be shared with you as well. So if you jump 2 slides more, thank you. This is pretty much Ben, and I think I was pretty spot on time.
Thank you, Jens. Let's go over to some questions. We can start with the user base, because in 2020 and also in 2021, you saw quite strong increase, especially in registered users. So can you talk about the recent development that you've seen over the last 6 months? Do you see any difference in the development between registered users and active users?
Sure. I also have, I can see that Staffan, my CFO, is also on this call. So Staffan, please feel free to fill in if there is anything that I'm missing out on. So the strong growth that we saw through 2020 and 2021 was very much also driven by the Corona situation. A lot of people were limited in moving, and they used this as a tool for payments of whatever services that you could get at home, etc. And also the need for being able to send and receive money. And also it was a new market launched in February to 2020, wasn't it? That was the year that, 2020. And we had a very high adoption in that market in Zambia. I think we got from launch till pretty much a half year later, we were close to 500,000 users. So we had a very decent growth in the Zambian market. So that is pretty much it. We are still growing strongly, but what we are doing is we are focusing more on the business solutions. And the reason why we are doing that is because that is also giving us a higher retention. It's very important for us to have a high retention on the app and also the usage of the app. So therefore, we have focused a lot on the business sales. So you can only imagine when we are going to big clients, just use Uber as an example, where they have a lot of drivers and where they are paying the salary to all of the drivers, or the commission to all the drivers through our system. That onboards them, and that increases the usage of the app in a completely different way, which is also very important for us. A lot of people that is downloading the app with us is very often also people that doesn't have a lot of money, although it's a tool for everyone. Which means that very often the pattern of the people, what they do is that they deposit the money that they need to buy what kind of services they wanted to buy, for example, airtime, or they want to pay the bills. And they literally you spend all the money to pay the bills, and the account is empty until the next time they need these kind of services. So what is an incentive for us to do this slight change of direction, or not direction change, but a slight change? Is to make sure that we are also targeting whatever brings the float or increases the float. That is, everything is driven around the float. So the deposit capital that we generate to the bank, because that's also where we gain our revenue.
And you mentioned the business side here, and it's interesting to understand how you work with sales and marketing and onboarding new customers. Can you please just explain how you work towards the customer? Do you work towards the business customer and then the business customer onboard the consumer, or is it vice versa? Can you please elaborate a little bit around that?
Yeah, obviously, if I understood your question correctly, so when, for example, I onboard a business, like now we have onboarded a company called Irembo, which is all the tax payments in Rwanda. When they are coming in as a Connect user, they are now offering people to pay their taxes through Irembo on Spend. Obviously, that creates a completely different usage, and people very often then have to download Spend to pay their taxes, because that's a more convenient tool than, for example, going to an office and paying it. So this all adopts into usage, and also, of course, it adopts users. Was that an answer to your question? Or
Yeah, basically. So the next follow-up would then be sort of how do you direct the business customers with sales and marketing initiatives?
So a business customer in this case could be, let's just take McDonald's or Wooba Wooba, which is a customer of ours, but let's use McDonald's. They don't have McDonald's here, but let's use it as an example. So a McDonald's would be our business customer. That's the one who is being onboarded, who's paying the subscription fee, who's now can either pay their salary to the staff as a spend flow customer, or they can also use it as a connect solution, which meaning that, okay, I could also pay for my food using spend. So number one, when they are then paying salaries to all their employees, obviously what will now happen is that all the employees has to have spend, because with spend you can also send money to whoever you like. You don't even need to think if they have spend. So if I send money to you on spend and you don't have spend, you will still get a message saying that, hey, I sent you this money, you have to download the app. So obviously this will onboard more users, number one. Number two is, of course, it increases transactions, because what they will do, they will start using spend again for doing whatever they like to do, with paying taxes, paying whatever they have to pay for. And therefore, it's important for us to onboard more and more of these kind of users. For example, also what we have as a customer in Rwanda is the university, one of the bigger universities, where students can pay school fees and everything through spend. So again, it's an incentive for people to actually have it. Why would they choose spend? Because it's cheaper. All our transactions, sending and receiving money, is cost-free. So when they then go to an agent and deposit money into their account, because that's what they have to do, that's the first step. You have to convert that fiat into the digital. And that is cost-free. And when they do that, then they can pay a cost-free school fee service. If not, they have to pay maybe 2-3%. So they are very focused on these small cost elements, which is then driving growth on our side.
Yeah. And in terms of use cases, can you talk a little bit about sort of what are the main use cases here, and what does the customer use spend for mostly? Is it the savings account, which is sort of the main product here, or remittance?
No, well, it's a lot. It's taxi services, which is, of course, very popular. It's called Bora Bora. There's these motorbike taxis. It costs, like, for us, it's a penny to go from A to B. It costs you maybe $1 to drive, I don't know, 3, 4, 5 kilometers. So it's quite cheap, and they are very popular. We are partnered with them. That's Diego in Rwanda, for example. So that's one who you're using the services for. As said, I mentioned a couple of others. We also do have Kazang, of course, in Zambia, which is huge. You can go to any ShopRite to kind of take it to the other end. So this is more on the, let's say, more the mature part, where we have ShopRite, which is similar to Rema 1000 or Meny here in our markets. You have all the gas stations where you can pay for gasoline. So this is, you know, there is a high usage. So to make it, maybe break it more down to an understandable term. So how you use Vipps today in Norway, I'm not sure about this in Sweden, how far you have come, but how you use Vipps in Norway is pretty much how you, or let's even better, how you use your Visa card is pretty much how you can use spend in these markets.
Sounds good, Jens. Thank you for the presentation. See that we are running out of time now. So thank you for the presentation, and thank you for the ones who listen in.
Thank you.
Hi and welcome back to ABG Investor Days. My name is Simon Jönsson and I'm an analyst here at ABG covering IT and gaming. Next up, I have the pleasure of welcoming Jacob and Jacob from the esport company Astralis. With that said, I'll leave the floor to you guys.
Thank you very much and a pleasure to be here today. We've been given 20 minutes to talk about our company Astralis, which is an esports company, as you said correctly. We'll try to sort of cover it best possible, but 20 minutes is not a long time to talk about a company in an industry that not a lot of people know a lot about. So today we will try to sort of cover the basics and some of the parameters of how we're working, how we're structured, where do we actually make money, and what are some of the perspectives that we see on the future. So for understanding, we will start out by looking at the company structure, because we actually get a lot of questions about sort of the structure of the company and how things are working. So we have Astralis AS, which is the publicly listed company. Under that, we have Astralis Management, which runs sort of the daily operations of all our individual esports teams. And under that, every single team has its own entity, which helps us obviously keeping track of the books and making sure that everything is accumulated in the right way possible. Furthermore, we have made our first acquisition externally, which is Pixel TV, which is a web and TV-based platform that covers gaming and tech in general, allowing us to tap a little bit more into the broader audience. Yeah, you can feel free to jump to the next slide. Great. So our organization, as those of you who know us know, but if you don't know us, then you don't know, we did a management buyout of the company in 2019 prior to listing it publicly. We were formerly a company called Refresh Entertainment that owned another part of an esport company, Blast Premier, as well. At that point, we were 10 employees in our HQ, alongside a couple of players and a couple of teams. And until today, where we are over 35 employees in our HQ, and we are over 85 employees in total. That includes coaches, that includes technical staff, talent academy players, et cetera, et cetera. Furthermore, we have also built a physical structure where we are standing here today, which is called Astralis Nexus. It's a 1,400 square meter facility right next to the entrance of Tivoli, the legendary Tivoli Gardens in Copenhagen, which is basically a shop, an entertainment center, and a place to enjoy gaming in all varieties, but also go to a specific event, meet our players, see our trophies, and we're also the facilitator of external events. Also, we have added Astralis US Inc. So when we started out, we were primarily a North European-based organization. We now have an office in Las Vegas in the US, where we are running our newest team expansion, which is Rainbow Six, an acquisition that we made in the summer of 2021. So we are growing quite rapidly, and we've also managed to build a very, very strong and durable organization. And I think when you look at us compared to a lot of the other esport teams and other esport organizations, we are built from a structural perspective much more like a classical entertainment and sports entity. And most of the people that we have hired in key positions are people with long-standing experience from the outside world, bringing experience from either football clubs, from entertainment industry, from tech startups, etc., and sort of bringing it all together, acquiring and building what is now Astralis. Great, you can jump to the next slide. So what we're mostly known for is obviously our teams. For a good sake, Astralis is sort of structured in a similar way to what a sports club is. And when we talk about esports, that is the term electronic sports, which is sports being played on a computer. So when we say we are an esports team, that's sort of saying you're a sports team. That doesn't necessarily narrow you down to being a specific sport or esport. In the same way it works for us, where there are multiple different genres of esports, in the same way that there's football, there's basketball, there's handball. And we are working specifically within Counter-Strike, League of Legends, Rainbow Six, and Fortnite. And each of these teams have either a different sort of geographic location. Some of them are working outside of our HQ and are catering to different audiences. So here in the Nordics, we are obviously primarily known for Counter-Strike. Astralis has had the most dominant run over the last 5 years in Counter-Strike history. We have spent over 120 weeks as the #1 team in the world, which is completely unparalleled of all other teams. We have won 4 majors, which are the equivalent in Counter-Strike of the World Championships, and we've actually won 3 of them in a row. So we've been having quite a good years and successful tournament runs. More than that, that is the base that we've built the rest of Astralis upon. That is where we revolutionized the sports performance metrics. That's where we started bringing in psychiatrists, support systems around them. And it's also where we are building an integral part of the ecosystem for the future, which are franchise leagues. This is something that I'll jump a little bit more into when we speak about the next game, which is League of Legends. League of Legends is not quite as old of a game as Counter-Strike, but it is similarly played 5-on-5. It is a game that is very, very big from a global perspective. It is the biggest esport in the world, but it is also a game that is very, very heavily tied to the Asian part of the world, specifically China and Korea, that has a long history of success in this game. To give you perspective of the size of League of Legends, there was a World Finals in 2019 played in Shanghai, where there was over 78,000 people in the audience, and the viewership that was accumulated at around the same space of a Super Bowl. So this is not some niche sport. This is not some small thing. On the global scale, it is up there with the biggest of the biggest. So our League of Legends team also played what is a franchise league, and franchise league is a structure that is similar to the US-based sports. That means it is a league where you buy a spot in a league, or you are part of the foundation of the league. And then there is no relegation and no promotion. If you are in the league, you are in the league, and you get a share of shared profits, of media money, and all these other variable ways of making money in the ecosystem around the league. And we purchased our slot in 2018 for 10.5 million euros as part of the European franchise league. In League of Legends, there's 4 main regions. It's Europe, it's North America, it's China, and it's Korea. So we were selected among over 100 applicants to have one of the spots. Those spots today are traveling, are being sold at a multiple of 2 to 3x of what they were purchased for back then. Similarly, in Counter-Strike, we have 2 spots actually, because there are 2 leagues running simultaneously and unstaggered on top of each other. That is the ESL Pro League, a company that was recently sold for $1 billion. And this Blast Pro Series, one of the companies that I personally was a part of founding, but is also building a great league, especially here in the Nordics. They are known for the very, very big and grandiose show in the Royal Arena in Copenhagen. What this allows us to do is to have security in our investments in the team and build a long-term sustainable infrastructure that can sort of underpin the financial investments that we have to make in these teams. The newest addition to our roster is Rainbow Six. It's a game that is not the size of Counter-Strike and League of Legends on a global scale, but it has a very strong foothold in North and South America. Here we have built our first offices in another part of the world. It was actually for us very much a way to test out our model. Are we able to remotely run a performance system as a club? And so far, the results have been very, very good. We acquired the club when they were at the bottom of the league, and they just played a major final in Charlotte in US, which is where all the best teams from the regions around the world are playing, making them among the 2 best teams in the world. That's been quite a step forward for us. And also there is potential franchising in the future. Again, an opportunity to purchase a spot at a price and see it rise very, very much in value. And the last game that we have under our umbrella is Fortnite. That kind of speaks to itself. If anyone on this call has a kid under 14, they will have at least heard about Fortnite. Fortnite is a little bit of a different game from an esport perspective, and it's something, because the game is so massive, we have to be in it to keep track of what's happening. But there's some really, really exciting esport developments in it, and we have some of the best players in the world there as well. Great, you can jump to the next slide. So the business side of it. What do we actually make money on, and how have we grown over the years? So when we went public, we were grossing revenue at a little bit on the early and the right around a little over 40 million Danish kroners. This year we have done 81, I think is the right amount. You can check in the papers on that. So we've seen quite a tremendous amount of growth in our business, and that is primarily built around sponsorships, classical sport business model, league revenues, which is growing quite a lot, and then a lot of new direct-to-fan plays from our side. One of them is the Astralis Nexus facility that I'm standing in right now, where you can walk in, you can not only buy Astralis merchandise, but you can also buy merchandise from a lot of our partners, including Hummel, Logitech, and a couple of other companies. So how can we continue this growth? We see a lot of opportunities in North America, among others. It's a very, very big market. It's a little bit of a harder market to penetrate, but because of the single language market and the large size of it, we see huge commercial opportunities around it, especially because the lack of borders in esport means that a Counter-Strike team from Denmark, if they're big in Counter-Strike, are also quite famous in North America. So not only have we built quite a stronghold with our Rainbow Six team, but we're also utilizing the star power of our existing teams and that seabover effect as a catalyst towards our expansion in North America. Obviously, there's always the opportunity to add new games or teams. We're being approached quite a lot by a lot of different developers, game developers to enter their leagues, but we have been quite picky with what we want to do. We want to go into things where we can see a long-term investment and you can see it makes sense from a commercial perspective, but there are definitely some interesting developments that could be Halo, that could be Valorant, that could be different other games that we could move into in the future. And then I think the one thing that stands a little bit out when you looked at the company overview is our acquisition of Pixel TV. Pixel TV is basically a way for us to reach lower down into the funnel and talk to a wider gaming audience. And our plan with that is to build it into one of the biggest gaming platforms in the Nordics by also offering localized content in Swedish, in Norwegian, and Finnish over time. And that is a plan that we're rolling out at the moment. You can jump to the next slide. Great. So just to give you a little bit more clarity around where we make our money, I've sort of put up the revenue sources 2019, 2020, 21, and 2022 expected. This also reflects the development of our ecosystem. Originally, this was an industry primarily built around two things: prize money and sponsorships. So what did you win in a tournament and what did the sponsors pay you to have a logo on a jersey? We are now at a point where we are much, much more mature and we are looking from a revenue source perspective, much more like a classical sports club. So if you look at 2019, 40% of our revenue was from prize money, league revenue, and digital items. The vast majority of that was prize money. Well, now in 2022, it's obviously a little bit smaller part of the whole cake, but primarily that part is no longer driven by prize money, but more by league revenue and digital item sales, which is also have a lot better effect on our bottom line. And that is also one of the interesting developments of the future. If anybody, and I doubt it, but if anybody was a fan and saw our Rainbow Six team play a final in the major in the weekend, you would also be met every 10 to 15 minutes by an advertisement for digital items branded with Astralis. So within that game, you can buy skins, which is for weapons, which is for operators, as they're called, the character that you actually play, wearing Astralis logos and colors, and a cut of that is being paid out to us. So we are finding new ways to monetize the system that does not exist in the physical world, but that's quite exciting and it's growing very, very fast. Furthermore, we're obviously expanding our merchandise collection. We recently prolonged and furthered our relationship with Hummel, the Danish sports provider, which is now going to do the full universe of items that you can buy on our web shop and several other places, including here in the Astralis Nexus. And then obviously we're tapping into much more of a B2B audience from an event perspective here through Nexus. And last but not least, a big part of it is still sponsorships. Sponsorships is a very sort of classical way of looking at things. I think the way that we approach it is more like a partnership where we help different companies succeed in the gaming and the esports space. That is everything from the Logitech, who is a very native company to this space, to we recently announced a partnership with Velux, who does roof light windows, which sounds quite weird for our space, but they also need to talk to a younger audience, and that is something that we're helping them with. Yeah, you can jump to the next slide. Here, I just wanted to end on giving a little bit of perspective on why are we this valuable and why are we able to sell sponsorships for these kind of amounts. That is because we have a huge global audience. The difference between Astralis and an FC Copenhagen or a Malmö is the fact that we are not tied to a physical location. When we go to China, we get sent gifts to our hotel room from Chinese fans. Astralis is not a localized thing. It's a global audience. And that's also what we can do. We can talk to a global audience through digital channels at pretty much any time. We are not set to the fact, oh, we have to do something every Sunday because that's match day. We can do pretty much anything all the time. That is also obviously one of the challenges, because if you can do everything, what are you actually going to do? But I think if you look at us and compare us to some of our competitors, even though few of them that are also publicly listed, you can easily tell that our commercial understanding and our ability to monetize this massive global audience is quite advanced. I think that was it from our side.
Great. Thank you, Jacob. We'll turn to some Q&A then. And I want to start off with your financial targets. You touched upon 10 to 20% sales CAGR in coming years. But what about the road to profitability? Can you maybe elaborate on that?
Yeah, sorry. Let me present myself. I'm the CFO, Jacob Hansen. I think we've already, with our annual report, talked a little bit about how profitability is going to be and how the future is going to be. So the guidance for this year is a revenue in the range of 85 to 90 million. And actually, we, for the first time since the publicly listed in 2019, are expecting positive EBITDA. So just being able to have positive EBITDA, which is also equivalent to a positive cash flow, then we actually expect to be able to have a positive bottom line within a very short time frame as well.
All right, thank you. And in terms of the growth, how will you grow the business? Is it mainly due to increased commercial rights sales on the existing teams and existing business, or do you expect to start new teams, enter new leagues? What is the plan?
I can answer that. Obviously, we're always surveying the opportunities of expanding into new teams and new leagues. But for us, we will not do it just to do it. We'll do it because it's a commercially viable opportunity. So, for example, moving into North America has allowed us to expand our existing commercial relationships with partners who are also interested in that market. I think another thing is the expansion of what we're actually offering our commercial partners. When you look at the organization from where we were in 2019 to where we are now, we are much more sophisticated, which is also why we are able to work with a partner like Velux, because we can deliver a quality and a value that makes sense in their ecosystem. But honestly, we look at sponsorships a little bit like the baseline that's going to bring us to hopefully break even, but that's not going to be something that all of a sudden grows 80% per year, right? Like, we're not going to have 200 logos on our jerseys and do all these different things. But the digital item sales, the league revenue that keeps growing, etc., that's where we're going to find the next sort of 20, 30, 40% of growth over the coming years.
All right, thank you. And a question on the competition here and competitive edge. What are the important factors for you to maintain an edge as an esports team organization? I suppose organization and brand are important factors, but and also owning franchise spots. But could you elaborate on how you maintain an edge?
Historically in esports, the only way to hold an edge and hold pretty much anything of value was competitive success. And we recognized very early on in 2019 that even though we were very good at it, and we still are, we wanted to be a part of building a system where that wasn't necessarily the only thing holding you viable. So that's why we are part of these franchise leagues, why we have been a part of helping sort of structure the way that they're built, is because we are now allowed to think a little bit longer term. So our season doesn't necessarily work in the same way as a football club. If you look at, for example, Counter-Strike, there's constantly new tournaments, there's constantly facing off different teams and around the world. And instead of just having to think about how do we do best in the next 3 weeks, we wanted to be able to think long-term and build proper structures. We did that in 2019. That resulted in probably the most successful run of any esports team in history. And now we sort of ride that wave out, and now we're restructuring and getting ready for the next one. So I think we've always been good from a performance perspective, but I also think from a brand perspective, given the fact that in a lot of other companies that are in the esports space, it is primarily only people like me. Not to say anything bad about myself, but I am an esport guy coming out of the esport world. There's not so many people as Jacob, the other Jacob, more adults in the room. So I think we've built a structure, a brand, and a way to do things that provides longevity. And that's why you also see when we announced the prolongation of the Hummel sponsorship, we're not prolonging it with 12 months. We're prolonging it with 3 to 4 years. And that gives us a base to know that all our commercial partners are going to be here for a very, very long time, allows us to make the right long-term choices when building rosters and when building brands. I hope that can answer your question.
Yeah, thank you. And I want to talk a bit about, as a final question here, about the players and the contracts. What does the contracts typically look like? How long are they? What is the typical churn, if you can call it that? And how do you maintain players?
So the churn in general in esport is usually quite high. We have kept it a lot lower than the average in esport. And I think, again, that's how you build the structure around it. But again, with the maturation of our sport, we pretty much have similar contracts to our players to what you would have if you played in the Superliga as a football player. So we are quite mature in that regard. There are some parts of the world where esports teams are not that mature. But again, we have the structure that we need, and we approach in the same way. We have nutritionists, we have sports psychologists. We have pretty much everything that we need to keep them happy. And I think, honestly, one of the things I'm quite proud of is we've seen a lot of players who were with us in the early days, who've gone somewhere else, now trying to find their way back because they understand what we have built. And that is led in our house by Kasper Witt, who is primarily probably known in Danish for being very red in the face and yelling a lot on a handball court. But he is one of the most dedicated sports performers I've ever met in my life. And he has built that culture. And we're very happy to see people wanting to be a part of it and be a part of what we've built.
Great answer. Thank you so much, Jacob and Jacob, for coming here today. And also thank you, the audience, for tuning in. That's all we had time for.
Thank you very much.
Thank you.
Hi all, and welcome to this presentation with Tethys Oil. My name is Stian Libstad, and I'm an equity analyst at ABG. And with us today, we have CEO of Tethys Oil, Magnus Nordin, which will be presenting the company to us. Magnus, please go ahead.
Thank you very much, Stian, and thank you very much for this opportunity to talk to you yet again about Tethys. So let's go straight for the presentation. So next slide, please. Tethys Oil. Well, we are an upstream company. We have finances in order, and the business model is pretty simple. We are trying to supply energy to the world as long as oil is an important part of the energy mix the world needs. We do this through the exploration for new resources, the appraisal of known resources, and production of developed assets. Next slide. For the last 10 years, we have been focused on the Sultanate of Oman. We are debt-free. We've been dividend paying since 2015, and currently we produce around 10,500 barrels of oil per day, and we have a very active exploration appraisal program in 5 separate blocks covering almost 50,000 square kilometers onshore Oman. We like to stay onshore. Next slide, please. Oman, located on the tip of the Arabian Peninsula, bordering Saudi Arabia, the United Arab Emirates, and Yemen by land, and by sea, Gulf of Arabia, Iran in the north, and if we continue further to the east, we'll find India. We've been in country since 2006. Production from our 30% interest in blocks 3 and 4 since 2010. License expires in 2040. And then we have 3 exploration licenses. Block 49, where we have 100%, evaluating results for the first exploration period. Block 56, appraising results now in the second exploration period. And Block 58, starting out with seismic. We can continue. All our production in Oman comes from blocks 3 and 4. We saw before pandemic, we were having around 13,000 barrels of oil per day. We have been lower since, hovering between 10 and 11 during the pandemic, and are hoping to come back, have guided for 10.5 to 11 for 2022. Investments are up, and we would expect to see some result from that also in our producing assets in 3 and 4. Continue. But this gives a very robust cash flow and strong financials. In first quarter of 2022, we had revenue of $34 million, giving us an EBITDA of $20 million, a net result of $9.9 million, and ending the quarter with cash in the bank of $54 million. And the achieved oil price for the first quarter amounted to $80 per barrel sold. And as you can see from this slide, we have continually seen our revenue and our EBITDA and all the other numbers increase over the year, primarily driven by the increase in oil price. And of course, for the second quarter 2022, we expect oil prices closer to $100 per barrel. And continue. Compared to 2021, when we had combined revenue of $150 million, we are already, of course, driven by the oil price, but also by a sufficiently sustained production at quite high numbers. Our price is lagging, our sales price is lagging world market by 2 months. So the May price we will realize on our July sales, and the price we will realize on our May sales is where the market was in March. So we are currently in an uptrend for the year so far. Let's continue. As I mentioned, we've been paying dividends and distributed cash to shareholders since 2015. For the current year, the AGM last week approved distribution of 7 crowns per share. A dividend of 2 crowns per share went on record on last Thursday, will be paid out tomorrow. And a share distribution through the redemption share has been approved of 5 crowns per share, and that is pending. If we look at the next slide. The record date is June 2nd to participate in this share split. Then the redemption shares will trade for about 2 weeks between June 3rd and June 17. And on June, trading will cease. So there is an opportunity of either selling the shares or letting the redemption shares go to forced redemption settlement on June 27. And to participate in this distribution of 5 crowns per share, you have to own the shares by June 2nd. Let's continue. So, key to the game we are playing and to all we are doing really is cash and cash generation. We have strong operating cash flow of $20 million for the first quarter. We invested close to $25 million in development wells, but also in appraisal and exploration assets, which ended the year at $55 million worth of cash. And the key to our strength and our success so far has been to, while maintaining financial discipline, continue distribution to shareholders over time, also in a measured way, spending on investments to maintain production, but also to increase reserves and ultimately production. So if we look at the next slide, we have been able to grow our reserves continually as we have produced. And on average, we have been replacing more than what we have produced. Underinvestment during the pandemic led to only replacing 83% of our produced reserves in 2022. We have to rectify that by increased production in increased investment this year. But throughout the years from 2010 and onwards, we still see a very positive trend also in the total resource base, and we actually increased our total resources of reserves and 2P and 2C resources from 40.8 to 41.8 million barrels, and that despite having lower investments during the pandemic period. And all these reserves and resources are attributable to our producing blocks 3 and 4. But we're now starting to see growth potential also in our other assets in Oman. So if we continue, we have a varied portfolio covering 50,000 square kilometers. It's actually almost 20% of the entire landmass onshore Oman. 3 and 4, it's producing assets. It has been production since 2010. 56 is our most exciting and most active exploration appraisal block. 49, we're evaluating a well that found oil, but that we've not been able to produce to surface in 2021. And 58, we are starting out with a seismic program. Let's do some look at some details here. If I could have the next slide. Block 56, to the south of blocks 3 and 4, old seismic data suggests a number of potential oil fields still on the lead stage in the central area, where we have just conducted a modern 2,000 square kilometer large 3D high resolution seismic study to upgrade a dozen leads that we have to drillable prospects. A highly prospective area that is complemented by what we call the Al-Jumd area to the north. This is adjacent to the producing KSF field, right on the other side of the orange line in block 6. And our appraisal efforts are geared at the Al-Jumd area. If I could have the next slide. We drilled 3 wells in the first quarter. Al Jumd 2 horizontal appraisal well into the Al Jumd discovery, which flowed 700 barrels of oil per day on test from a 400-meter horizontal section. The Sahab exploration well, where we encountered oil in three separate reservoir sections, will be tested later in the quarter. And the Sahab 3 appraisal well, where we drilled to 1,200 meters, confirmed oil shows and added oil shows in a new layer that was previously unknown, also to be tested later this year. Al Jumd holds some 12 smallish but potentially quite prolific structures that are, shall we say, an extension of the play in Block 6. Al Jumd so far confirms our expectations. We will put Al Jumd 2 on a long-term production test starting early third quarter. And depending on the test results of Sahab 3 and Sahab 1, we'll see how far we can take the Al Jumd area in the course of in the second half of this year. If we continue. Just a close-up of Al Jumd. It's sort of a chestnut-shaped structure at around 1,800 meters depth. Discovered in 2008, retested in 2019. Flowed oil at both times, reasonably small quantities, 80 to 100 barrels of oil per day. We tried a horizontal section this quarter. They came in very, very well. And total measured depth of 2,032 meters yielded 430 meters of reservoir that produced at 700 barrels of oil per day initial rate. Quite a substantial increase from the vertical well drilled in 2019. We're preparing to drill 2 more appraisal wells starting early third quarter, while the structure will also be appraised on a long-term production test. So far, a very encouraging results, both for this particular Al Jumd structure, but also for the entire Al Jumd area. We continue. 10 years ago, we designated blocks 3 and 4 as a smorgasbord of opportunities. Since then, 3 and 4 has produced more than 100 million barrels and is still producing more than 10,000 barrels of oil per day with a continued exploration upside. We see strong similarities to Block 56, and we do hope that 56 will turn out to be our second blocks 3 and 4 in Oman. Continue. Blocks 3 and 4, this rather complicated slide, shows our 7 producing fields in the green shade. Seismic is being carried out in the blue around the producing areas, but also with an increasing number of leads showing up from the new seismic. Active ongoing exploration. We still see exploration and growth potential in 3 and 4, and that's which well is now complemented by Block 56. Continue. Turn to 58, we move to the west of Oman. This is all defined on 2D seismic, a number of interesting leads. The Fahad lead up in the corner here has similarities with producing fields immediately to the right of the orange line. And the South Lahan, we see a complex of potential leads that need additional 3D seismic. We've just completed a study there, and we're moving on to interpret that and hope to do exploration drilling here later this year. Continue. Thameen 1 was drilled last year in our third exploration block, Block 49. We encountered a 40-meter hydrocarbon-bearing column, so far unable to bring anything to surface. A number of studies has been carried out, and we have until June this year to decide how to move on with the evaluation of Thameen and Block 49. Next slide, please. This concludes really the survey of what we are doing in Oman. We are underpinned by the 10,000 barrels of oil production from 3 and 4 with strong upside. As you can see from this slide of all the license areas in Oman, Tethys' blue licenses are second only to Shell Sultanate of Oman joint venture PDO in green. And we are colleagues with a number of the world's largest oil companies in Oman, which has turned out to be quite a prolific area also for growth after having stagnated in production through most of the early 2000s. To sum up, on the next slide, the Tethys investment case, stable production in excess of 10,000 barrels of oil per day. We are guiding for between 10.5 and 11 for the year. Been dividend paying since 2015, 5 crowns in redemption share, record date 2nd June this year. Cash flow funds all our exploration and distribution to shareholders. Debt-free with a big cash cushion. Strong free cash flow and strong cash flow from operations. Good reserve base, a very active appraisal exploration program, and an exciting testing program in Block 56 in progress. So both for the near term and the long term, we do consider Tethys to be an interesting investment, provided you like oil and gas. And on the next slide, I briefly want to touch on what has always been at the core for Tethys. We're a Swedish company, and sustainability, corporate social responsibility has always been high on the agenda. With increasing opportunity to talk about this, and also in the investment community expecting us to talk more about it, we are producing a more and more comprehensive sustainability report. And just a few highlights here, that we are on an environmental path where we're very conscious of what we are doing. And in particular, in our own operated blocks, we have every opportunity of making any development or any operation with green tinted outlook. And looking at health, safety, and environment, as these numbers also show, it's been at the core of what we've been doing, and we are now talking more and more about what we have always been doing. So leaving sustainability and turning to the second question for investors in oil and gas, oil price. So we could have the next slide. Just comment very quickly on where we are on oil price and what we think is going to happen. I mean, oil price is very much a function of supply and demand as everything else. We saw oil prices drop precipitously after the financial crisis in 2008 and then come back very quickly. Drop again when there was a price war, I should say a supply war between American frackers and Saudi Arabia in 2014. As that abated, prices came back a bit. And then we had another price war that was aggravated by the sharp drop in demand just as the pandemic set in. If we could have the next slide. We're seeing now that demand is ramping up very, very, very quickly. And as the world returns to normal levels, we are seeing demand actually surpassing the pre-pandemic level in 2022. This, of course, is of strong importance for price prediction in the near term. Turn to the next slide. But there are some long-term trends that have been ongoing for almost 10 years now. And I think these are more important than the short-term fluctuations that we are seeing. Next slide. First, consumption demand. We have seen continual increase in demand from the 80s and from early 2000s. We've seen an increase by about 2% a year with a few hiccups in the curve associated with the financial crisis of 2008-09 and also, of course, the pandemic. But the trend is unmistakably there, and we are seeing demand increase, and on average we've seen between 2 and 3% since the year 2000. If we turn to the next slide, known oil and oil fields deplete. And on average, we are seeing depletion of 5 to 9% every year from fields that are currently in production. So investments into new wells, infill wells, additional development wells in known fields, but also exploration to find new resources is needed just to meet the current demand, let alone any increase in demand. If we turn to the next slide, we see that underinvestment has been ongoing since 2014, when we had the first major drop in prices after the price war between Saudi Arabia and American shale producers. From levels close to $600 million a year, $1 billion a year into the upstream sector, we have been hovering. We have not even reached 400 the last couple of years, exacerbated even further during the pandemic. So we have an increase in demand, we have depleting fields, and we have depleting investment. The long-term trend is certainly for higher prices to lure investment back into the oil sector so that we can maintain what seems to be the demand that will be there for the foreseeable future. Turning to the next slide. Renewables are an absolute necessity. The oil industry will not be able to supply a demand or to meet a demand growth of 2 to 3% every year. But bearing in mind that in 2019, still just over 10% came from renewable sources, the rest was fossil, and this includes nuclear and hydroelectric power. So we have a very, very big gap to close to meet existing replacement to a more renewable area, not to mention any continued increase in demand. That said, I say the long-term production trend for oil price is certainly on a strong price note going forward. Turning very quickly to the next slide. This is exacerbated by short-term influences. And next slide. We are seeing the current Russia-Ukraine war affecting Russian export dramatically. And some 5 million barrels of oil from Russia has been more or less disappeared from the market. Next slide. Oil production in the United States is growing slower than expected. Despite increasing oil prices, we are now seeing a fiscal discipline unseen before in US shale producers, where cash flow distribution to shareholders is held higher in esteem than before, when drilling and increasing production was the mantra of the day. With that trend now still firmly in place, US production is not ramping up, and in no sense that it will ramp up in a way that would be detrimental to prices going forward. Next slide. You look at this one, it's rather dramatic, showing the depletion of drilled but uncompleted shale wells in the United States. And it's the sharpest drop we have seen since and the lowest number we've seen since 2013. Illustrates very strongly that the American shale companies maintain a completely different philosophy to fiscal discipline that we've seen for the last 10 years. Next slide. Inventory levels that were building during the pandemic are drawing down at a rapid pace, and the OECD, they're actually lower now than they've been for the last 20 years. And another slide. Long term, the trend is for underinvestment while demand is stable or increasing. Short term, a number of shortages on the supply side while demand is ramping up rapidly. Well, this is the oil price development from 88 to 22. We reached a high of $128 per barrel so far in 2021. I would say the short-term risk is definitely on the upside, and on the long term, we would expect average prices to be in the higher end of what we've seen historically than in the lower end. On that note, thank you very much for listening, and questions, please.
Thank you for the presentation, Magnus. I have a quick question. As you talked about, you reported some very encouraging results from the Block 56 appraisal well in your Q1 report, an asset that could be a play opener for the block and also diversified production beyond the Block 3 and 4. Can you talk a little bit into what the road towards commerciality for the block looks like? And also, if we assume that the asset is commercial, what would the development look like in terms of infrastructure needs, for example?
Certainly. Okay, if we start at, as I mentioned, there are two areas really within Block 56. The assumed area is the one furthest along in bringing it on to commercial production. Depending on the results of the long-term production test and also of the additional horizontal exploration drilling, we should later in the year be able to establish a resource base, hopefully based on those results. And depending on where we come in there, we may know how close we are to actually establishing a long-term production profile and outlook for Adjunct. If the wells, the Sahar and Sahab well test well over the next couple of months, that would give an added boost to the entire Adjunct area. And hopefully we could see within, maybe before the end of the year, we should be in a position to be much more clearer on the potential and also the near-term potential of getting production out of the Adjunct area, Block 56. We are quite close to infrastructure in Block 6, and most likely an early production system would truck oil to offload facilities in Block 6. We talk 10, 20 kilometers only. So it's a rather simple operation. For the central part, we are looking at potentially much more prospective volume. As I mentioned, we have some 12 leads identified on Vinch's 2D seismic. We have concluded seismic study and processing and interpretation will take probably 5-6 months. And by the end of this year, we should be in a position both to come up with a drilling program for next year and with some ideas of how many prospective or drillable prospects we've actually been able to mature from that area. So with the let's say Adjunct could be a fast track to first early production, long-term production testing, but also to more long-term production in 56. And the central area could hopefully unlock potentials that may be, as I mentioned, similar to what we've seen in Blocks 3 and 4. But that's yet to be determined. But we do consider it to be a new smorgasbord of opportunity.
Great, thanks. Lots to look forward for the next couple of quarters. And I think actually maybe a quick last question. Your balance sheet also looks very strong now with a net cash position of 51 million, as you mentioned. You are of course paying dividends, but are you looking at any other opportunities to allocate the cash, M&A for example?
We are certainly, absolutely. I mean, we are evaluating opportunities all the time. We prefer to stay onshore. We know onshore environment. If something goes wrong, if you need to rectify something, it's a lot easier to do on the onshore patch. And when we look at other opportunities, we have to bear in mind that we have good fiscal terms in Oman. We know Oman quite well, and we have a lot on our plate in Oman. Yep. So anything else we look at has to stand up to offer has to stand up in competition to what we're doing in Oman. So certainly we could look at a country entry somewhere else at maybe a lower investment threshold. But given the position we have and the opportunities we have, It's not easy to find something that stand up to those criteria that we have to meet, but we are looking.
Makes sense. Yes, I think we have reached the end of this session. So thank you very much, Magnus, for the presentation and Q&A today. And thank you to all who listened in. Have a good day.
Thank you.
Thank you.
Hej och välkomna till nästa presentation här på ABG Investor Days. Mitt namn är Simon Granat och jag jobbar som analytiker på ABG där jag följer IT- och teknologibolag. Och med mig idag så har jag Daniel Krok som är vd på Bredband2 som under de nästkommande 20 minuterna ska ge oss en introduktion och även uppdatering av Bredband2. Och därefter så kommer vi att följa upp med en kortare frågestund. Så med det sagt så får du gärna påbörja presentationen, Daniel.
Toppen, tack för det. Och som nämndes här heter Daniel Krok och är vd sedan 15 år tillbaka. Så det har varit en lång och spännande resa. Och vi har massor av bra saker framför oss också. Så att vi kan ta nästa sida. agendan är att titta lite på vad vi gör på Bremer 2 och sen varför det kan vara intressant att investera i bolaget. Så har vi en ny rapport som kom ut här för bara någon tid sedan för att uppdatera sig kring siffrorna. Och sen gjorde vi ett förvärv slutet 20 som kan vara värt att titta lite närmare på. Då om det här bolaget A3, vad vi har gjort och vad vi har för planer framåt. Och sen en spännande frågestund får vi hoppas. Jag tar nästa. Kassaflöden, det är ju såklart väldigt viktigt och vi har ju en stor fördel av att i princip alla intäkter är återkommande intäkter. Både på privatsidan och företagssidan så är det ju i abonnemangsform, vilket genererar starka kassaflöden. Och det är också så att vi har mycket av faktureringen som ligger i förskott, vilket är bra. Både ur en minimerad risk om eventuellt kunder väljer att avsluta sin abonnemang eller att de kanske väljer att inte betala och så vidare, så kan vi stänga tjänsten och ta bort kostnaden innan vi, i samband med att vi tappar intäkten helt enkelt. Men också, ju mer vi växer, ju snabbare accelererar kassaflödena. Vi kan trycka vidare, tack. Och i samband med då det här förvärvet av A3 så är vi nu tredje störst på fiber. Det är Telia som är störst och det är Telenor som kommer 2 och därefter är vi som 3, där vi närmar oss 500 000 kunder. De flesta är såklart privatkunder. Vi har en omsättning som är 70% privat och 30% företag. Och den totala omsättningen är dryga 1,5 miljard. Historiskt har vi växt väldigt bra på egen maskin. Vi har haft organisk tillväxt genomgående fram till det här förvärvet av A3. Och blickar vi framåt så är det klart att vi är fortsatt intresserade av att titta på förvärv. Men just i år så känner vi att vi vill landa lite och se till att vi kommer tillbaka till en stark organisk tillväxt. Och vi har under förra året också jobbat mycket med att utvinna de här synergierna som vi såg ut på marknaden. Och de slår väl igenom som mest nu i detta året. Kan ta nästa. Det allra viktigaste är såklart personalen. Att alla medarbetare känner att vi brinner för bolaget, vi vill mer än våra konkurrenter och att det finns en spännande resa här att man kan utvecklas som individ, du kan bygga kompetens och du kan få vandra vidare i bolaget. Och vi har haft fördelen av att vi har växt väldigt, väldigt mycket så att det har öppnats upp nya möjligheter för många medarbetare. Vilket är en väldigt viktig del av bolagsstruktur idag. Och i samband med förvärvet av A3 så blir det också väldigt viktigt att vi ser till att vi får in alla i samma gemensamma bolag och att vi har ett gemensamma mål att drivas mot. Så det är någonting som vi jobbar intensivt med, att få en stark kultur tillsammans. Kan jag ta nästa? Och tittar vi då på både kund- och omsättningsutveckling sedan de här egentligen 15 åren tillbaka så har vi ju kommit in på marknaden när vi såg att fiber är ju någonting som definitivt kommer vara viktigt för framtiden. Och då har vi ju följt också mycket av den här utrullningen av fiberinfrastruktur på marknaden och kunnat bygga våra tjänster i samband med den och växt både från privatsidan och företagssidan. Och det har ju varit, om man tittar tillbaka i tiden så har det ju varit allting från små lokala operatörer till regionala operatörer till de som då har växt till sig och blivit täckande på svenska marknaden. Men generellt sett kan man säga att det är egentligen lite för många operatörer. Nu har det ju skett en hel konsolidering, men jämför man med andra marknaden så är vi rätt så många operatörer på marknaden. Men det finns också en annan typ av dynamik eftersom fiberinfrastrukturen och annan infrastruktur är tillgänglig för alla. Och då gör det också att det finns förutsättningar att komma upp och slåss mot de stora aktörerna, vilket ju alltid är spännande. Men vi såg ju att A3 som hade motsvarande omsättning som vi var den perfekta matchen. Vi hade liknande struktur både när det kommer till omsättning och produkter och tjänster och så vidare. Och de var lite starkare upp i norr och vi lite starkare nere i söder. Så att det var så den perfekta matchen som vi lyckades genomföra. Och det är det som vi ser på de här staplarna när de har växt de senaste åren. Vi kan ta nästa. Och tittar vi på Sverige så är det som nämnt då Telia som är den största aktören. Och de har ju till stor del växt på egen maskin med sitt varumärke. Och sen har vi då Telenor som har förvärvat in ett antal varumärken under resan. Allting från tidigare tillbaka till Glocalnet och vi har ju Bredbandsbolaget och vi har ju Ownit och diverse olika bolag som har förvärvats in i den delen. Och sen så har vi som ursprungligen växt organiskt men nu då med A3 har tagit en tydlig tredje position. Och sen har vi ju Bahnhof som egentligen är den som har mest lik struktur som vi på marknaden. Och även Comhem och Tele2 som nu är ju ett och samma. Där har de ju också påbörjat en fibrilisering av sin infrastruktur som annars från Comhem-sidan är till stor del coax-miljö. Vi kan ta nästa. Tittar vi på produkter och tjänster så är datakommunikationsbenet absolut dominerande. Både på privatsidan och företagssidan. Men med A3-förvärvet så har ju telefoni- och växelsidan blivit en större och viktigare del, framförallt på företagssidan. De kommer ju ursprungligen från det hållet och har väldigt mycket kompetens och kunskap inom det området. Vilket är en perfekt match också där att vi kan jobba med våra befintliga kunder och se till att vi växer affären med en bredare produkt- och tjänsteportfölj. På datacentersidan, där har vi erbjudandet till kunder. Vi har ett eget datacenter i Malmö, men normalt sett så är strategin att vi vill undvika framtunga investeringar. Vi vill inte liksom gräva ner passiv fiberinfrastruktur. Vi undviker att gå in i datacenter som kräver väldigt mycket kapital som man låser upp, utan vi vill ju vara rörliga på toppen och bygga våra produkter och tjänster och kunna förflytta oss snabbt utifrån hur marknaden rör sig. Och det finns väldigt mycket kapacitet i olika datacenter runt om i Sverige som vi hyr in oss i. Och sen har vi säkerhet som vi ju alla har noterat att det såklart händer väldigt mycket. Både för individer och privatpersoner och på företagssidan. Och man kan väl säga att framförallt på mindre och medelstora företag så är fortfarande kunskapen kring det här väldigt, väldigt låg. Trots att det finns väldigt mycket i media som skrivs om detta så händer det väldigt mycket som vi inte får egentligen tillgång till. Och här är vi ju måna om att kunna erbjuda en trygg och säker digital miljö och värld för både våra privatkunder och våra företagskunder. Och att vi bygger en säker miljö i detta. Och här har vi både börjat investera en hel del i det. Vi vill undvika konsulttunga tjänster och fokusera på mer mjukvarubaserade tjänster som är nära kopplade till vår infrastruktur. Och vi har även börjat rekrytera in en hel del kompetens kring det här området och har startat upp ett antal samarbetspartners. Så det är en väldigt, väldigt spännande resa och en breddning av produkt- och tjänsteportfölj. Vi kan ta nästa. Det här är väl lite kring just de här. Det finns olika typer av säkerhet. Det ena är ju såklart att man ska ha en stabil uppkoppling alltid. Tillgängligheten ska vara hög. Men sen är det ju den faktiska säkerheten från att undvika att man får attacker eller att man får intrång och liknande. Och då gäller det att man helt enkelt vill stötta kunderna detta. För det är en komplex materia och komplex värld och inte jättelätt om du kommer som en entreprenör och du brinner för någonting och du vill bygga ditt bolag. Och ska du helt plötsligt sätta dig in i den här typen av saker som man tar för givet att det bara ska fungera. Och det är precis så vi vill att kunderna ska känna. De ska vara trygga och vi löser det. Kan ta nästa. Tittar vi på då den senaste rapporten. Vi kan egentligen hoppa till nästa direkt. Så har vi ju under året som nämnt jobbat mycket med att få ihop bolagen. 2021 handlade om att utvinna synergier och få ut de marginalerna som vi såg att vi bör kunna få. Både på EBITDA-nivå och på EBIT-nivå och även på bruttomarginalnivå. Så det har ju varit ett arbete och där ser vi att under förra året så tydligt från kvartal till kvartal där vi landade i fjärde kvartalet. Och så har vi också uttryckt att fjärde kvartalet förra året speglar väl ingången i detta året. när vi då har utvunnit de här besparingarna. Och även då kan man förvänta sig att det är de nivåerna som vi kommer jobba med framöver under året. Även om vi så successivt vill se att vi får förbättringar hela tiden, även på marginalsidan. Men det är tillväxten som är i fokus 2022 mot att vi var lite mer inåtriktade under 2021. Och vi, som nämnt också med de starka kassaflödena, höjde utdelningen till våra ägare. Där vi väl också ser att vi har ju inte, återigen som nämnt, så mycket framtunga investeringar, utan vi är ganska rörliga, och gör vi infrastrukturinvesteringar mycket kopplat till hårdvara, så det är också i princip alltid kopplat till att vi får ökade intäkter. Vi kan ta nästa. Om vi då tittar, vi kan ta ett steg till. Om vi då tittar på det här förvärvet som ju utifrån sett absolut kändes som den perfekta matchen. Och det var det verkligen när vi också kom in och fick se vad som fanns inne i bolaget. Omsättningen blev den dubbla, vilket såklart per automatik gör att genom att vi har en annan effektivitet i organisationen. Man kan väl säga det också att om man tittar på Bredband2 och de nyckeltalen som Bredband2 hade innan den här sammanslagningen, så hade A3 vissa utmaningar med att få upp lönsamheten och även tillväxten. Och det var ju det såklart som vi såg, att om vi kan få in Bredband2s struktur i detta och nå de marginalerna, så finns det såklart en otroligt intressant hävstång. Och det är precis det som vi ser att vi har kunnat realisera på ett bra sätt. Och därför blir det såklart också intressant att fortsätta titta på förvärv. Vi gjorde ett lite mindre köp av faktiskt 20 000 privatkunder från Thing i slutet av förra året, som också är en del. Och det är ju också en sån här exakt affär som vi kan ta över kunder utan att vi får ökade kostnader i bolaget. Men tillbaka till A3. Vi hade den här geografiska spridningen. Vi får mycket starkare säljkår också, som är mer välspridd över både Stockholmsområdet och i Umeå, så att vi får en bredd över Sverigekartan, vilket är viktigt och bra i sig. IT-service, alltså konsulttunga delar, har vi valt att sälja bort. Vi har en annan profil på våra säkerhetstjänster som jag också tog upp där tidigare, som är mer mjukvarubaserad. Och det är ju på grund av att hela Bredband2-struktur handlar om att vi vill ha så rena paketeringar på alla produkter och tjänster som möjligt. Se till att vi får volym och att vi har en hög effektivitet i bolaget. Det är det som skapar lönsamhet, och det är det som också gör att vi kan ha en aggressiv prissättning mot marknaden och hålla bra marginaler. För det är viktigt för oss att kunna vinna mark på det sättet. Att vi kan vara effektivare än de större och se till att vi är mycket mer precisa i det vi gör. Och sen har vi då telefonin som vi fortsätter bygga vidare på. Vi kan ta nästa sida. Andra saker som var väldigt viktiga var att vi tidigt bestämde oss för att ha ett varumärke, Bredband2. A3 har tidigare jobbat med fler varumärken, men det skapar en väldigt hög komplexitet. Det slår, liksom, du måste ha 2 marknadsföringsaktiviteter om du har 2 varumärken. Du måste ha systemlösningar som hanterar 2 varumärken, som ökar komplexiteten. Du har personal som måste jobba med olika hattar. Det är 2 olika varumärken och så vidare och så vidare. Och det bestämde vi tidigt att vi vill gå all in på ett varumärke och se till att det blir riktigt starkt. Vi behåller marknadsföringsbudgeten, men det innebär också att den mer än dubblas jämfört mot vad den har varit tidigare, mot just det varumärket. Och även på systemsidan, att vi har ett system som ser till att vi håller den effektiviteten som vi har vunnit väldigt mycket på historiskt inom Bredband2. Och där gjorde vi snabbt migreringarna från privatsidan in i ett system, vilket ökar hela den effektiviteten. Och sen på företagssidan så gör vi successiva migreringar över i detta också. Organisationen gjorde vi tidigt ganska stora förändringar för att komma i den strukturen som vi såg var den logiska. Och sen har det varit lite små justeringar längs resan, men under 2021 kan man säga att vi faktiskt har landat det på ett bra sätt. Och nått just upp till den personaleffektiviteten som vi såg att vi skulle uppnå inför årets slut. Och på marknaden så är det egentligen säkerhetsspår som är det viktigaste för oss att bredda oss till. Och alla delar i bolaget handlar ju om volym. Med den ökade volymen så får du ut bättre marginaler och du får ut starkare kassaflöden. Och det är det som är drivet 22. Organisk tillväxt under 2022. Se till att vi breddar produkt- och tjänsteportföljen. Vi har precis faktiskt idag fått ut mobil till privatkunder. Vi har nyligen släppt en uppdaterad VPN-tjänst till privatkunder. Och vi har även då nyligen släppt streamingtjänster ut mot marknaden. Så att bredda produkt- och tjänsteportföljen på privatsidan, och vi har ju redan genom förvärvet breddat delar på företagssidan som gör att vi kan med befintliga kunder också se till att få en ökad tillväxt och försäljning. Vi kan ta nästa. Då var vi framme på frågestund.
Strålande. Tack så mycket för den presentationen, Daniel. Mycket intressant som alltid. Jag tänkte att vi kan börja frågestunden kring prishöjningar, för det är någonting som har skett gradvis på marknaden de senaste åren och kanske i synnerhet det senaste året. Skulle du vilja berätta lite hur ni är positionerade gentemot era konkurrenter vad gäller priser och också hur du ser kring potentiella prisförändringar framöver?
Ja. Alltså, om man tittar ett par år tillbaka så hade vi en situation där nätägare höjde sina nätavgifter relativt mycket. Det var då IP-only och även Telia som var stora nätägare som drev upp prisbilden. Det påverkar oss på det sättet att då behöver vi gå till våra kunder och höja prisbilden, och det skapar liksom en rörelse. Sen har vi sett att det har minskat och att man inte jobbar så mycket med just prisökningar från infrastrukturen, vilket är positivt. Och däremot med de olika konsolideringarna som har skett, både stora som små. Vi tillsammans med A3, det var ju 2 varumärken som försvann från marknaden. Sen så förvärvade vi Thing, kunderna, så 3:e varumärke som försvann där. Och sen har vi då kom hem till 2 och ett antal andra konsolideringar på marknaden har gjort också att marknaden börjar mogna och sätta sig, och därmed också en sundare prissättning på marknaden och även sundare kampanjaktiviteter. Även om det är hög konkurrens alltid på konsumenttjänster, så ser vi att prisbilden har gått upp successivt, vilket såklart är positivt och någonting som man ändå kunde se tillbaka i tiden att det bör vara det scenariot när marknaden mognar också. Vi är ju dock måna om att hålla en bra prisbild och vara aggressiva på konsumentmarknaden. Och det kan vi göra eftersom vi har en helt annan både organisation och effektivitet med fokus på de produkterna och tjänsterna som vi har ut mot marknaden. Där vi ändå kan hålla bra lönsamhet och marginaler. Så vi ser att den generella prisbilden har ökat, vilket det har gjort för oss också. Men vi är fortfarande, om man ser på hela marknaden, måna om att kunna hålla en bra prisbild. För det är viktigt i köpbeslutet för många kunder. Däremot när kunderna har varit kunder under en tid, så är det ju helt andra faktorer som spelar roll. Då är det ju hög servicenivå och att man är nöjd med både tjänsten och att det är en fungerande tjänst och de produkterna och tjänsterna som man eventuellt lägger till sin huvudtjänst. Och här har vi en ytterligare resa att jobba med, kan man säga. Alltså när det kommer till att öka produkter och tjänster till de fiberkunderna vi har.
Mycket intressant. Du var inne lite på kampanjkostnader med mera. Hur har dessa förändrats, det vill säga kundanskaffningskostnaden för att få in en kund? Hur har den förändrats de senaste åren och framöver? Ser du att den kommer komma ner eller upp och ner för att det är färre aktörer på marknaden? Det börjar konsolideras, man är lite mindre prisaggressiv på att ta in nya kunder. Eller snarare att det kan bli dyrare för att det är färre kunder som inte har en aktiv fiberanslutning?
Man kan säga att det har ju, som jag nämnde här, blivit lite mindre aggressiva kampanjer. Och det som skiljer sig nu kan man säga att det rullas inte ut lika mycket ny fiber som blir liksom en helt ny marknad. Det är många som har tillgång till fiber som fortfarande inte har valt att gå över på fiber. Det sker ju en successiv förflyttning. Men det blir ju i högre grad att det blir en konkurrens mellan operatörer att liksom ta kunder från varandra. Och då kan det vara lite andra faktorer som spelar roll. Det blir också lite mer, om man säger, riktade kampanjer till tydligare segment. Också kanske i samspel med andra tjänster. Vi har till exempel haft ett samarbete nu med Viaplay. Där vi hade 12 månader gratis Viaplay för nya kunder. Vilket såklart är väldigt attraktivt. Så sådana samarbeten blir vanligare och vanligare och viktigare än att du bara liksom går in och säger hej, du har 6 månader halva priset eller du har 4 månader gratis och liknande. Så att det blir en liten förflyttning i hur man jobbar med kampanjer och vad man riktar dem.
Och hur ser du på churn rate på marknaden och kanske i synnerhet hur den har utvecklats för er de senaste åren? Jag vet att den kom upp lite i föregående år, givet att ni jobbade så pass mycket på att få ut kostnadssynergier och jobbade för att få upp marginalen i A3, vilket var väldigt lyckosamt måste man säga nu i efterhand. Men hur har churnen utvecklats det senaste kvartalet, om du kan gå in lite mer på det?
Ja, vi kan säga precis som du nämnde, så när vi gör förändringarna, alltså vi byter varumärke för kunder och så vidare, så blir det ju en rörlighet där man, och det var ju det vi räknade med också att det skulle bli. Men vi såg ju samtidigt att det ganska snabbt satte sig. Och jämför man nu hur churnen var när det var 3 varumärken, eller till och med ett fjärde om man tar Thing, jämfört med vad vi har nu när vi har gjort alla migreringar, så har vi en avsevärt mycket lägre churn. Och det beror ju också på att, jag menar, kunderna, vi kan ju jobba mycket mer kvalitativt med kunderna i all kommunikation och all dialog och all service och så vidare, som har stor påverkan. Så att churnen känner jag att den har vi absolut minskat. För det viktiga för oss nu är att se till att vi får liksom upp bruttointaget med nya kunder. Och att vi jobbar med befintliga kunder för att breda produkt- och tjänsteförsäljningen till befintliga kunder.
Låter som en mycket spännande framtid. Tyvärr har den här sessionen nu tagit sig mot sitt slut. Jag vet inte om du har några avslutande ord som du förmedla.
Inte mer än att vi ser väldigt mycket fram emot att fortsätta jobba aktivt under detta spännande år som vi har framför oss.
Det ser vi fram emot att följa. Stort tack för att du medverkade idag, Daniel.
Tack så mycket.
Hi and welcome back to ABG Investor Days. My name is Simon Jönsson and I'm an equity analyst here at ABG, covering IT and gaming. Next up, we have Erik Roman, CEO of Awardit. With that said, I will leave the floor to you, Erik.
Thank you very much. Hi, I'm Erik Roman. I'm the CEO of Awardit. And I have been the CEO of Awardit since 7th of March this year, so a couple of months. And my background is primarily in online retail and services. I have been with EssilorLuxottica, Smarta and Betsson, to name a few. And this is my first full quarter with the business, having just reported Q1. And I will start by talking a little bit about Awardit as a company. And we are a market leader in the Nordics in loyalty programs and gift cards, where we offer a full ecosystem within these two areas to our customers to improve sales, retention, customer loyalty, and profitability. And we work with everything from strategic advising around loyalty programs and gift cards, all the way to setting up the programs, designing the programs for our customers, enabling the programs through giving access to our SaaS-based platform, and also fulfilling the programs with products and services and customer support. So providing everything within the spectrum to make sure that our customers can run successful loyalty programs and gift card programs. And the business was founded in 1999. We went public in December 2017 and has since then made 10 acquisitions where we have enabled this full scope of services within loyalty and gift card programs. Today we are 135 employees and we have offices in Stockholm, where our headquarters are, in Gothenburg, Copenhagen and Hamburg. And I will talk a bit more about our different business areas later on in the presentation. But today, as I said, we are the largest company within this segment in the Nordics. And we believe that provided strong organic growth this year, we could be able to reach 1 billion revenue SEK this year. So we have a pro forma revenue of a bit less, obviously, but we see strong growth coming in from the first quarter and also continuing beginning of second quarter. So our ambitious target is to be a 1 billion revenue company this year. And our vision, a bit more long-term, is to become one of the absolute leaders in Europe within this segment. And we believe that we have a strength in building strong customer relationships, loyalty, and also improve our customers' profitability and sales through different kind of programs. And we can see that we have a very fragmented European market where we can provide these services moving forward. So we believe that we have a strong position today in the Nordics that we can expand further in Europe. We have a SaaS toolbox that is built together by our acquisitions that enable us to work full scale within these segments. And that's a very strong platform that we can continue to enable and drive new business on moving forward. Today we have 250 plus programs where we reach more than 15 million customers, primarily in the Nordics, with our programs. And we have historically and continue to see strong organic growth in our programs, and also a rising profitability from adding scale to our programs and adding different parts of the ecosystems onto the programs. And as I mentioned, we have done 10 acquisitions since we made our IPO in 2017. And just talking a little bit about our markets that we operate on. Within the gift cards market, we see a strong growth across the world. And that's driven by, of course, the rise in mobile and mobile adoption across the world, digital solutions for mobile, and also a move from using physical gift cards to digital redemption codes, awards, and gift cards. So we see a continued strong growth in gift cards as a market and in different kind of use cases as well, where gift cards a couple of years ago was something that you handed out as a physical coupon, and today it's more about how can you put out digital currencies that enable transactions for your customers. So strong growth in global gift card market moving forward, and we see that also here in Europe and in the Nordics. Also for loyalty programs, we see a strong growth driven by a need for customers to work more with their loyalty and their retention activities with their customers, where even in tough times, it's very important, of course, to be a strong provider to your customer, where you can add value through loyalty programs. You don't need to work as much with discounts and lower pricing, but rather add other benefits to your customer base. So that is also a growth segment that we're operating in. And as I mentioned, we have done 10 different IPOs, 10 different acquisitions since the IPO in December 2017. And to point out a few, we made an acquisition of Crossroads in November 2018, and that enabled more of a fulfillment side to Awardit's loyalty programs, where we now work with both our own warehouses with products, shipping to consumers, and also cross-docking solutions. But the combination of Crossroads and what we had before in Awardit made this possible. We acquired Retain24 in late 2019, and that is enabling the cards processing side of the business, and our first major step into the gift cards segment. And that is where we sell a lot of our retail customers' cards and also give access to the processing of cards in a full ecosystem towards our clients. In April 21, we acquired MBXP, which is also a gift cards business, and where we also have another side of our gift cards business in terms of branded products, such as iTunes gift cards, and also private label products, such as our Den Beste Gave gift cards with hotel experiences and different kind of gifts that you can give away and redeem for experiences. And also, just to mention Premier Direct, end of last year, which is our first acquisition outside of Nordics, and gives access to the German market, and is more of a fulfillment partner in loyalty programs on the German market. So basically, building ecosystems within the Nordics, and now looking at how to continue to build this outside of the Nordics. The strategy in how we approach our customers is that we actually offer something that can enable loyalty and customer satisfaction amongst consumers, businesses, resellers, and employees. So we have a broad spectrum of products in our portfolio for our customers. And I will talk a bit more about the business model, how that works later on as well. But mainly, our customers are looking to achieve a greater share of wallet from their customers. You know that customer, on average, has a spend of X SEK every year for certain products. Of course, you want to ensure that the customer is using as much of that in your shop, in your retail chain. So adding a loyalty aspect to a customer program, of course, enables that without giving discounts, as I mentioned before. Also, customers usually are looking to increase customer lifetime, obviously, and reduce churn. So rather than spending more and more money on acquiring new business, we are actually making sure that you have a very healthy business model of the existing customers. And also, we are helping customers to establish more responsive, better communication to the customers in the loyalty programs, where we actually help our customers to define what kind of communication to run. We have a reason to communicate to the customers in the loyalty programs. So that's also something, a service that we provide to our customers. And we also have, within our ecosystems, the possibility to add other value-added services to the loyalty programs, where you, for example, not only can earn point through the loyalty program owner, but you could also earn points from partners that are in the network that we have. So as an example, if you are in a customer club buying a certain kind of product, you can also get points from fueling your car at a gas chain retail network for that loyalty program. So we offer a broad range of partnerships that we can add on to the loyalty programs that our customers can access. And also we have programs to stimulate staff and employees using the same kind of levers and mechanisms. So moving on to talk about how the business model works. We divide our model into primarily loyalty programs and gift cards, as I mentioned. We also have the partnership model that I just described. And in loyalty, we have B2B programs and B2C programs. In B2B, the end user of the program is a business or a business owner. Our customer is someone that provides the program to a business. In B2C, our customer provides the program to an end consumer. And the partnership is where we add on services to these programs. And we have multiple revenue streams within loyalty programs. We have setup fees that we get from setting up the programs. We get monthly fees from working with the programs and access to our platforms. We earn revenues from sale of points within the programs, from selling products within the program in the loyalty marketplace, and also from advice and customer support, etc., that we provide to our customers. In gift cards, we also have the setup fees and monthly fees from our customers, but we also have loading fees where we earn revenue from every card loaded, no matter what sum is loaded onto a gift card. We have different kind of commission models to access our processing platform, which enables all the transactions for gift cards. For our private label products that we own and where we have the brand in our ownership, such as Supergift, we also have breakage for non-redeemed cards that are bought. And also here we provide services and advice to our customers. For the partnership model, we earn commissions when we enable transactions. We earn revenues from selling points within the partnerships, and we also earn from setting up campaigns within the partnerships. And looking at some of the private labels that we have, products that we own ourselves, we have a portfolio of those, and we are looking to also, of course, to add on products to this portfolio moving forward. But I can add Supergift as one good example of a product that we have added on top of what we had before in Retain24. So Supergift is a compounding gift card. You buy one gift card and you can redeem it for several others. But we own the concept of Supergift ourselves, and therefore also we get the breakage for unredeemed Supergift gift cards. Same thing goes for the Beste Gave, which is the experienced gift card I mentioned on the Danish market, and City Break. We also have a MasterCard product, Paygo, where we have a preloaded card and a reload card sold mainly through retail today. Historically, we have seen strong organic growth up until 2017 when we made our IPO. After that, we've seen a combination of organic growth where we continue to grow pretty much every year steadily, except for 2020 when we had a setback due to the pandemic. But we also added quite a lot of non-organic growth, of course, through the acquisitions. And the revenue last year was 529, including some late acquisitions in the year where we added actually Premier Direct in December. We also have a strong earnings growth. So you can see a sort of earnings coming down as a percentage while adding some new business areas, but over time growing in all of the businesses that we have added pretty much. In Q1 this year, we saw compared to last year growth of 170% almost, including the acquisitions made last year. Our organic growth, if we exclude MBXP, Inspiration Company, and Premi Direct, that are not organic to us, we had a 40% growth in the business compared to Q1 last year. And we are seeing continued growth in April of more than 30%. And you can also say that Supergift as a product saw a growth of more than 100% in Q1. And we see a continued growth in Q2, which is very good for us because it's a very profitable product. And also we have, as I mentioned, the breakage coming from that 1 year after it's put out on the market if it expires. Also, we actually had a negative impact on the German market in Q1, as we saw lots of movements in the German market within the energy sector, where we had some customers being affected of new market conditions, where they then postponed campaigns onto later in the year. So we had an effect of around 15 million in less revenues than expected from that in Germany in Q1. And on the EBITDA side, we delivered 5.7 million SEK in EBITDA in Q1, which is slightly less than last year. Last year we delivered 6.6 million SEK. And in this, we had some one-off events happening in Q1 this year. We had a pricing error on one of our platforms that happened while migrating technically customers that had a negative impact of 1.4 million SEK. Very unusual for us and will not happen again. Also, we had a customer bad debt loss of 2.5 million SEK in a quite unusual deal being made in 2020 that we now see we will not get back. So we had a write-off of 2.7 million in Q1, which is also very rare to the business. So a negative one-off effect of 4 million. Also, we had, from the loss of revenues in Germany, a negative effect of 1.4 million SEK in the quarter, while we also had a negative effect from MBXP, our new acquisition, which was fully in line with the seasonality of that business, but taking down the results of the quarter by 1.4 million SEK. So basically, looking at if we would adjust for these one-off effects, we would have had an EBITDA of 9.8 million SEK, which is 48% up to Q1 last year. And to me, a very strong side of the business is still the organic business growing by 40%. And also, we see that if we take away the acquisitions and look at the organic business, we also have a growth in gross profit margin, where we had 30% gross profit margin last year in Q1. This year, we had 31.2% on the same organic business. And obviously, we knew that when adding acquisitions to the business, we would take down the gross margin percentage on the business. And if you look at the 3 acquisitions for the quarter, MBXP, Premi Direct, and TIC, they were dilutive to the total gross margin, and they had a gross margin of 24.1% combined for the quarter. And we will see, of course, now also the gross margin of these businesses improving moving forward quarter by quarter, where the seasonality is that in Q1, MBXP is not profitable. In Q2, Q3, they are stable and profitable, and then they are highly profitable and scalable in Q4. So basically, the core business is in good shape, growing and with strong margins. And we are not at all worried about the MBXP business. And then we are keeping a very close eye on the German business to make sure that is up to the revenue levels that we want as soon as possible. And to summarize, I believe we are very well positioned for continued success with the business. We have integrated around 50% of the TIC volume. onto the Awardit platform. So we continue now, obviously, and aim to have everything done in the autumn. Then we have all the tick volumes on the Awardit platform and gain all the synergies from that acquisition. In Prämie Direkt, we have initiated projects to identify procurement savings, where we obviously buy the same kind of products in the Swedish business as in the German business, and can make savings and strengthen margins through combined purchasing. We see a continued strong organic growth, as I mentioned, and we are continuing to work on business-oriented synergies across the group. One example is adding gift cards from our different areas into our loyalty shops to improve the offering in there and strengthen margins. Another one is launching Supergift end of the year in Germany to strengthen the position of Prämie Direkt on the market there. We're also working a lot with business development and seeing how we can establish new kind of partnerships with card linking and open banking systems to enable even broader networks of partners to give value to our loyalty programs. And we continue to see a strong growth of customers coming in, both on the loyalty side, where we add new cases, and we have a list of prospects that are highly interesting, but primarily also on the gift card side, where we continuously add customers in our retail segment and in our branded and private label segments. We are also continuing to look at additional value-creating acquisitions. We have a rather strong cash position, so we believe we are in a good position to continue our journey to find strong combinations to the business that we have, while adding value to the business. And our vision to become one of the absolute leaders in the European market on the full ecosystems of loyalty program solutions and gift card solutions. So, and I believe that we are only in the beginning of this journey. We are strong in the Nordics. We have a first foot onto the German market, but we still have a lot to do. So thank you for listening, and that's that from me. Thank you.
Thank you, Eric. And to start off, I think it's good to see that the underlying organic Awardit is performing well. And I think if you adjust for the temporary revenue losses in Prämie, I think you can correct me, but that the acquired businesses are performing pretty much in line with your predictions.
Yes.
Is that correct?
Yes. So MBXP is performing in line with our predictions. And we know that it has a different seasonality than our core business has. And that's driven a lot by increased sales in Q4 and increased redemption in Q1. So that takes down naturally profitability in Q1, and especially in January and February. So we see that the business is back to profitability in March and April, so which follows the natural cycle of that business. In Prämie Direkt, it's delivering not fully in line with expectations, obviously because of the postponed campaigns that we have seen. And we are now working on 3 different fronts, basically, to offset that revenue loss. We are working hard to make sure that these campaigns are indeed actually executed later in the year. So we hope to see these campaigns that were postponed come up and being run as soon as possible, of course. But I believe that will happen not in the second quarter, but rather in the third and fourth quarter for these specific customers.
And what are the customers saying to you about those campaigns right now?
So they are saying that they need to recalibrate their spend in the campaigns and their customer acquisition costs, how they calculate the customer lifetime revenues, etc. So they need to postpone the campaigns while they are recalibrating sort of their marketing efforts. But this, they tell us, this will be done after Q2, so they can start the campaigns again after Q2 in second half of the year. So of course we're having a close dialogue with these customers to make sure this happens. But at the same time, we're also working on finding new cases and new customers, and we have a quite broad network of existing customers from before and customers that we know are prospects and should be interested. So we're working to find new campaigns, new customers to offset the loss in revenues. And we're also working to make sure that the campaigns that we have planned with customers for this quarter and the coming ones are as big as possible. So looking at how we can add volumes to campaigns that are already planned. And we believe that if all this can happen, we will be on a strong sort of Q3 path. So, but we're following up now closely, of course, to make sure that we get these revenues in.
All right. And turning to the future, I know you have ambitious plans for both Germany and other parts of Europe. And now with the Premier, you have a foothold in that region. So how do you plan to expand on that initial foothold you have in Germany right now, both organically and also through potential new M&A?
So in Germany today, it's quite important to state that Premier Direct is working mostly on the fulfillment side of loyalty programs. So they are not running to the same extent that we are in the old sort of awarded business, the full-scale loyalty programs, including the earn modules and the full technical integration with customers. So they are more focused on the fulfillment side, even if they have some components that are also on the earn module side. So obviously we see a very strong case in growing sort of the services offered by Premier Direct, where Premier Direct today on quite a lot of clients and customers, they work with partners that give the services to the customers that we can do from Awardit. So obviously we want to be the ones providing these services in the future. And that we can do either by taking what we have, our systems, our know-how from the existing business and adopt that to the German market and providing that to the Premier Direct customers and to others, of course, and grow organically with our systems that we have. Or we could potentially look at acquisitions to acquire these kind of businesses in the German or DACH region that we can then add to the Premier Direct business, which would be perhaps a faster way into the market. But that would need an acquisition, of course, of those kind of partners. But in Germany, the market, in Germany and DACH, the market is quite fragmented. So we have a number of players. We have fulfillment players in the same size of Premier Direct as well. We also have technical suppliers that are in the same size of Premier Direct or smaller. So we don't have the same kind of full scope supplier as we have here with us in the Nordics. So we believe we have a very strong possibility to add that to the German market, either through our organic growth with our systems into the market, adding know-how and scope to Premier, or by acquisitions.
Great, sounds good. And I guess that you believe that you have technical expertise that triumph those competitors in Germany. Otherwise, you wouldn't bring your own platform overseas. Is that true too?
So I believe we have a strong technical expertise and strong proprietary platforms in our ownership. So I mean, using them would be one possible way for sure. And then I think, of course, it would be a longer runway into customer cases compared to maybe acquiring a business that has existing integrations with customers. But it's just two different ways of really approaching the market. But no matter what, our strength lies in supplying full scope loyalty programs and gift card programs. So we don't see that, growing Premier Direct in the existing model that it's using now, it's of course a focus that we have here and now. But to improve over time the margins of the business the level of recurring revenues from the business, we will need to add other aspects to it as well. So for sure, that's something that we are looking into and planning for the future.
Great. Thank you, Eric. I think that's all we had time for. And thank you as well, the audience. See you next time.
Thank you.
Hi, and welcome everyone for our next presentation, which will come from the company BTS. My name is Daniel Torsson, analyst at ABG here in Stockholm, covering the company. And with us today, we have the company's CEO, Jessica Skon. So I let you present the company for some 15 to 20 minutes, Jessica, and then I will follow up with a few questions in the end. So feel free to start off.
Okay, wonderful. Thanks for having me, and hopefully it's a nice day in Stockholm. I can tell you it is a very sunny day in San Francisco, California this morning. So just to introduce myself, I'm the new CEO of BTS last week, and I'm following Henrik Ekelund, who is now the chairman of the board after 36 years of being our founder and CEO. So please, I'll just hit next when you can click to the next slide for me. That would be great. I realize some of you listening may be new to BTS, so I'll do a little bit of an introduction. Our focus for the last 35 plus years has been on the strategy implementation side of our clients. So how do you get every person in a company excited, inspired, aligned on the strategy and help them to do the best work of their lives? If you think about it from a change perspective, you can think about process, technology, and people. BTS has been focused on the people side of change for the last 35 years. Next. This slide just has some kind of statistics on the results of our growth over our time. You can see we currently have about 1,100, close to 1,200 people. 50 of the Fortune 100 companies in the US are our clients. We were founded in 1986. Our rolling 12 months is 2 billion Swedish kronor in revenue. We have 36 offices worldwide. So, and go ahead and hit next. You can see our global footprint in terms of where the 36 offices are. We manage the business in terms of 3 operating units: North America, which is a little over 50%, most of the world, and Europe. Next. And for our investors who have been with us since we IPO'd in 2001, you can see the average performance per year on this slide, which is a pretty impressive run rate. So on average, we've grown 13%. Mainly organic every year. Our profit has grown 17% on average per year. And if you invested in 2001, the average shareholder returns is actually 18%, which I think very few companies have done. Next. So just a little bit now in terms of our market and offering, go ahead and go to the next slide. In terms of our position, a client sets a strategy or works on a strategy. They typically use one of the big 4 as their strategy consulting partners. And then again, BTS is involved from step 2 from that moment forward in terms of getting everybody in the company to execute on that strategy in terms of making it personal for them and helping them lead teams differently, do work differently, and strengthening the culture at the same time. It's really fun at BTS. We're able to take share not only against the big 4, but we also compete in the HR talent space and with the traditional tech ed companies as well. Next. You can see on the left-hand side here what we call our different practice areas. We've added an 8th one as well, which is diversity, equity, and inclusion, as we're helping our clients not only have a more diverse workplace, but a culture that's more inclusive and equitable so that everybody in their company is free to be themselves and do their best work. But this is really about increasing share of wallet, right? Both in terms of the number of different budgets and buyers we're able to focus on in our clients' companies. So, for example, we have really competitive offerings aimed at chief talent and chief learning officers. We have competitive services and offerings for chief revenue officers on the go-to-market side. And then I would call it more like the transformation strategy office and the BU presidents as well. And what we typically do is pull services across these areas in terms of kind of multi-year deals, increasing the average deal size of our client partnerships. Next. And what's happened over time as we've grown is we're starting to feel the benefits of our size, right, of a scalable business model. So we've gotten increasingly good at platforms, simulation platforms, learning platforms, experiential platforms. Our advisory services are more platform-based and so forth, which drives productivity gains for the firm. We also, in addition to the 1,200 full-time BTSers around the world, have close to 500 external contractors as well, which gives us a bit more of a flexible talent market depending on the mix of client services and, frankly, the strength of the economy. We have a wide content and tool library now, which our clients are starting to use for at-scale initiatives. And on average, our customer life spans 7 years, if not more. So we have very high loyalty of our existing client base. Next, we can go ahead and click again to the next one. So just in terms of quick financials, and maybe you've already seen this if you've been following us, but Q1 was another record quarter. In fact, it was 19 record quarters in a row, not including 2020, in which it was very difficult to run our business per normal. And you can see that out of the record growth, 21% of that was organic growth, currency adjusted, and then 3% came from the Netmind acquisition in most of the world. Our EBITDA is growing 36%, mainly due to positive effect of currencies. One other note on there, if you look at the second bullet, the majority of our client services and work continue to be virtual, although we're seeing an increase in in-person work. I would say in Q1, it was about 10% of the total revenue, and it continues to climb. So next. I think maybe the point of this slide, other than what I've said before, is just to illustrate the exceptionally strong growth of Q1 in 2022, which you see here in pink. Next. I mentioned the 3 different operating units. You can see it broken down here in terms of North America having 18% growth in Q1 and an EBITDA margin going from 14 to 15.3%. BTS Europe, also very nice improvement in profit from 8.1 to 11.9 and 22% growth. And BTS other markets at 40% growth or 25% growth, although 15% of that's coming from the Netmind acquisition. Thank you. So why have we been growing year after year? I think these are the 4 main points. First one is, as I mentioned, we operate against different competitive sets, and in each one of those, it's a global, growing, and fragmented market. Our clients are experiencing, as you all know, probably more change, and change is kind of the new normal than ever before, and they're also increasing their investments in people engagement, people retention, and kind of the people side of the business. So both of those bode really well for BTS. On the stronger competitive position, our approach is fresh. It's a people-centric approach to consulting. It's a strategy-centric approach to training and development. In a way, we have a better mousetrap that our clients value. We continue to invest in acquisitions, and I can show you a little bit more on that in the next slide. And then investing in organic growth. Every year, we're continuing to increase. In fact, we've significantly increased our investment on our digital teams in marketing and sales. And on talent, in general, we have better retention than traditional professional services and consulting, where people like to work here. Next slide, if you just double click on the acquisition slide. Maybe next. Oh yeah, there you go. Perfect. Thank you. In general, we expect and we target 1 to 2 acquisitions a year, but it really depends on, finding one that has the right fit, both in terms of culture and talent. And in general, these acquisitions increase our service offering in terms of the capabilities we can bring to our clients. And we focus on small to mid-size businesses as our acquisition target. So next, I'm really proud of how we led and handled the pandemic. We are absolutely in a stronger position because of it. We have a pretty balanced portfolio across industries, but early in 2020, we decided to double down on pharma, bio, CPG, healthcare, and tech and software. All 4 of those played out really well for us. We did not do any economic layoffs. So by retaining our talent, having a long-term view, and actually investing in them helps us come out in a really much stronger position. And then in early 2020, we were facing a reality that we're potentially 65% of our revenues were at risk because of the shift to virtual. We significantly outperformed our worst fears. And today, now our clients have total consumption choice. So we're comfortable doing all of our services virtually and or in person. And in terms of our kind of future goals and financial targets, if you could hit the next slide, please. These are our longer term kind of focus and targets. We're on a journey to getting there. Last year, we hit 15%. We raised our longer term goal to 17% EBITDA margin. We're not being clear on when we think we'll hit it, but that's the journey that we're on. And then in terms of the 20% revenue growth, you know, about 2/3 of that should be organic, with the rest coming from acquisitions. Next. And just as a summary, we see significant market potential going forward as we reflect and listen to the investors who have been our long-term investors, and we ask them, why do they continue to believe in BTS and invest? It basically comes down to these three things. So we are in a really strong position in a global, growing, and highly fragmented market. We have probably less than 1% market share currently. We have a long track record of double-digit growth and stable margins, strong operating leaders across the business. And even in this moment of strength and position, we're increasing in the level of ambition on our longer-term financial goals. And then finally, the next slide, just to repeat our last earnings call, our outlook for 2022 remains unchanged, and we expect that our earnings will be better than 2021. So trying to keep us on time, I think I'll stop there.
Excellent, Jessica. Thank you very much for that. I have a couple of questions. You touched upon it a little bit here, the physical versus the virtual delivery. Obviously, before the pandemic, the physical was a vast majority of what you were actually doing and conducting here. And then the virtual took over. You mentioned 10% physical delivery in Q1. Where do you see the company being and the delivery being in 2 to 3 years' time? And how can that ultimately affect the margins and the profitability?
Yeah, I think it's going to stay a mix. Right. And it's interesting to reflect on what our clients are bringing people together in person for. And it's honestly, quite a range. It's a range from the small executive team C-suite working sessions to bringing people together again for sales kickoffs and getting everyone aligned to a new sales methodology, for example. So I think it's going to stay a mix. And frankly, our people really love the physical again, and I think they'll value having a mix. The other thing that's changing for us, it's shifted the last couple of years and seems to continuing to grow in demand, is how much work we're doing at scale for our clients. So 30,000 people over 9 months, 17,000 leaders practicing something at the same time for a few months. And the impact of the scaled work is clearly just more digital services, more licensing typically associated with that. So our ability to automate some of how those projects get executed and to continuously improve that, combined with the increased licensing from our clients, bodes well for margin improvement over time.
And the costs associated with the physical delivery, like traveling, hotels, etc., that's something that the customer pays for, so it shouldn't affect the margins meaningfully if you start travel much more now?
That's exactly right. Yeah.
Excellent.
And it provides our people to have a bit more focus, as opposed to spreading out the work over multiple weeks.
I see. And then the competition question here. You mentioned the EdTech companies, the pure licensing software businesses. Where do you see them right now after the pandemic? Have they gained ground in the market? Is it something you are afraid about or that you respect here?
First of all, I respect them. Secondly, I think we should keep watching and listening and learning and all of that. But there's something that in their nature is different than BTS. And their business model and their valuations are pretty much dominating their design so that it's a standard offering for their clients, right? Like a giant library of services that are standard and you consume what you're interested in. Our clients typically value contextualized or highly curated or practical help for their people, right? Practical so that it's what they need given their strategy or what they need given how they need to shift their culture, or what does high performance look like in a critical role or in a workflow or a change that they're trying to drive. So I think there's a lot to learn in terms of elegant user experience and dashboards and data-driven insights. And we're working on all of that as well and making a lot of fast ground. But we're also taking share from them when clients value the more practical, contextual, kind of what you need just in the moment of need, curated for them. So, and that's, I think, the inherent difference between the technology-first offerings and a more consulting-based offering.
Yeah. And BTS in the future, will that have a larger share of revenues coming from pure licenses and software part of the delivery than today? How should we think about that?
Yeah, I believe so.
Makes sense. And then also on the macro environment here, companies are changing obviously very fast in the current environment. They are losing people to a larger extent than in the pandemic. Is that something that drive demand for your services, or do you also have a negative component from lower GDP growth, etc.? How should we think about the current environment?
Yeah, I mean, I think both of your points are valid. On the one hand, we have seen an increased spend and appetite for services that will help our clients retain their talent, right? Whether that means making them feel more a part of the company or a part of the strategy, or feeling like they're doing their better work, or having a social component. So yes, we're seeing increased demand there, increasing spend for our services because of that. We haven't seen evidence yet of the hype in the market right now around potential recession impacting our deal flow. So I think it's still the first, which is our reality currently.
I see. And also, you said that 2/3 of the growth target should come from organic initiatives, which is obviously a lot based on growing number of employees because you are a management consulting firm. So how are you positioned in the recruitment market? Is it difficult now to keep people and to recruit new people? How is that looking right now?
So it is a tighter talent market, and we're positioned really well. We continue to get feedback, specifically in North America, which is the market that I've grown up in and know more well, and I'm quickly spending more time in Europe and most of the world. But the feedback I get from the candidates who go through our process here is it's second to none. They sense how different we are from traditional consulting. So I think our recruitment process and the brand is strong and getting stronger and stronger. It's becoming easier for us to take consultants from the traditional firms, which would be really helpful in terms of a big talent pool to go after as we scale. Having said that, yeah, it's a tougher talent market than it was 3 years ago for sure. But the percentage of acceptance rates is still in the high 90s, and our retention it's gotten a little bit worse, but it's still better than the competition.
Excellent, that makes sense. Geographically, you're very much tilted to North America, and that has been performing very well in Q1 and also in the years before that. How about the rest of the world? What are the trends you're seeing in Europe, and also what you classify other markets? How are those developing at the moment?
Well.
Across the board?
Yeah. Yeah.
Excellent. And also, do you have any competitive advantage to have a global presence when you are delivering to a large company? Because your target customer group is the 2,000 largest companies in the world. How does it differentiate you from competition here?
100%, right? It differentiates because of the fragmented nature of our market. Most of our competitors are smaller than us, other than the big four and maybe one big HR-based search talent company. And so it is an absolute differentiator to have the global locations that we have. And something that our clients experience pretty quickly with us is how consistent the culture is and the global teamwork amongst the BTSers. It's really amazing. BTSers really care about each other. We like each other. And there's tremendous trust in terms of if a deal is sold in Singapore and they need help executing it in North America, people jump in and get the work done. So it is a huge advantage for us to have the global positions plus the global teamwork and the culture that we have.
Okay, interesting. My final question before we're running out of time here relates to M&A. You showed a picture where you're trying to do 1 to 2 acquisitions a year. How should we think about that in the future? Will you continue to do what you have been doing in the past? And also secondly, how are you going to finance the acquisitions? You have historically paid very little with shares, which means that the incentives from the sellers may not be that tied to the company. So how do you retain the employees that you actually acquire, because it's still people's business?
Yeah, actually, I think we have a pretty incredible track record of retaining the talent that have come in through the acquisitions, both the founders and the senior leaders underneath the founders. And the reason why they stay is because a core element of our culture is highly entrepreneurial and freedom-based. Right, so they join the company, and we still respect their leadership and their fingertip feel for what's best for their talent and their people, while we make them feel part of the bigger company and integrate them. So I think that's a secret sauce of our integration efforts. Yes, our intention is to continue to make acquisitions. To your point around incentives, we have a competitive kind of bonus structure that gets applied over time to the acquired leaders as well. So I think that's been helpful. And yes, we'll continue to look for acquisitions. We don't force ourselves to make, let's say, 2 a year. We just stay very open-minded based on what's available in the market and who we're meeting and what hits our radar. But I will say that I'm in talks now with potential companies, and they get a sense of our culture quickly, and then we become first choice for them. It's more a matter of if it makes sense from our perspective.
Excellent. That was my final question. So thank you very much for the time and the presentation, Jessica. And thank you for all the people that listen in to us.
All right, my pleasure. Thank you.
Thank you. Bye.
Hi and welcome to the last presentation at ABG's Investor Days seminar. My name is Christer Lind, I'm Head of Research, and as last company we have Charge and Anders Bergtoft that will present the company. Very interesting. And well, the floor is yours, Anders.
Thank you very much. Hello, everybody. I will start by talking a little bit about Charge. So what is Charge? We're a Swedish company and we're a pure play EV charging solution provider. And what does that mean then? So we actually provide premium sustainable charging solutions with superior user experience. So we do both the charging stations, as you can see there on the left. To our main products is the Charge Halo and the Charge Aura. We also do the cloud platform and all the applications around it to monitor and manage one single installation or a large installation with many chargers. We do also all the different accessories and cables, etc., needed to run such an installation. We have a 10-year track record as a company, and we do smart connected chargers that are with really a premium design. All our products are made in sustainable recycled aluminum, and that's also one of the key aspects that differs maybe our products from competition. Our products, they focus on the 3 use cases for AC, that's home, work and destination. Also, if you know a little bit about the EV industry, it's a market that really grows a lot and has high growth not only now but for many years to come. We have an asset-light and scalable business model, and you could say that during the last couple of years we have grown a lot. So it was the second year in a row with more than 140+% growth. So last year we grew 145%, and we sold for nearly 250 million SEK, so 254 million SEK. That took us to the number 2 position here in Sweden, and we are the company that also grows the fastest. We have a strong gross margin with 42%, and today roughly 24% of our sales is to distributors that are based outside of Sweden. We have sold our products into roughly 15 markets, all the way from Australia, but our main focus is actually on Europe, and that's where our main business plan is based on growth in Europe. If you look at the market as such, it grows quite a lot. So in the coming years, we will see that in 2025, it will roughly be 4.7 billion euros, and it consists of both 3.4 billion in hardware, but also another 1.3 billion in software and technical operations. So we really see a future also coming from software and support and service revenue. Today, most of our revenue comes from hardware, and that's where we see the big growth is coming from. If we look at the runner-up position that we have in Sweden, we are closing in on the number 1, which is Garo, also listed here in Stockholm. And last year they lost 2% market share according to a market study done by ADL. We grow 8%, and another company called CTEC, also listed here in Stockholm, they grew 2%. So all in all, we are the brand that really takes market share. If you look at the clear differentiators between us and our competitors, I think one of them is, of course, that we are a pure play EV charging provider. So we think and breed chargers 24/7, and we have done that since 2012 when we actually started as a company. We do premium products, really high quality. We talked about the recycled aluminum, but it's also in the way we design and also produce these products. So we make them here in Sweden, and we are proud of that. We also focus on the most, the largest, I could say, AC use cases, so home, office, and destination charging. We also have a scalable and distribution-based business model. And we also have a very strong R&D focus, so we try to really go far in technology leadership, and also we have a software heritage from really when we started. We were early out with both, of course, doing the hardware, but also doing the cloud platforms and the apps to run these chargers. If you look at competition and compared to the other two main Swedish competitors, you find some of the differences here listed between us and competition. And I think what really sticks out, of course, is the difference in how we design our products, the technology leadership. We also have the products that we have, they are vehicle-to-grid ready. So when vehicle-to-grid is really launched from the car manufacturers, we can add those functionalities to our products as well. Price-wise, you could say we are in the medium range. And as I said there, we have a strong focus also on R&D. So all in all, that takes us to a very strong position as such. If you then take a little look also on the software side, we have a number of things coming out, of course, from a hardware perspective. But from the software side, we have also a new installation app coming out that will really help the installers to install the products even quicker. So that will reduce time for them and also save costs, of course, for the future. We also have things like smartwatch functionality so that you can actually manage your charger and make it very easy for you to check how the charging is progressing on your smartwatch. We also have green charging. Smart charging is, of course, something that is really important. You should charge your car when the electricity is available and when it is as low priced as possible. But when you connect it with solar panels, etc., then of course you would like to also charge during daytime, etc. And we have a new functionality for that as well coming out now in Q2. Then if we take a little bit also look at the financial track record of the company. As I said there, we have grown considerably during the last couple of years, and already from 2020 to 2021, we grew 142% and then 145%. And if we look now for the rolling 12 Q1 last 12 months, then we can see that we have 98% growth in net sales. Also, if you look at the Q1 figures, we sold for 67 million SEK, and we had another 16 million on top of that, but it was invoiced quite late in the month, and it didn't reach our customer until the first week of April. So that will actually come in the Q2 figures. But all in all, then we would have had 65% growth as well in Q2. If you look at the growth that I talked about, and if we compare to our other peers here in Sweden that are listed, CTEK and Garo, you can see that we outperformed them on the growth quite a lot actually. So 145% for us. Last year, CTEK had 92% and Garo had 52%. So that's our track record in that sense. If you look at the gross margin, then we have also a strong margin. I talked on the first slide there around 42%. You can see that it has been consistently going up since 2019, 2020, and now last Q1 22, last 12 months, it's been just around 42%. And if you look in the actual Q1, it was 42.1%. So all in all, we have managed to keep it high, regardless that today's situation with the higher freight costs, etc. But it has really helped us to keep it up. As I said, that we make all our products also in Sweden. The components, of course, come from different countries, but we are really proud of making the products here. We have two facilities, one in 1 hour north of Stockholm in Norrtälje and another one in Torsby. And we don't produce our products ourselves, but we do that through our contract manufacturer, which is then Note. They're also listed on the Swedish stock market. If you look at the OpEx situation, we have basically raised money now also in Q1 here, and we're basically investing in three things. One is, of course, technology leadership, so product development. We have quite an extensive hardware and software roadmap in the making. The second thing is then also the go-to-market. So we have also launching in a number of markets across Europe. So we are, of course, a leader here in Sweden, but we also have business now in the Nordic countries, as well as in the UK, in DACH, in Benelux, and also in Spain. We have people on the ground, and we have set up our businesses there. So you can see here that the EBITDA margin is in Q1 minus 23.9%. But the key thing here is, of course, that we are in investment phase right now. And if you look at OpEx over sales for the coming years, you will see that it will go down by 60%. And that's a big contributor, so it's really a matter of volumes. And as I said, that we have quite an extensive also roadmap in hardware and software, and we're actually launching another product also later this year, which we call A1. That will be quite revolutionary as such. So scale will help us, and also today we have quite a lot of consultants, so I foresee that the cost will go down over time and also be much more positive next year. We have also historically been, of course, EBITDA margin positive. We were that in 2020 last quarter, and then after that we started to do heavy investments in R&D and also building and scaling up the organization. If we look at the financial targets, sort of long term, we see that we have basically a target of organic net sales of more than 1.5 billion in 2025. We will also be EBIT margin positive next year, and we see that we will have an EBIT margin in 2025 around 15-20%. We don't intend to give out any dividends. We will keep all the money in the company to develop the business further, you could say. So all in all, no, there was no end slide there, but all in all, I think the whole company as such, I mean, we have some quite interesting things ahead of us, and we are basically focusing on a number of segments that are really important. So if you can charge your car at home, or if you can charge your car at work, then of course AC charging that will be your bulk of the business. That's the space that we are in, and we are also we have really a premium quality in our design of our products, but also how we design and the material that we use. So we see the recycled aluminum for our existing range. It will also be bioplastic in the future range that we're coming out with as well. So sustainability is something that really comes as part of our DNA, you could say. So that, I think, is the last slide, because I thought I had another slide, but I didn't.
Instead, we can have some Q&A.
Yes, for sure.
Also very interesting. So you mentioned a bit about your product. You mentioned you see it as a premium product. But could you maybe tell what are the key reason why you are winning market shares?
Well, I think it's those simple things, of course, that the end customers, they love our products. The installers like the products as well, because it's easy to install and we have very high quality, so they don't need to change them out because they're not working or so. Also the distributors, because we don't sell direct, we sell through distributors. They are very keen also on liking our products. They can make a good margin on them. So all in all, we managed to grow our business considerably. If you look at the distribution channels that we use here in Sweden and also abroad, then it's the electrical wholesalers that really drives the largest volumes. And we have all the distributors here in Sweden that are selling our products. The two largest one, Sonepar and Rexel. They are global brands, and we actually signed a global agreement with Rexel just the other week here. We will send out a press release later this week here on this. That really takes us to another level. So now we can start working with them across all markets, basically in Europe.
And regarding that, what do you think are the key challenges of working with distributors as Sonepar and Rexel?
I don't see it as a challenge, actually. I see it as a benefit because we don't sell direct, so we sell through distributors. That scales quite a lot. The sale is a little bit slower in the start. You need to train the channel, etc. But then when it takes off, it goes quite quickly, just as we have seen here in Sweden. And that's also, I think, why we take market share. So really, you need to work closely with the distributors so that they sort of love you, and you need to be really, give them great support. And the products that really also need to be good, because if they are good, they feel comfortable selling your products to the installers and to the end customers.
And on that, we talked a bit of the software. It's not the core of your product today, but you work a lot with the software development and becoming more and more, I guess, an important part of the total package. Can you tell a bit more about software in general?
So I would say like this. So a charger is actually, it's a charger, but it's also a lot about the software and the cloud platform and the apps that are connected. So today we have a charge point management system to control the chargers. We have the apps to control it from an end user perspective. And today, we sort of offer that free of charge together with the charger. I see long term that we will start to charge also for the cloud platform for different type of customer segments like housing associations or corporate customers or charge point operators using our platform. We have produced more than 104,000 charging points actually to date. So I think in the future we will also see more revenue coming in from the software side. But we have a very good and stable cloud management platform today.
If you address the more short-term issues we have seen on the news, like supply chain issues, and some of your competitors have mentioned that also, how do you handle the current situation?
So we, as I said there, we don't produce the products ourselves, so we do that through the contract manufacturer Note. And together with them, we have like an 18 to 24 month forecast. So we are already nearly 2 years out in terms of securing the components that we need to follow our business plan. So we've been early in doing that. So we have managed to, during last year, both grow our business with 145%. We also managed to build up a stock. So I basically have 2 to 3 months of sales already in stock today. So that's really a tight collaboration with Note. Also, this tight collaboration have actually resulted in that we are one of their largest customer, which I think also is very important. So it's really the long-term focus. We see that in the existing product range that we have, I don't see any huge problems with the components. In our new line, there we have still a few components that are hard to get, but we're working very hard together with Note to secure those volumes so that we can start building the products later this year. So it's really hard work.
I understand that. If you go a bit, you mentioned a bit about your market share in different markets and the rollout strategy. Can you give us a bit more flavor on that? How big do you want to become?
Yeah, no.
And where do you start?
Yeah, so how big do you want to become? But we're number 2 now in the Swedish market, which is great, of course. Our ambition is to be number 1. So as I showed there, we're growing faster. The number 1 today is Garo, of course, and my intention is to be ahead of them by end of next year, and I think that is possible for us to do. And then if you look, we have started entities now across the Nordic different markets. So we have people on the ground. We have signing up distribution agreements with the local distributors, both the global ones like Sonepar and Rexel, but also the local ones in each market. So that's sort of our home market. Then we have, of course, where I see the larger volumes coming from in the future. That is, of course, the Benelux region, DACH, so Germany, Austria, and Switzerland, UK and Ireland, and also Spain and Portugal. So we already have people on the ground there. We're working on that and participating in fairs, training up installers, etc. So really, it's the European market that we are focusing on now. It's big enough, you could say, to start with. But we also see interest, of course, from other markets outside of Europe. But we've said today, let's focus on Europe, and that's what we're doing.
Yeah. You mentioned A1 as the new product.
Yes.
I don't know if that will be the name in the future, but you mentioned that it's a bit revolutionary. You about the launch. Maybe you can give details, but why is that such an important next step for you?
Yeah, we call it A1 now. When we launch it, we will call it something else, a little bit more sexy than A1, but it's the prototype name. So what it is quite a revolutionary charger. So what we have done is that we have really prepared it for both automated production, so we can build it together with Note much quicker, with even higher quality. So that, of course, will make for a better margin for us. Also, the product as such is actually fully recyclable. So after end of life, it can be dismantled and then fully recycled. We also have what I should call maybe what do I call it? I call it a module concept. That's what I call it. So you can add hardware modules to it as well. So next thing in the auto industry is the vehicle to grid. So when you can not only charge the battery of your car, but you can also take electricity from the car. So then instead of buying a new charger, you can just slot in the vehicle to grid module as one thing. Or next thing is also home automation. How do you connect different things? Everything from solar panels to different things. Then, of course, a smart charger is very important. So it's a well-designed product. We have also we have a Linux-based software code in there. So it's really a state-of-the-art, high-end premium charger that we think a lot about for our European markets.
And when will that be?
It will be out later this year. That's what I say now. So I have samples at the office, and we can charge on it in our garage. But we will start after summer to start up production and make sure everything works. And then over time, later this year, we will launch it more publicly.
Yeah. Regarding cost inflation, which we have seen in general, how have you handled that in order to keep your gross margin above 40%? Have you raised prices on your products, or?
We have actually not. We are increasing the prices a little bit now, but we have managed to. Of course, we have increased prices in freight and stuff like that. But the beauty with this business is that you can actually increase the prices twice per year towards your distributors. And there are a lot of different things that you can play around with, not only the price, but it's volume rebates, it's kickbacks, yearly bonuses, etc. So all in all, you can tweak this a little bit so that you can keep the margin at the level where you want to have it. But this is something that we work hard with, and so far it has worked well, and I see that also going forward. So.
Thank you, Anders. I think we had received a lot of good answers on my questions here. So looking forward to see more of you in the future and the company. So thank you, Anders.
Thank you very much. Thank you. Bye-bye.